Everyone, good morning, good afternoon, good evening. ऑल ऑफ यू वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। फिलहाल के लिए देखोगे क्रूड ऑयल नेचुरल गैस दोनों ही गैप अप ओपन हुए थे। क्रूड ऑयल तो परसों सपोर्ट पे ही था, वहाँ से थोड़ी बहुत बाइंग आई थी तो एक अच्छा गैप अप हो गया वहाँ से। कोई अगर ओवरनाइट ले गया था तो मोमेंटम आ चुका है ऑलरेडी। नेचुरल गैस थोड़ा सा गैप अप हुआ है, लेट्स सी कोई ट्रेड बनता है तो 12:30 अभी लंदन सेशन ओपनिंग रहेगी एंड कोई डेटा नहीं है आज। कोई न्यूज आती है तो वी विल सी दैट एज वेल। 5:30 न्यूयॉर्क सेशन, 7 p.m. यूएस मार्केट ओपनिंग। सो दिस इज द सिनेरियो एंड कोई और न्यूज़ रहेगी तो देखेंगे, अगर कुछ टैरिफ वगैरह लगते हैं इंडिया पे और। बट अभी फिलहाल के लिए ऐसा कुछ नहीं है। ट्रेड बनता है तो देखते हैं, अभी कुछ नहीं है। इंडियन मार्केट भी देखोगे तो मॉर्निंग पे निफ्टी और बैंक निफ्टी फ्यूचर दोनों ही ऑलमोस्ट फ्लैट ही ओपन हुए थे। मैं फ्यूचर की बात कर रहा हूँ। एंड उसके बाद रेंज के अंदर ही है। 15 मिनट में कोई बहुत बड़ा मोमेंटम हुआ नहीं है काफ़ी देर से, चाहे वो निफ्टी हो या फिर बैंक निफ्टी हो, तो रेंज बाउंड ही है। लेट्स सी कुछ मोमेंटम सेकंड हाफ में आ गया तो। फर्स्ट हाफ तो साइडवेज ही गया है पूरा। बाकी इस वीक आई थिंक यूएस का इन्फ्लेशन का डेटा आने वाला है तो मार्केट वॉच करेगा इसको। बहुत इंपॉर्टेंट डेटा है। यूएस में इन्फ्लेशन कितनी रहती है, ज़्यादा रहती है, कम रहती है, तो थर्सडे को यूएस सीपीआई, कोर सीपीआई दोनों ही डेटा हैं। अनएम्प्लॉयमेंट क्लेम्स कितना है उसके साथ साथ। तो बहुत इंपॉर्टेंट डेटा है तीनों के तीनों। तो इसकी वजह से हो सकता है मार्केट थोड़ा कॉशियस रहे इस वीक। बाकी और कोई न्यूज़ रहेगी तो वी विल सी दैट। मंडे आज कोई डेटा नहीं है, ध्यान रखना। शेड्यूल डेटा नहीं है। सेक्टर लॉन्ग टर्म शेयर सजेस्ट नहीं, मैं ऐसे कोई भी शेयर सजेस्ट नहीं करता। बाकी मैंने जितना कल एनालिसिस किया था दो तीन स्टॉक्स का, इवन मैंने रिलायंस को देखा कल काफ़ी डीपली। आईसीआईसीआई बैंक को मैंने देखा। तो जिस तरह से उनका चार्ट चल रहा है ना पिछले कोविड के बाद से, मैक्सिमम जो करेक्शन आए भी हैं पिछले 5 सालों में, कोविड और उसके बाद, दैट इज ऑलमोस्ट 10%। बस उससे 10 या 11-12%, उससे ज़्यादा मिले ही नहीं है करेक्शन। तो एक लॉन्ग करेक्शन पेंडिंग है, पता नहीं इस साल आएगा या अगले साल आएगा। बट नॉर्मली कोई भी स्टॉक है वो एक करेक्शन देता तो है एक साइकिल के बीच में, और साइकिल वो नॉर्मली 6-7 साल की रहती है। कभी 9 साल की भी होती है, बट नॉर्मली 6 ईयर ±1 ईयर कर सकते हैं, एक साइकिल रहती है। तो जितने भी बड़े स्टॉक्स हैं, हैवी वेट्स कह सकते हो, उनमें करेक्शन काफ़ी टाइम से नहीं आया। तो लेट्स सी इस साल या अगले साल करेक्शन अगर मिलता है ओवरऑल मार्केट में। और वो करेक्शन में कोई 10-15% की बात नहीं कर रहा हूँ। आई एम टॉकिंग अबाउट 30% एटलीस्ट। ±5% ऊपर नीचे हो सकता है। बट इतना करेक्शन आना एक मार्केट में पेंडिंग है। बड़े स्टॉक्स की मैं बात कर रहा हूँ, पेनी स्टॉक्स की बात नहीं कर रहा। तो लेट्स होप कब आता है। बाकी आईटी सेक्टर देख रहे हो तो वी विल सजेस्ट कुछ दिन वेट कर लो। अगर टैरिफ लग गए इंडिया पे आईटी सेक्टर्स की कंपनीज पे तो तब मौका मिलेगा। अभी तो खैर मुझे नहीं लगता दिस इज अ राइट टाइम, अनटिल अनलेस इंडिया और यूएस के बीच में जो टैरिफ वॉर चल रही है ख़त्म नहीं हो जाती। तब तक इन्वेस्ट करना बहुत रिस्की है। तो मेरे अकॉर्डिंग कॉशियस होते हुए चलो। लॉन्ग टर्म इन्वेस्टमेंट का टाइम अभी मेरे अकॉर्डिंग तो नहीं है कहीं से भी। हो सकता है रैली आ जाए 5-10% की, अलग बात है। बट आई एम एक्सपेक्टिंग अ करेक्शन, हैवी करेक्शन दिस ईयर और नेक्स्ट ईयर। लेट्स सी आता है या फिर नहीं। क्रूड ऑयल में भी थोड़ा बहुत वॉल्यूम तो जनरेट हुआ है। हम्म, इसको एक बार देख लेते हैं। ठीक है, क्रूड ऑयल में देखते हैं कुछ अगर। हाँ, यहाँ पर एक, क्योंकि नीचे यहाँ परसों से बताया था मैंने सपोर्ट है, वो दूसरा एग्जैक्ट सपोर्ट, वहाँ से थोड़ी बहुत बाइंग आई थी, फॉरेक्स में थोड़ा बहुत ऊपर चला गया था, तो अल्टीमेटली गैप अप इसलिए ओपन हुआ है। एक काफ़ी अच्छा सपोर्ट था, मैंने उस दिन बताया था आपको 15 मिनट में, काफ़ी अच्छा मोमेंटम भी कर चुका है 140 पॉइंट का ऑलरेडी। तो ओवरनाइट को ले गया था तो उसको अच्छा प्रॉफिट हुआ होगा। फिर से फ्रेश ट्रेड के लिए थोड़ा सा वेट करना पड़ेगा। क्रूड ऑयल, इसको देख लेते हैं, ये है आई थिंक। नहीं, ये तो नहीं है। बाकी कोई क्वेश्चन होगा तो कमेंट बॉक्स में पूछ सकते हो। एरिया जहाँ पर पॉसिबिलिटी है, ओवर हियर। रिटेस्ट पे। पर एक रिटेस्ट तो है क्रूड ऑयल में। बट ये रिटेस्ट के ऊपर भी एक रेजिस्टेंस जोन भी है, अगर रेजिस्टेंस पे आके गिरता है तो बेटर रहेगा। रिटेस्ट पे। ठीक है, यहाँ पर एक छोटा सा रिटेस्ट जोन ये क्रूड ऑयल में 15 मिनट टाइम फ्रेम पर। इसके जस्ट ऊपर एक रेजिस्टेंस भी है एग्जैक्टली। ये तो मैं दोनों ही लगा देता हूँ, रीटेस्ट भी लगा देते हैं और रेजिस्टेंस भी लगा देते हैं। तो रीटेस्ट वैसे नॉर्मली रेजिस्टेंस पे होता तो बेटर था। बाकी सपोर्ट आपका वही जो कल परसों का लो था, ये रीटेस्ट जोन है। सपोर्ट नीचे ही है, पर का लो 5430 420 के अराउंड। इसके ऊपर एक रेजिस्टेंस जोन और है, वो भी मेंशन कर देता हूँ। यहाँ पर रीटेस्ट है, बाइंग का ट्रेड नहीं है। बाइंग ऑलरेडी परसों हो गई थी ना, वहाँ पे बताया था एक बाइंग का ट्रेड सपोर्ट एरिया पे। वहाँ से ऑलरेडी बाइंग आ गई है, ऑल नाइट ले गए थे तो वेल एंड गुड। अब यहाँ पर बाइंग नहीं होती। यहाँ पर एक रीटेस्ट है, यहाँ सेलिंग का देखते हैं, नहीं तो एग्जैक्ट थोड़ा सा ऊपर एक रेजिस्टेंस भी है, वहाँ से नहीं तो सेलिंग देखेंगे। दिस अ सेलिंग रीटेस्ट जोन। 30 होने वाला है, लंदन सेशन इज गोइंग टू ओपन, रिमेंबर। इसको होल्ड कर लेंगे, कोई इशू नहीं है। ओके, ठीक है। ये लेवल, ये जो कल जहाँ से बाइंग आई है लास्ट ट्रेडिंग सेशन में लोअर एंड पे 5430 420, वो भी बहुत बार टेस्ट हो चुका है लेवल। ऐसा नहीं कि पहली बार आया था वहाँ आज, मतलब आज इन द सेंस ऑफ लास्ट ट्रेडिंग सेशन पे। दैट लेवल इज आल्सो मल्टीपल टाइम टेस्टेड। अगर इस बार एक हायर हाई नहीं बना, और वो हायर हाई बहुत दूर है बिकॉज लास्ट टाइम जो हाई बना था दैट इज वो काफ़ी बड़ा एक हाई था। तो एक हायर टाइम फ्रेम पे देखोगे काफ़ी बड़ा हेड एंड शोल्डर जैसा पैटर्न दिख रहा है वहाँ पे। क्योंकि जब फर्स्ट टाइम लोअर एंड पे जो ये 5420 430 वाला लेवल है, वहाँ से बाइंग आई थी तो मार्केट ने एक हाई बनाया था 6590 के अराउंड। दूसरी बार बाइंग आई तो फिर एक लोअर हाई बनाया था प्राइस ने वहाँ पे 5840 का। फिर ये लास्ट टाइम हाई आई है, तो अगर इसको स्ट्रॉन्ग सपोर्ट में ही कन्वर्ट होना है तो 5820 830 के ऊपर सस्टेन करना पड़ेगा। अगर नहीं करता है तो ये आएगा यहाँ पर थर्ड टाइम, और एक ब्रेक डाउन होने के चांसेस काफ़ी ज़्यादा बढ़ जाएंगे लेवल पे। एम पैटर्न को हो या फिर आइडेंटिकल सपोर्ट मल्टीपल टाइम टेस्टेड। तो यहाँ पर एक छोटा सा सेलिंग का ट्रेड, बाइंग अब हम करेंगे नहीं नीचे वाले लेवल पे, बहुत रिस्की हो जाएगी। बीच में और कोई नया सपोर्ट बनेगा तो विल सी, बाकी एग्जैक्ट। तब वो याद रखना एक रेजिस्टेंस भी है, तो दोनों साथ ही हैं बने हुए हैं। अगर मैं चाहूँ तो वैसे एक बार देख लेते हैं, नहीं तो दोनों को एक साथ ही मार्क कर देता हूँ, सपोर्ट और रेजिस्टेंस, रीटेस्ट। लेवल थोड़ा सा बड़ा हो जाएगा, बट वो दो लेवल साथ साथ हैं, अलग अलग लगाऊंगा तो फिर सही नहीं रहेगा। 530, ठीक है 35 पॉइंट ही दिखा रहा है दोनों को मिला के। ये 25 पॉइंट ही है, 10 पॉइंट ही बढ़ेंगे ऊपर को, कोई सुनिए। ठीक है, तो इसमें दोनों ही इंक्लूड हो गए। एक रिटेस्ट भी है, एक रेजिस्टेंस भी है।
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
News when you want it with Bloomberg News Now. I'm Charlie Pellet. President Trump says Hamas needs to accept his terms to end its war with Israel. In a post on Truth Social, Trump said this is his last warning. His post came as Axios reported that Steve Witkoff, Trump's envoy to the Middle East, sent a new proposal last week to Hamas for a hostage and ceasefire deal through an Israeli peace activist. President Trump spoke to reporters at Joint Base Andrews after attending the U.S. Open in Arthur Ashe Stadium.
I think we're going to have a deal on Gaza very soon. It's a hell of a problem. It's a problem we want to solve for the Middle East, for Israel, for everybody. But it's a problem we're going to get done. So they have hostages. It could be a little bit less than 20 because they tend to die, right? They tend to die, even though they're young people largely. They're dying. Young people don't die.
President Trump speaking. Hamas said it needs, quote, a clear declaration and Israeli commitment to ending the war and a full troop withdrawal from the Gaza Strip to agree to peace talks. Treasury Secretary Scott Bessent says the U.S. and Europe are discussing a new round of sanctions and secondary tariffs on Russia, hoping that a Russian economic collapse will bring Vladimir Putin to peace talks with Ukraine.
President Trump, Vice President Vance had a very productive call with EU President Ursula von der Leyen on Friday. She followed up with a call with me, and we are talking about what can the two EU and the U.S. do together. And we are prepared to increase pressure on Russia, but we need our European partners to follow us.
Bessent made the comment in an interview on NBC's Meet the Press. Kevin Hassett, a top candidate for Federal Reserve chair, says the U.S. Central Bank put its independence and credibility in jeopardy by expanding beyond its mandate. He made the remark on CBS's Face the Nation.
Monetary policy, Federal Reserve monetary policy, needs to be fully independent of political influence.
Including from President Trump.
Including from President Trump. The fact is that we've looked at countries that have allowed the leaders to take over the central banks. And what tends to happen is that it's a recipe for inflation and misery for consumers.
New Delhi is proceeding with caution after President Trump appeared to soften his tone against India following weeks of tensions between the two nations, marked by the U.S.'s 50% tariffs on goods from the South Asian country. On Friday, President Trump said at the White House there was, quote, nothing to worry about with U.S.-India ties, and the two countries had a special relationship. Officials in New Delhi said they viewed Trump's comments as positive, but unlike in the past, Prime Minister Narendra Modi did not refer to the U.S. president as a friend. Wall Street spent the weekend digesting that Friday jobs report. Amy Hunter Glazer is senior VP at job placement firm Adecco USA, and she was asked about the job backdrop across the country.
The Southeast continues to pick up and will with ongoing, weather, and as the holiday season approaches, we still see travel and tourism and hospitality kicking up there. Healthcare still remains the name of the game and being white hot. We are seeing employers focus a little bit less on hiring itself and more on retention, absenteeism, and upskilling their current workforce.
Amy Hunter Glazer of Adecco. In sports, Carlos Alcaraz has won his second U.S. Open title, defeating Jannik Sinner in 4 sets. Here's Alcaraz speaking after winning the U.S. Open.
Well, I just have wanted to start with Jannik. It's unbelievable what you're doing during the whole season. Great level during every tournament you're playing.
Sunday's showdown represented the first time in tennis history that two men played each other in 3 consecutive slam finals within a single season. And Ariana Sabalenka repeated as women's U.S. champion with a straight sets victory over Amanda Anisimova. And that's news when you want it with Bloomberg News Now. I'm Charlie Pelletin. This is Bloomberg.
Brazil is holding a virtual meeting of BRICS leaders later on today, and on the agenda is President Trump's tariffs, but also a bid to rally other emerging markets nations to support multilateralism. Now, BRICS, of course, as we say, stands for Brazil, Russia, India, China, and South Africa. And the group accounts for about 40% of the global economy and roughly half of its population. It's doubled in size in 2024 to include the likes of Iran, UAE, Ethiopia, and Egypt. Indonesia as well was also admitted earlier this year.
Yeah, and what does a larger BRICS mean for the world? And also just to also insert there, BRICS and SCO and, do those two things certainly overlap. There's one now supersede the other. In any case, as far as BRICS is concerned, the addition of major fossil fuel producers may then give the bloc more scope to challenge the dollar's dominance when it comes to, transactions for oil, gas, switching to other currencies, certainly a concept referred to as de-dollarization. Now, Beijing is also trying to build an alternative world order to challenge U.S. hegemony, as a counter with a lot of fancy words here, to the G7. In fact, Chinese President Xi Jinping is slated to address the virtual meeting today.
Yeah, for more, let's bring in Duke Kunshan University's American President and Executive Vice Chancellor John Quelch joining us here and flying into Hong Kong just in time. John, it was great to have you here on the program. Obviously, we've been talking about, this is coming off of a very, pageantry that we saw in Beijing, whether it was this SEO, the military parade, and now we're continuing this momentum for BRICS. What are you expecting is going to be kind of the tone and message coming through this kind of virtual meeting?
It's interesting that President Lula has called the virtual meeting because, of course, he and Brazil were not in Tianjin and not in Shanghai, whereas Modi of India was in Tianjin, skipped Shanghai, skipped Beijing, the victory parade, but was in Tianjin for the SCO meeting. So I think there's a little bit of a sense that Brazil does not want to be left out of the equation. The SCO is very much a Belt and Road Initiative, Northern Hemisphere grouping, whereas, of course, BRICS includes Brazil and South Africa. And I think it's important for Brazil in particular to be reasserting itself and reasserting the agenda items that it considers important. So that's why I think they've called the call.
Economically, are you seeing stronger ties? Between China and the likes of Brazil, for example, in terms of the U.S. pushing these guys all together?
Certainly in terms of agricultural commodities, Brazil has been in a sense, a godsend to China, with soybean sales having pretty much collapsed out of the U.S. and Brazil taking up the slack. And I think that has been reciprocated in terms of the level of trade interaction and investment interaction we see between China and Brazil. But Brazil has to be quite careful here in terms of balancing its outreach to China, but at the same time keeping a good relationship as much as it can with the United States. Though, of course, we currently have the Bolsonaro trial about to begin in Brazil, and
that's touchy.
Washington has made a few moves against the judges associated with the Brazilian Supreme Court in terms of visa restrictions, and that has not gone over very well in Brasilia.
How much further can we see a deepening of ties then within the BRICS when of course we talk about the political divisions among the BRICS themselves?
Yes. So to the extent that President Trump and Washington tariff policy is kind of inflaming emotional reaction on the part of the BRICS nations and the global South in general, that of course is giving them something to collaboratively fight against. Yeah. On the other hand, as you correctly point out, there are very, very many differences of opinion and divisions among the BRICS nations. Take India and China, for example. Despite a sort of 5-minute rapprochement in Tianjin, there is a long-standing difficulty between India and China.
So is it just optics, you think? that, or do you think what we've seen in the last week or so is an inflection point in what China and Xi Jinping has wanted, is this shift in the global world order?
Well, I think President Xi and Beijing orchestrated the Tianjin event, the SCO event, as well as the 80th anniversary event extremely well. And so to say it's an inflection point, I don't think is true, because frankly, real politics and real economics are going to come into play here, and there's a balancing act going on in every capital city of every BRICS or affiliated nation at the moment, where they have to try and cope with the U.S. situation, the level of indecision and flip-flopping that we occasionally see, versus at the same time the new reality of China's increasing importance in the global economy. So how to balance those two forces is something that every leader of every significant global South country is wrestling with.
And they're business leaders, to your point. This eventually goes back to real economics, right? Businesses value predictability. I think at some point this morning we're getting the August trade numbers out of China. The reason I bring that up is I understand you were recently in one place in China that does specialize, Yiwu, which does specialize in making things basically for the world to purchase. And I remember covering that city, and it used to be known, I'm not sure if it still is, but you know, the Christmas capital of the world. That's where the gifts are mostly manufactured. What have you seen on the ground? Have businesses there shifted to BRICS, SCO, Belt and Road, whatever you want to call it, of course?
So Yiwu is totally different now from what you just described. It's way beyond Christmas ornaments. It's industrial products. It's robots. It's everything that you can imagine. Durable goods, consumables, trinkets, very small percentage now of the total throughput at Yiwu. Number two, around about 80,000 merchants in Yiwu, in the 7 trade centers that they have there. There are 10,000 foreign buyers resident in Yiwu, apart from 600,000 foreign visitors a year coming in.
Wow.
I talked to 6 or 7 merchants in Yiwu, small store owners in the marts, and what they told me was, as far as the U.S. is concerned, not really having much of an effect, the tariffs not having much of an effect on them, because, you know, a couple of years ago, these very agile merchants already pivoted to BRI, Belt and Road Initiative countries, Global South, other markets. And so the highest percentage that I could uncover among any of the merchants in terms of U.S. sales out of their particular operation was 10% still going to the U.S. And this was from a store which is essentially selling high-end product to higher-end product to the likes of Target and Disney.
I was going to get your take on what you're seeing in the higher education side of things.
Yeah.
Duke Kunshan, of course, this is a joint venture between Duke University and Wuhan. What have you been seeing in terms of student enrollments, and maybe international sort of student interest?
So our enrollments this semester were very, very high, higher than we expected. We had a over-enrollment maybe around about 20% among international students accepting our offers ahead of what we expected. And this we attribute to the fact that Global South applicants who might have applied to the U.S. universities as well as to us ended up coming to us because of visa uncertainties, post-graduation employment uncertainties in the U.S., and the general climate of perhaps a less than safe environment for foreign students in the U.S. university campuses.
Do you get a sense that that's simply for this year? Or is this an opportunity for the school to then be able to corner this part of the market that, you know, clearly has revisited this option and is now taking advantage of it?
Yeah, so obviously from our point of view, we're developing a truly international university. From our point of view, those students who have come to us this year are going to be the ambassadors for the next intake next year, and so we hope they'll all go back to their school counselors and their classmates 1 year behind and say this is a great option, you should come to Duke Kunshan.
गाइस 12:30 हो चुका है, लंदन सेशन ऑलरेडी ओपन, 12:30 की कैंडल भी क्लोज। ये क्रूड ऑयल के ट्रेड का ध्यान रखना, सेलिंग का जो ट्रेड है रीटेस्ट से, इट इज़ अ रीटेस्ट नॉट अ रेजिस्टेंस, सपोर्ट था ब्रेकडाउन हो गया तो रीटेस्ट की तरह काम कर रहा है। ऊपर एक रेजिस्टेंस भी था, दोनों को मैंने मिक्स कर दिया। बाकी नीचे कोई ऐसा सपोर्ट तो है नहीं, कोई नया सपोर्ट बनाएगा तो देखेंगे, अदरवाइज दिस इज द ओनली रेजिस्टेंस वी हैव राइट नाउ। टारगेट इस ब्लू कलर की लाइन तक रखेंगे, वापस ऊपर जाएगा तो वापस सेल कर सकते हैं अभी भी। अब ऊपर कोई रेजिस्टेंस नहीं है, रीटेस्ट ही है। लेट्स सी कोई नीचे नया सपोर्ट अगर क्रिएट कर देता है।
We could see a leadership election as early as October, according to local media. Here in April, of course, the Prime Minister resigning, preempting really a defeat that was expected in today's vote to hold an early election, really a rejection of his leadership. So who will become the next Prime Minister is a key issue right now. They will serve out the remaining 2 years in Ishiba's term. And of course, a lot on the agenda right now, including ongoing U.S. trade negotiations that Prime Minister Ishiba acknowledged is still not completely done. Take a listen.
This agreement was achieved based on the government and President Trump's administration. It is with regret that our administration cannot fulfill our responsibility.
And we're already seeing some reaction to the developments over the weekend on the Japanese currency. It's weakening towards that 148.5 handle, but it is pretty range bound, all things considered. And you got to wonder as well, does the U.S. jobs data
This is a story about walking a tightrope. India Prime Minister Modi is committed to making India an economic power, and capital markets are what provide businesses with the money they need to start and to grow. But to do that, they need to encourage investors to take risks, enough risk, but not too much, a fine balance we recently saw lost in India's equity derivatives market.
As a market maker with a unique model, Jane Street's business makes bets on inefficiencies in markets. Bloomberg reporter Catherine Doherty has been reporting on its business in India.
Jane Street has kept its trading secrets close to their chest, but it was really the Millennium lawsuit.
Jane Street saw an opportunity in India's equity markets, engaging in a strategy called index arbitrage.
So the firm was essentially placing these large bets that were then impacting the other side, and they were profiting from the way that these markets were moving. So the regulators in India have identified this as a manipulative trade, and the firm has said it was an arbitrage trade and not market manipulation.
India's market regulator, the Securities and Exchange Board of India, or SEBI, banned Jane Street from the country's securities markets. Jane Street has filed an appeal alleging that SEBI denied it access to documents it needs to defend against market manipulation accusations. Ironically, the problem with India's capital markets historically has not been encouraging too much risk, but too little. Nilesh Shah has watched the evolution of the country's capital markets as the managing director of Kotak Mahindra Asset Management.
The Indian savings allocation is more tilted towards physical assets. We are one of the largest buyers of gold in the world, putting anywhere between $50 to $70 billion annually. We also have love for real estate. Capital market or financial savings itself has taken off in recent times. But thanks to mutual funds, insurance industry and pension funds, slowly and steadily allocation to capital markets, both debt and equity, is increasing rapidly.
India's transition to retail investing is still in its early stages, but it is moving fast. 1 in 5 households today hold shares, up from 1 in 14 just 5 years ago.
We launched an investor awareness program called Mutual Funds Sahi Hai. Mutual funds are right thing to do. And that has helped us in mobilizing more and more retail savings into mutual fund. Our industry is growing at a frenetic pace, and I believe the nudges from the regulator, the work done by the regulator, is laying the foundation. Now it is up to us as an industry to carry forward the work.
One measure of the expansion of Indian capital markets is the success of its IPO market, which is among the biggest in the world.
Last year, IPOs in India accounted for about more than $20 billion US dollars. It was the number 2 IPO market in the entire world.
Josh Fellman is the principal at JH Consulting and advised the Indian government on economic and financial matters during his time as the director of the IMF's India office. To date, regulators have encouraged retail participation in IPOs, helping contribute to overall retail participation in markets.
One thing that they've been fantastically successful in, as opposed to, say, China, is they've managed to get household participation in the capital markets.
It's not all roses. Under the surface of India's blossoming capital markets is a risk that threatens its stability: derivatives.
About 40% of derivative transactions are conducted by households in India, which is an incredibly large number. So if you take the derivatives market in particular, the regulator, SEBI, did a study. They found that last year about 90% of the participants in the market lost money. And they found that, again, about 40% of them were under 30. 3/4 of them earned less than $6,000 per year.
The growth in derivatives has caused a liquidity problem.
It is a fact that there are a large number of unsophisticated investors. It is a fact that they have very poor cash buffers. But what to do about it? You don't want to push these people completely out of the market. On the same time, you don't want to unduly restrict the professional participants in the market, because they're the ones who iron out the market inefficiencies. So far, it has not had any adverse impact on the ability to raise money through the equity market.
Even if the illiquidity in markets hasn't affected raising capital to date, it has introduced a different kind of risk.
So in India, the options market is quite liquid, the most liquid active market really across the globe. In the US, you also have a very liquid options market, but the cash market, the equity market, is also liquid. It's also trading at high volumes and it's moving very efficiently. And the regulators really have a sense of the big players, and if there's any manipulation or if there's any large moves, they're able to identify it very quickly.
India's financial regulator, SEBI, has made an example out of Jane Street and drawn a boundary in how far it's willing to go to liberalize its markets. But keeping the door open to foreign investors will be crucial for the country.
India is one of the most open economy in terms of foreign direct investment. India's largest FMCG company, automobile company, telecom company, mutual fund, private sector bank, insurance company, all are majority owned by foreigners. There is hardly any other country in the world where foreigners will be allowed to own such kind of industry. However, can we improve further upon this? My favorite example on foreign direct investment is Maruti Suzuki. In the 80s, Suzuki came to set up an automobile company in India. They have gone through the ups and downs of India. Today, Maruti Suzuki, a 53% owned subsidiary of Suzuki, sells more automobiles in India than what Suzuki sells worldwide. And Maruti has delivered better return than Suzuki, Honda, Toyota combined in the equity market since its listing in 2003.
It isn't just equity markets that provide capital to companies, and the debt side of the capital market equation may be about to get a shot in the arm when Indian government bonds are included in several FTSE Russell bond indexes this month.
Essentially, we have seen that whenever a country becomes part of benchmark indices, both passive as well as active flow starts flowing in. So inclusion in FTSE government bond indices will undoubtedly increase allocation towards India. More importantly, when you get an alternate source of funding, for example, all domestic investors are generally on one side of liquidity. Either it's high or it is low. But global investors can bring balancing part.
Indian markets have come a long way in encouraging risk-taking among retail investors and offering channels of investment to foreign investors. But Shah says that hasn't been enough to support the risks inherent in generating the kind of innovation that comes from the success and failures of startups.
Unfortunately, here Indian capital market has not done a good job. Majority of our startups, both innovation as well as otherwise, have been funded by global private equity and venture capital funds. It has been to some extent funded by family offices and high net worth individuals. Like the public market, private market has not received encouraging participation from Indian capital. The second thing is related to instruments. The private equity market, unlisted market is not as much regulated as the public market is. So the domestic flows, domestic retail flows have not moved into unlisted segment as much as it should have done. The third, and probably which is changing rapidly, is creation of angel networks. The whole purpose of venture capital industry is to some extent go from monkey to King Kong scenario. You invest in lots of monkeys, some of them will grow to become gorilla, and one of them will eventually become King Kong.
There was a lot of financing through venture capital, through private equity for Indian startups. People wanted to bring the sort of IT ecosystem that exists in the United States into India. So, for example, food delivery firms, which has proved to be an enormously big and very successful market in India. Ride-hailing apps. All these things have been started in India and have proved very successful. A lot of them have firms have grown and exited through the PE firms have exited through IPOs. But of course, more recently, as elsewhere, when interest rates moved off the zero level, a lot of that financing has dried up.
Whether it's reforming taxes on securities transactions, or limiting speculation in cash equities and derivative markets, or making sure both debt and equities are supporting innovative new companies, India is moving, trying to walk that tightrope of risk and stability to support its economic growth. And its very motion means that it can't come to a rest. As the president's nominee to replace another governor heads toward Senate confirmation. Our special contributor Larry Summers has consistently expressed his concerns about Fed independence. But so far, the markets have been calm. So, Larry, continued focus on the Federal Reserve as there are proceedings with respect to Governor Cook, Lisa Cook, as President Trump's tried to fire, even as they try to appoint Stephen Myron to come in. What is the significance of what's going on right now with the Federal Reserve?
I think we're on the foothills of a credibility crisis. We're not there yet because people believe that ultimately U.S. institutions endure and succeed. But between the president's demand that interest rates be cut by 3 percentage points, which no economist anywhere has endorsed any idea of that kind, between the harshness of the president's rhetoric vis-a-vis Chairman Powell, between the extraordinary effort to fire a sitting Fed governor with no kind of due process surrounding the for cause provision, between the ominous rhetoric about hijacking the process for choosing local presidents of the regional Federal Reserves, between rumors about other members of the Fed board, we are in completely unprecedented territory. There hasn't yet been a dramatic market reaction. There are some concerning things in markets, not just 1 year ahead, but 1 year ahead. Inflation expectations are trending up a bit. The spread between the 30-year bond and the 10-year bond is larger than any time since COVID. But we haven't seen substantial reactions in markets yet. But this could turn very quickly if the psychology changes. And so, frankly, I think we are playing with fire in terms of inflation expectations, a situation made much worse by the fact that the United States, unless we get a big break in terms of artificial intelligence or other technology, really has a very problematic fiscal picture.
One of the questions some economists have raised is, does it make that much of a difference to have one person on the Fed or two people on the Fed? Part of the strength of the institution is the FOMC is a group of people, and so one or two people alone cannot really change the direction.
That may be right, but what the president is talking about, what he's explicitly scheming about on his Truth Social account and in some of his rhetoric, is getting a majority of the Board of Governors and using that majority on the Board of Governors to force a majority on the Federal Open Market Committee by controlling the appointment of regional feds. So this is not a one and done thing involving just the chairman. This is an attack on the governance of the institution. I'll tell you part of what is really disturbing to me. There have been a long tradition of distinguished Republican leaders who have stood up for the importance of inflation credibility, who have stood up for the independence of the Fed. I particularly admired Senator Pat Toomey when he was on the banking committee for his efforts. But there were others. There was an effort made to deny a nomination when President Obama made it to Nobel Prize winner Peter Diamond because he wasn't steeped enough in monetary policy and respect for the independence of the Federal Reserve. And yet here, when we're talking about the wholesale politicization of the Fed, there is no response from concerned Republicans. And I have to say that I have been struck that the prominent members of the financial community have had more to say being critical of Zoran Mondani's bad ideas about grocery stores in New York than they have the wholesale takeover of the Fed, which is a major threat to the financial system as we have it. So I am very worried that highly irresponsible behaviors are being normalized by what the president is doing and by the failure of the establishment and of the traditional voices to find the courage to resist and call out what President Trump is doing. If disagreements can't be stated openly or asked on or acted on, that's really a very chilling thing.
One of the major driving forces behind the Trump administration in dealing with the Fed is trying to get rates down, particularly things like mortgage rates, rates on car loans. Last time the Fed cut, actually the yield went up. It's expected right now that the Fed is likely to cut this month again. What is the administration's options if, in fact, the Fed does cut this month in September and actually yields go up?
Well, first of all, David, I think you said the important thing. Markets are already pricing in cuts in rates. So if a rate cut is delivered as expected, I would be surprised if that had a substantial impact on long-term rates. I think what markets will be watching is less what happens in September than the signals that are sent with regard to the future. And I think there is a sense that if the Fed is moving towards the president's line, easy rates over everything else, I think the likelihood is that in such an environment, long-term rates would rise and take mortgage rates up with them. That's the kind of pattern we saw with the politicized 1970s Federal Reserve. It's the kind of pattern we avoided during the times of Chairman Volcker and Chairman Greenspan. So I think that's something very much to worry about, and it's why I'm not sure the president is proceeding wisely, even in his own terms, of aspiring towards lower rates that people see. I suppose if long-term rates go up, there are, of course, options to bring back in some form or other the quantitative easing that the president and his people have largely condemned, where the Fed goes in and buys up, or somebody goes in and buys up large quantities of long-term bonds, or in which pressures are applied to banks and pension funds to force them to buy long-term bonds. But if you start down that road, you are really, I think, very severely compromising the integrity of our financial system in ways that will have far-reaching consequences.
Coming up, President Trump claims that the Bureau of Labor Statistics has been misleading the markets with its jobs numbers. What will it take to make sure we have numbers that we can trust? That's next on Wall Street Week. This is a story about trust, maybe the most important thing underlying the markets. Last December, we told you about major problems facing the Bureau of Labor Statistics, the body that publishes those all-important jobs numbers each month. Those problems got much worse when Donald Trump fired the agency's head last month. Our colleague Molly Smith reports on what it could mean for the system and for private businesses looking to get a foot in the door.
In a shared office space in downtown Manhattan, a group of economists see an opportunity.
As you can see, the BLS revisions are quite large.
You might not have heard of Revelio Labs, but they know an awful lot about the U.S. economy. Ben Zweig is the company's CEO.
We're a workforce data company, so we collect data from the public web, so anything that's online. And that could be public professional profiles, online job postings. We gather that data, we curate it, we standardize it, we enrich it, and then we ultimately sell that data
Revelio's main audience is hedge funds and private firms looking for another perspective on the economy beyond what's offered by government agencies. But things changed after an ugly July jobs report.
We got a very disappointing number here, and this is going to get Wall Street's attention. 73,000 jobs created.
President Donald Trump claimed, without evidence, that the numbers were biased and ousted the head of the Bureau of Labor Statistics.
I believe the numbers were phony, just like they were before the election. And there were other times. So you know what I did? I fired her. Right. And you know what? I did the right thing. We need people that we can trust.
We were really, really shocked when this happened. This happened on Jobs Friday, of course. And then over the weekend, I remember making some calls. I called our chief economist and, a few other people on the team. And we were all kind of thinking the same thing. We were like, all right, we gotta publish macro statistics. There's some concern that the BLS may become politicized, either institutionally or just through the incentives they face. Maybe there's some concern that whoever leads it gets the message that, if the numbers don't match a certain narrative, they might be out of a job. So there are some distorted incentives, and, there's some concern that this data might not be trusted in the way that it has been. And it's time for us to step up.
There's nothing to report that says that there's been actual political interference. Now, I know there was a charge, and that was the reason for the firing, that the data for the revisions were politically manipulated. And that is absolutely 100% untrue.
Mike Horrigan is president of the Upjohn Institute, a think tank focused on labor markets. He also spent over 30 years at the BLS, at one point leading the Employment Statistics Division.
I've served under many commissioners, whether they be nominated by a Republican president or a Democratic president. I got to say, all of my experience as well as at the Bureau was that of collaboration, collegiality, understanding. I personally think all the business leaders I talk to still have trust in it. I think what they're looking for is whether or not a new commissioner is going to come in and interfere with that trust. I think that's the next big test.
After ousting Erica McIntarfer, President Trump tapped E.J. Antoni to head up the Bureau of Labor Statistics. Antoni is the chief economist at the Heritage Foundation, a conservative think tank, and was a contributor to the controversial Project 2025 plan. He faces Senate confirmation before he can step into the new role at BLS. We spoke with former Commissioner Bill Beach about the politics of the role. Beach served under both President Trump and Biden.
Whether the president's Republican or Democrat, they're going to find someone who has maybe demonstrated or at least could demonstrate that they support the general drift of the policy portfolio the president has laid out. So EJ definitely qualifies on that.
So E.J. Antoni has been pretty vocal about his critiques of BLS, including the jobs data, the revisions. He suggested before he was named to the role that the BLS should suspend the monthly jobs report until the data issues are, quote, corrected. Do you think that that's a viable solution for a problem that BLS is facing?
It's not viable at all. The monthly reports coming out of BLS, particularly the jobs report, are watched by financial movers and shakers all over the world, by policy people all over the world. Their biggest impact is here in this country, and I can't imagine a situation more deleterious to the economy that a statistical agency could do than to suspend or stop or delay one of their reports. I mean, it would cause a lot of problems. So, no, it's not viable. And I think EJ will quickly see that if he's confirmed.
One report suggests Antoni has since backed off from the idea of suspending the monthly jobs report. But regardless of whether Trump's new BLS chief makes the agency better or worse, the issue remains that there's room for improvement. The agency's problems are twofold: the budget needed to get the numbers right, and the people to make sense of those numbers. Its resources haven't kept up with the scope of the challenge it faces. Adjusted for inflation, BLS funding has slumped about 20% since 2010, and President Trump's fiscal 2026 budget proposal would shave off an additional 8%. But Horrigan says that the BLS has already been making the most of its tight budget.
The Bureau gets about 58% of their reports now from this thing called EDI. So, for example, with internet, where it's more like say a single firm or a smaller firm will go into the internet or the web data collection facility and enter their answers into that format, that's probably about 20 to 25% of the sample. There are other forms in which the data are collected. So, for example, Caddy is a computer-assisted telephone interview. So a lot of these innovations were introduced well before I came on board, but over its history, those different innovative data collection techniques have been increasing over time.
Changes in the BLS's methods of collecting data wouldn't be without precedent. Its statistical peer, the Census Bureau, is already working with private partners to get creative in its data collection.
In terms of that next step, I mean, that's really kind of a function of resources. Census Bureau, for example, is doing some innovative research right now with Intel and Amazon to take a look at how you could use the firm's data in its own format and then use a large language model to basically fill out a survey form. That's the kind of innovative thinking that the Bureau and CES have done for years, and with more resources, they would be capable of doing that kind of innovation.
Innovation at the agency can also come through changing processes that no longer work as well as they once did. Nancy Podak was the chief statistician of the U.S.
गाइस ये नेचुरल गैस में ध्यान रखना, ये रेजिस्टेंस जोन पर ही है, यहाँ पर एक सेलिंग का प्लान है. एक्चुअली दो रेजिस्टेंस साथ साथ हैं तो मैंने दोनों लगा दिए हैं, तो इसलिए थोड़ा सा आपको बड़ा दिख रहा होगा. ये दो रेजिस्टेंस थे, एक तो पुराना वाला ही है जो बना हुआ था परसों से, एक ऊपर और था, तो दोनों मैंने मिक्स कर दिए. नीचे एक मेजर सपोर्ट आपको 264 63 के आसपास मिलेगा. एक बीच में भी है यहाँ पर सपोर्ट, बट वो परसों टेस्ट हो गया है, तो नीड टू सी वो कितना मूव करता है. तो लोअर एंड से थोड़ा क्वांटिटी कम ही रखना अगर बड़ी क्वांटिटी लेते हो तो, ठीक है. बाकी एसएल छोटा चाहते हो तो फिर हाई लेवल से ही सेल करना. ऐसा ना हो कि लोअर एंड से सेल करो और वो बहुत ऊपर चला जाए, एसएल बड़ा हो जाएगा उस केस में इन नेचुरल गैस. बाकी क्रूड ऑयल में भी सेलिंग का ट्रेड बना था और रिटेस्ट से वापस थोड़ा बहुत आ गया. देखते हैं, डे लो तक का छोटा सा ही टारगेट है 50 पॉइंट का. वापस जाएगा तो वापस प्लान करेंगे ऊपर. बीच में एंट्री मत कर देना कहीं पर क्रूड ऑयल में, ठीक है. छोटा सा ही रिटेस्ट से ट्रेड है, ज़्यादा तो नहीं है ये, क्योंकि इसमें नीचे कोई सपोर्ट नहीं है. वो परसों का ही लो है एक सपोर्ट जोन, उसके अलावा तो मुझे कुछ दिख नहीं रहा है. एक तो थोड़ा सा कैंडल देखोगे ना 15 मिनट की भी, वो काफ़ी ज़्यादा गैप अप गैप डाउन हो रही है कैंडल भी. इफ यू लुक एट द 15 मिनट कैंडल, दैट इज MCX चार्ट की मैं बात कर रहा हूँ. क्रूड ऑयल में कैंडल सीधा गैप डाउन दिख रही है, विच इज़ नॉट गुड. इसका मतलब क्लियरली है अभी वॉल्यूम इतना है नहीं. वॉल्यूम होता तो अभी तक मार्केट मूव कर जाता या गैप अप गैप डाउन होना बंद हो जाता कैंडल.
Years, BGRIM has embraced doing business with compassion, always committed to giving back to society. We empower people and strengthen communities for a better future.
This is a story about money burning a hole in your pocket. The price of gold has been on a rocket ride up. Our colleague Paul Allen tells us about what this means for gold mining in Australia and both the risks and the opportunities.
In the Australian outback, scrub and red dust stretch as far as the eye can see. It's desolate out here and it's dry. But beneath the dust, there's a bounty that miners are willing to dig a long way for.
How many ounces of gold would be in a typical truck?
So there'd be around 500 grams of gold in a truck.
So we've got a line of trucks slowly making their way out of the pit here. How long does it take to get from the bottom to the top?
Yeah, it's well over an hour.
The Kalgoorlie super pit in Western Australia is a sight to behold. More than 600 metres deep, it would cover even Manhattan's tallest skyscrapers. It's so vast, it'd swallow Central Park.
This project's going to be an important one for our business and our shareholders. It's over half.
Stuart Tonkin is CEO of Northern Star, Australia's biggest gold miner.
Probably around $300 to $400 million per annum being spent moving material from the southern part of this pit, gaining access to over 6 million ounces of gold in the bottom of this southern part of this pit.
The price of gold has been on a tear. It's up nearly tenfold since 2000 and more than doubling over the last 5 years. Tonkin's company and many others around Kalgoorlie are cashing in, but the gold industry has been here before.
There's probably more failure stories than success stories where people can point to in the gold sector. And so repairing a lot of that trust with investors as we go into another cycle has been really important for our company and I think for many Australian companies to get that investor trust.
But before we get to that, let's set the scene. It was 1893 when a group of prospectors on horseback quite literally struck gold in Kalgoorlie. A rush ensued and the precious metal has dominated the Western Australian town of 30,000 ever since. Ashok Parekh is the local accountant and chairman of mid-tier gold producer Horizon Minerals.
I've been involved in the mining industry for over 40 years in Kalgoorlie, and I happen to own the pub as well. When I came here, gold was probably $150 an ounce. Today it's over $5,000 an ounce. It has been great for everybody in Australia. And Kalgoorlie, we're the biggest gold mining town others in Australia. And Kalgoorlie is different. You can come to Kalgoorlie, you can walk into a pub, you got no job, nowhere to live, and no money. And by the time you walk out, you've had a meal, you've got a place to stay, and you've got a job.
And there's plenty more people finding jobs and places to mine with the price of gold booming.
We're currently mining this ore in a great gold price environment. What these high gold prices do for us is we can actually produce gold now, pay a little more through processing through third-party infrastructure, so use other people's infrastructure. But what it does is it actually closes that funding gap we'll need to refurbish our own plants.
You know, I call them pop-up shops around the goldfields here, just the amount of flurry and activity of things that weren't economic 6 months ago that suddenly become economic.
Australia produces about 300 tonnes of gold each year. That's about 8% of global production. It's a costly exercise. The process involves breaking down vast amounts of ore extracted from the mine. Each truck can carry about 250 tonnes of material, but just typically 500 grams of that is gold. That material's then broken down and processed by crushers before being melted.
So the melting point of gold is 1,024 degrees. So we then heat the furnace up to roughly 1,200 degrees. As we go through the pour process, the first material comes out is all of that slag off the top of the crucible. Then when the gold comes out, the colour change actually goes from a yellow almost to a greeny colour, and that's the gold coming out of the process. Probably one of the good things about this site is that we have a relatively nice ore body coming into it. We don't have a great deal of impurities coming through, so these are some of the nicest bars that I've seen in my time in industry.
And with a surge in prices, Australia's gold miners are cashing in and setting themselves up for long-term success. Laurie Conway is CEO of Evolution Mining.
So back in June 23, we made the decision to invest $250 million building this plant expansion and $75 million to open up a new mining centre into the north here to feed the plant, taking it from 2 million tonnes to 4.2 million tonnes. And in 23, it was pretty difficult. The market was hot. It was hard to get people, hard to get equipment. I think we were very fortunate when we did that. But, you know, gold price was only $2,400, $2,500 an ounce when the board approved this. And it had very good economics. I mean, bringing it in right now at $5,000, $5,200 an ounce is a perfect time to be commissioning it. I think that the difference this time is what's going on around central banks and that shift of we need to have gold in our reserves a lot more, whereas back in the last cycle it was really around the whole mining boom and therefore what was going on in low inflation, low interest rates that pushed the price of gold up, and so that was more being driven by an economic standpoint. This time it's really being driven by geopolitical tensions and the shift in the way that governments are handling their reserves, and so that's why you sort of see that structural shift that the governments are driving this price, whereas the economy was driving the other one. And that's why, you know, in the long term, yes, the gold price will come down a bit, but it's structurally shifted higher because of what central banks are doing versus the last boom.
In 2019, Evolution reported adjusted gross profit of about $270 million US dollars, or about 410 million Australian dollars. That's now jumped to about 1 billion.
देखो क्रूड ऑयल में अपर लेवल पे रेजिस्टेंस देखोगे तो क्रूड ऑयल में अपर लेवल पे मेजर रेजिस्टेंस 5750 760 के अराउंड है, वो भी एक टेस्ट होना पेंडिंग है क्योंकि लोअर एंड से तो बाइंग आ गई है कल यहाँ से, तो नीड टू सी कितना और मूव करता है. 2000 द ओनली रेजिस्टेंस, बीच में रीटेस्ट है, दैट्स ओनली अ रीटेस्ट, स्मॉल रीटेस्ट जोन. बैंक निफ्टी को भी देखोगे, निफ्टी ने भी थोड़ा सा अब मोमेंटम करना शुरू कर दिया है, विच इज गुड. मार्केट तो क्लोज हो जाएगा अभी 1.5 घंटे में, बट थोड़ा सा टाइम फ्रेम और कम करें. केस भी स्टक हो रखा है वहीं पर, ये काफी बार टेस्ट हो गया है लेवल. 2-3 दिनों से देखोगे मार्केट इसी रेजिस्टेंस एरिया से मल्टीपल टाइम होल्ड करके बैठा हुआ है, बट लेट्स सी. एक लास्ट रेजिस्टेंस 279 280, उसके ऊपर तो खैर ब्रेकआउट ही मान लिया जाएगा क्योंकि उसके ऊपर फिर रेजिस्टेंस भी काफ़ी दूर हैं चार्ट में, नेचुरल गैस में भी. इसमें रीटेस्ट किया आई थिंक, अब तो कुछ दिख भी नहीं रहा है लेवल। भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। जिन लोगों ने सब्सक्राइब नहीं किया है चैनल को, सब्सक्राइब भी करते रहो। इसको सेम ही रखते हैं। बाकी गोल्ड को देखोगे और सिल्वर को भी देखोगे एमसीएक्स में, इवन फ्यूचर में भी, फॉरेक्स में सॉरी, तो गोल्ड एज यूजुअल ऑल टाइम हाई फिर से है। लास्ट ट्रेडिंग सेशन में थोड़ा सा मार्केट न्यूज़ के बाद एक काफ़ी अच्छा मोमेंटम कर गया था, फिर प्रॉफिट बुकिंग आई एंड अगेन अभी 11 बजे से वापस बुलिश ही बना हुआ है, तो ऑल टाइम हाई बनाया जा रहा है गोल्ड। तो इसमें भी करेक्शन बहुत टाइम से पेंडिंग है, पता नहीं कब आएगा। हायर टाइम फ्रेम पे भी कोई करेक्शन बनता हुआ दिख नहीं रहा है। ना मंथली में ना डेली में। कल परसों थर्सडे को शायद, आई थिंक वेनेसडे थर्सडे को जो सीपीआई का डेटा आ रहा है, शायद तभी कुछ करेक्शन आ सकता है। अदरवाइज रेट कट के फिर से मार्केट ऊपर ही जाया जा रहा है। तो एटलीस्ट 15 मिनट उससे ऊपर, 15 मिनट पे नहीं बना है तो उससे ऊपर भी नहीं बना होगा। एटलीस्ट 15 मिनट टाइम फ्रेम तक देर इज नो रेजिस्टेंस इन गोल्ड इन 15 मिनट राइट नाउ। 15 मिनट से कम टाइम फ्रेम पे कोई बना होगा तो नीड टू सी द चार्ट।
It is a fact that there are a large number of unsophisticated investors. It is a fact that they have very poor cash buffers. But what to do about it? You don't want to push these people completely out of the market. On the same time, you don't want to unduly restrict the professional participants in the market, because
तो ऊपर गोल्ड में मुझे कुछ दिख नहीं रहा है। 15 मिनट में भी कोई रेजिस्टेंस नहीं है। ऑल टाइम हाई पर है $3,614। पिवट पॉइंट्स का यूज़ कर सकते हो अगर नेक्स्ट रेजिस्टेंस वैसे देखना चाह रहे हो। कोई रेजिस्टेंस बनेगा तो देखेंगे 15 मिनट में। इवन 5 मिनट पे भी कोई रेजिस्टेंस नहीं है। लेट्स मूव ऑन टू द 1 मिनट। सबसे पहले 1 मिनट में ही बनेगा रेजिस्टेंस अगर बन रहा है तो। वन मिनट में भी कोई रेजिस्टेंस नहीं है तो रेट कट के फियर की वजह से गोल्ड सुपर बुलिश ऑल टाइम हाई एंड माइट पॉसिबल, अगर कुछ न्यूज़ नहीं आती है तो और ऊपर जा सकता है। बाकी करेक्शन मिलना होगा तो एटलीस्ट 4 आवर टाइम फ्रेम पर, बड़ा करेक्शन की मैं बात कर रहा हूँ, बनना ज़रूरी है, तभी कुछ आ सकता है एक प्रॉपर करेक्शन। हाँ वो तो ऑलरेडी होल्ड है, कोई सा नहीं है, उसको होल्ड करके बैठे रहो। दैट विल बी अ गुड ट्रेड। दैट इज अ फ्यूचर। बोलू शर्मा जी हेलो। यस वर्धा जी, व्हाट्स द वर्डिक्ट ऑफ यस्टरडेज ओपेक मीटिंग? मैंने देखा ही नहीं यार ओपेक मीटिंग का, मुझे याद ही नहीं। थैंक गॉड आपने बता दिया वैसे। कहीं न्यूज़ भी नहीं देखी मैंने इसमें, आई डोंट नो, कुछ कहा भी नहीं, कहा कुछ हुआ नहीं हुआ, आई डोंट। ओपेक और जेएमएमसी की मीटिंग थी कल तो शायद, आई थिंक। वैसे जिस तरह से गैप अप हुआ है तो पॉसिबिलिटी है बुलिश ही होगा प्राइस के लिए वैसे। लेट्स सी। हाँ वही है। WTI क्रूड ऑयल, WTI क्रूड ऑयल ओके। हाँ 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 हाँ। तो ओपेक ओपेक जेएमएमसी की मीटिंग का कुछ सो ही नहीं कर रहा है एक्चुअली में। लास्ट टाइम उन्होंने यही बोला था, ओपेक प्लस की मैं बात कर रहा हूँ, कंट्रीज ने कि आउटपुट है जो वो हाइक करेंगे अक्टूबर मंथ में। तो क्या डिस्कस किया है वहाँ से कुछ अपडेट है नहीं, बट नॉर्मली जो अब फिलहाल के लिए न्यूज़ में मेंशन है वो यही लिखा हुआ है, ओपेक प्लस इज एक्सपेक्टेड टू डिस्कस अ पोटेंशियल आउटपुट हाइक ऑन संडेज मीटिंग। उसमें कुछ क्लैरिटी लिखा नहीं है कि कंफर्म बढ़ाएंगे या फिर कम करेंगे, ऐसा कुछ मेंशन नहीं है। कुछ आएगा अपडेट तो बताऊंगा, फिलहाल के लिए इतना ही मेंशन है, ओपेक प्लस कंट्रीज एक्सपेक्टेड टू डिस्कस पोटेंशियल आउटपुट हाइक ऑन संडेज मीटिंग। नो फर्दर अपडेट टिल नाउ। ठीक है, तो वही है जो मैंने बताया, ओपेक प्लस कंट्रीज अपना आउटपुट अक्टूबर मंथ में इंक्रीज ही करने वाली है। Mainly मुझे लग रहा है क्रूड ऑयल भी दो चीज, ये जितने भी मार्केट नॉर्मली हैं वो दो चीज पर ही फिलहाल के लिए रिलाय है। हाँ एक अपडेट यहाँ पर है ये, ओके। ठीक है, अपडेट है इस पे, बिल्कुल अपडेट है। काफी बाद में अपडेट दिया हुआ है। ओल ओपेक प्लस कंट्रीज एग्रीड, ओपेक और जेएमएमसी की बात हो रही है, एग्रीड ओवर द वीकेंड टू रेज आउटपुट, जैसी हम बात कर रहे हैं, बट एट अ स्लोअर पेस फ्रॉम अक्टूबर ड्यू टू एन एंटिसिपेटेड वीकनिंग ऑफ ग्लोबल डिमांड। ठीक है, ओपेक प्लस जेएमएमसी की जो मीटिंग हुई थी वहां से ये बताया गया है कि ओपेक प्लस जो कंट्रीज हैं वो ऑयल प्रोडक्शन इंक्रीज करेंगी अक्टूबर मंथ से धीरे धीरे, लेकिन उस स्पीड से नहीं जिस स्पीड से वो करने वाले थे, थोड़ा स्लो ही करेंगे। एंड उसका रीज़न उन्होंने ये दिया है कि जो ओवरऑल ऑयल डिमांड है वो थोड़ी सी वीक है, ग्लोबल ऑयल डिमांड थोड़ी सी वीकनिंग है, इसलिए जो प्रोडक्शन इंक्रीज करने की वो बात कर रहे थे वो होगा जरूर अक्टूबर मंथ से, बट थोड़ा स्लो स्पेस से। दैट इज़ अ आउटकम फ्रॉम यस्टरडेज ओपेक प्लस जेएमएमसी मीटिंग। तो एक तरह से इस न्यूज़ को देखोगे तो ये मिक्स जैसी न्यूज़ है। अगर इसमें सिर्फ इतना ही बोला होता इन लोगों ने कि हम अक्टूबर मंथ से, जैसा लास्ट टाइम कहा था कि अक्टूबर मंथ से फास्ट स्पेस में प्रोडक्शन इंक्रीज करेंगे, तो अगर वही सेम ही चीज़ होती तो मुझे लगता है क्रूड ऑयल और एक बड़ा गैप डाउन होना चाहिए था, बट गैप अप हुआ है इंडिया में। इसके अलावा फॉरेक्स में भी देखोगे तो वहाँ पर लोअर एंड से काफ़ी अच्छी बाइंग आई थी एक्चुअली। तो दिस इज़ अ वेरी वेरी क्लियर साइन, क्योंकि अर्ली मॉर्निंग फॉरेक्स मार्केट ओपन हुआ था तो बड़ी कैंडल, वॉलेटाइल कैंडल थी, उसके बाद कंटिन्यूसली बुलिश बना हुआ है, तो मार्केट कहीं ना कहीं, वैसे ही न्यूज़ देखोगे तो मिक्स जैसी है। ऑयल प्रोडक्शन बढ़ रहा है तो लॉजिकली तो प्राइस को डाउन जाना चाहिए, बट थोड़ा सा स्लो स्पीड से बढ़ रहा है, या स्लो स्पीड से लोग प्रोडक्शन बढ़ाएंगे तो उसको थोड़ा सा बहुत मार्केट पॉजिटिवली ले रहा है, बट ओवरऑल देखा जाए तो मार्केट न्यूज़ तो नेगेटिव ही है। लेट्स सी क्या ये यहीं से पूरा बड़ा फॉल करेगा या फिर थोड़ा नेक्स्ट रेजिस्टेंस तक जाएगा यहाँ। ओवरऑल तो ये ओपेक का है, तो मुझे लग रहा है मार्केट ने मिक्स लिया है इस न्यूज़ को। ज़्यादा बियरिश लिया नहीं। इंडियन मार्केट भी क्लोज होने वाला है। इस निफ्टी को देखोगे थोड़ा बहुत मोमेंटम पॉजिटिवली किया है, दोनों ही निफ्टी बैंक निफ्टी ने, बट इतना भी कुछ खास नहीं। ओवरऑल देखोगे इंट्राडे में 15 मिनट में फ्यूचर में तो सिर्फ 100 पॉइंट की रेंज के आसपास निफ्टी घूम रहा है, और आपका बैंक निफ्टी फ्यूचर भी लगभग इसी रेंज के आसपास, 250 पॉइंट की रेंज के आसपास फ्यूचर भी घूम रहा है, तो कुछ खास मोमेंटम नहीं हुआ है। ऑप्शन सेलर का अच्छा डे था। है एक रेजिस्टेंस वैसे तो, बिल्कुल है। निफ्टी में फ्यूचर की मैं बात करूँ 25,050 के अराउंड, बट वहाँ तक शायद ही आएगा। इवन उसके लोअर एंड पे भी नहीं आ रहा है 25,000, 40 पॉइंट ऊपर नीचे चलता है। से भी एक बार सेलिंग आई थी, बड़ा लो बनाया था मार्केट ने 24,400 का। दूसरी बार सेलिंग आई थी, एक हायर लो बनाया था 24,700 का। तीसरी बार आया है उसी लेवल के अराउंड। यहाँ पर रीटेस्ट किया है इसने। नीचे एक निफ्टी में सपोर्ट था, वो रीटेस्ट परसों ही हो गया था 24,700 के आसपास। बस अब बुलिस अगर होना है तो ऊपर 25,000, 130, 140 के ऊपर सस्टेन क्लोजिंग होनी जरूरी है, ब्रेकआउट होना। नहीं तो नीचे रीटेस्ट ऑलरेडी हो ही गया है, अब की बार आया है तो शायद ब्रेक डाउन ही कर दे।
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
News when you want it with Bloomberg News Now. I'm Tom Mackenzie.
And I'm Caroline Hepker.
France's government is expected to collapse today, with Prime Minister François Bayrou expected to lose a confidence vote in Parliament. Bayrou called the vote in a bid to pressure lawmakers into backing his budget plan, which includes spending cuts and tax hikes aimed at bringing the country's ballooning debt under control. France's fiscal deficit is already the widest in the euro area and is on course to grow further, with the cost of servicing it set to hit 75 billion euros next year. Here's what Prime Minister François Bayrou said on French TV.
We are experiencing a situation that threatens the very future of the country, and everyone is whistling as if it doesn't exist. Everyone is looking the other way. Everyone is using the answers we could have provided to gain electoral advantage.
François Bayrou speaking there. President Emmanuel Macron faces few options if his government falls. He could name a new prime minister or call fresh elections for the National Assembly, but neither option is likely to improve the fiscal outlook in the near future, and further political turmoil will put increased pressure on French government bond yields.
Shigeru Ishiba has announced that he plans to step down as Japan's Prime Minister. The move follows calls for his resignation after back-to-back election losses that cost his LDP party its parliamentary majorities. Japan's currency has already slid against the dollar on concerns that political instability will reduce the prospect for the Bank of Japan to raise interest rates. Prime Minister Shigeru Ishiba announced his decision at a news conference on Sunday.
I have been considering that it is this administration's task to set a course for negotiation with the United States regarding the tariffs, which one can refer to as a national crisis. Last Friday, the Memorandum of Understanding on Investments was signed, and the U.S. President's executive order was issued. With the other day's report from Minister Akazawa, I felt I have reached a milestone.
Ishiba says he will stay on as Prime Minister until his successor is named, but with no clear individual, his departure is likely to fuel uncertainty among investors over the coming weeks until a new leader is chosen.
In the UK, pay for new workers is growing at its slowest pace since the pandemic, according to new data. The poll by the Recruitment and Employment Confederation and KPMG found starting pay growth in August cooled to levels last seen in early 2021. The numbers will make uncomfortable reading for Prime Minister Keir Starmer. The PM spent his weekend completing a wide-ranging government reshuffle after his deputy, Angela Rayner, resigned over mishandling her tax affairs. Defence Secretary John Healey, whose position remains unchanged, says the new cabinet will focus on delivery.
What Keir Starmer has done is put a new team in place and said to us all, you've got to go up a gear. And you've got to go up a gear to demonstrate that government can deliver for people. And what that means is that we've got to start to show that we can help change people's lives.
John Healey speaking there as Bloomberg learned that a top advisor to Keir Starmer has left his role after just 2 weeks. Despite being expected to work in Downing Street for several months, Tom Kabassi instead exited at the end of August.
A major strike has begun on the London Underground. It will force several main lines on the network to shut down until the end of the working week. Members of the RMT union are striking over pay and pushing for a 32-hour working week, a demand which Transport for London says it cannot afford to meet. The Centre for Economics and Business Research estimates the walkouts could cost the UK economy about £230 million.
The EU is preparing new sanctions and secondary tariffs on oil and banks to further squeeze Russia's economy and pressure Vladimir Putin to negotiate an end to the war in Ukraine. The possible package comes as a delegation of EU officials head to Washington this week to meet US counterparts and discuss the potential for joint action. Treasury Secretary Scott Bessent spoke on Sunday to NBC's Meet the Press.
We are in a race now between how long can the Ukrainian military hold up versus how long can the Russian economy hold up. And if the U.S. and the EU can come in, do more sanctions, secondary tariffs on the countries that buy Russian oil, the Russian economy will be in full collapse, and that will bring President Putin to the table.
Secretary Bessent speaking to NBC's Meet the Press as Ukrainian President Volodymyr Zelensky spoke to France's Emmanuel Macron hours after Russia's largest air assault of the war. The two leaders discussed new steps to strengthen Ukraine's defences and coordinate a wider diplomatic response. The overnight barrage killed at least 4 people and for the first time struck a key government building in Kyiv.
Now, the United States is proposing annual approvals for exports of chip-making supplies to Samsung and SK Hynix factories in China. Sources tell Bloomberg that the plan would require the firms to seek approval for a year's worth of restricted gear, parts and materials in set quantities. While adding complexity, it offers a way for South Korea's chip makers to keep their giant China plants running, producing components for everything from smartphones to data centres.
In the US, an immigration raid on an EV battery plant in Georgia run by 2 South Korean firms has rattled officials in Seoul. It comes less than 2 weeks after the South Korean President Lee Jae-myung met President Trump in the White House and Korean companies pledged to invest hundreds of billions in the US. Korean officials worked over the weekend to secure the release of 300 of its citizens detained by US Immigration and Customs Enforcement at a construction site for a Hyundai Motor and LG Energy Solution joint venture. President Trump spoke to reporters about the incident outside Air Force One.
We heard about it yesterday. At the same time, ICE was doing right because they were here illegally. But we do have to work something out where we bring in experts so that our people can be trained so that they can do it themselves. Does that make sense? Right? Is it straining the relationship with Korea at all? No, we have a great relationship with South Korea.
President Trump speaking there as the raid has put South Korean President Lee's government under pressure at home and threatens to become a major diplomatic flashpoint with one of Washington's closest allies.
And those are our top stories for you this morning. So looking at the markets, European stocks currently up by 0.3%. Xetra DAX surging 0.7 this morning. Even the CAC car managing a gain of 0.4. In terms of stock futures for the US, they're in the green. Bond markets, so 2-year US yields at 3%.
We start with the continuing battle over the Federal Reserve as President Trump insists another governor heads toward Senate confirmation. Our special contributor Larry Summers has consistently expressed his concerns about Fed independence, but so far the markets have been calm. So, Larry, continued focus on the Federal Reserve as there are proceedings with respect to Governor Cook, Lisa Cook, as President Trump's tried to fire her, even as they try to appoint Stephen Myron to come in. What is the significance of what's going on right now with the Federal Reserve?
I think we're on the foothills of a credibility crisis. We're not there yet because people believe that ultimately U.S. institutions endure and succeed. But between the president's demand that interest rates be cut by 3 percentage points, which no economist anywhere has endorsed any idea of that kind, between the harshness of the president's rhetoric vis-a-vis Chairman Powell, between the extraordinary effort to fire a sitting Fed governor with no kind of due process surrounding the for cause provision, between the ominous rhetoric about hijacking the process for choosing local presidents of the region.
On Bitcoin. Lululemon Athletica shares plunging 18% after earnings. It slashed its outlook due to weakening demand and the Trump administration's tougher trade policies. And Broadcom is helping OpenAI design and produce an artificial intelligence accelerator from 2026, getting into a lucrative sphere dominated by NVIDIA. Right now, Broadcom up 11%, NVIDIA down by 2.9%. Recapping stocks lower, S&P down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington as Balance of Power continues. Once again, your hosts, Joe Matthew and Preeti Gupta.
All right, Charlie. Great to see Charlie Pellet on the Friday edition, and thanks for joining us here. You made it to the threshold of the weekend, and we've got a lot to talk about on this jobs day with big concerns about the trajectory of the job market following the data that fell short this morning. Only 22,000 on payrolls, unemployment up to 4.3%, and outright losses of jobs in some key sectors, including manufacturing. President Trump was asked last evening as he dined with the titans of high tech at the White House about the veracity of the numbers and whether he would trust what we heard from BLS, knowing a month ago he fired the commissioner after not thinking that the data were correct. In fact, he suggested they were politically rigged. Here's what the president said last evening.
We have a jobs report coming out, the first since the BLS commissioner who you fired won't be there. Can you commit to saying the data will be credible?
The number, I don't know, but the real numbers that I'm talking about are going to be whatever it is, but will be in a year from now. I think you'll see job numbers that are going to be absolutely incredible. You're going to see job numbers like our country has never seen before.
I love Mark Zuckerberg having the side conversation with somebody while the president's talking to the media. The visuals were great last evening, but we want to get to the numbers here before we're joined by Representative Jason Smith, chairman of House Ways and Means. Anna Wong is with us, the chief U.S. economist at Bloomberg Economics. Anna, it's great to see you. So we need to wait a year for the golden age to begin in the job market. What do you make of this?
Well, you know, for example, next week we finally will get some revisions for last year. So indeed, you have to wait a whole year. But I think that for today's number, there has been a historical tendency for August to undershoot consensus. When you look at where the number print in the first print relative to consensus, since 1999, 70% of the time, the initial print disappoints. And one possible explanation is that people tend to go on vacations in August, and this August the weather was beautiful in the U.S. And so the response rates for surveys tend to be lower as well. And the response rate we saw today is one of the lowest August we've seen, the lowest since 2000. So personally, I do expect this number to be revised up even within the next 2 months. Okay. And traditionally, the median upward revision in the next 2 months would be about 25,000, and the disappointment is usually about 25,000 too. So roughly offsetting by the disappointment. That means that eventually this number would be revised up possibly to 50,000, 60,000.
Did the last guy get fired for all this, though? The revisions and the lack of response rate?
Well, the lack of response rate has been going down for a long time, and many of these issues are long-standing and not just from one commissioner or another. So if Trump does fire the BLS commissioner, he won't get the upward revisions either.
There you go.
Anna, 50,000, even in the best-case scenario, still doesn't sound like a strong labor market. I'm going to repeat Joe's question. Even in the best-case scenario with those revisions, is this the Trump economy?
Well, you know, and the unemployment rate increase, right? I think that's where the real signal is, because it's the relative labor demand and supply. And what we saw in the unemployment rate is that participation rate increased. So even though employment in the household survey actually increased over 200,000, the unemployment rate still ticked up. Because, in fact, people are coming back into the labor force after dropping out in the past 3 months. I do think that the bottom of this labor market was actually in June, and we actually have been through the really rough patch already. In fact, after all the revisions are done, we probably have a couple negative prints a couple months ago. We also probably have a negative print late last year, but I think things should be rebounding right now.
Well, that's fascinating because we hear so much about the huge levels of investment that are coming from some of the individuals who were at that dinner table last evening, but hundreds of billions of dollars in data centers alone. That's supposed to prompt a massive amount of job growth, correct? Is AI and the productivity from AI working against that?
So we are indeed estimating that the investment from AI will be continuing on this linear trajectory or even slightly non-linear in the next 2 years. So that helps with GDP growth, right? On the other hand, we are seeing a rising unemployment rate in sectors that are exposed to AI, possibly because employers are not hiring as fast. And this is what we're seeing in the demographics group from age 20 to 24, that their unemployment rate is close to 10% right now. So it's, I think through the reduced hiring, not outright layoff, this is where ultimately, through natural attrition and not replacing those workers, you're going to see slow build-up, acceleration in productivity.
Wow, really interesting conversation, as always, with Anna Wong. Thank you, Anna, for your great analysis. And you can find Anna's work on the terminal and, of course, online at Bloomberg.com as we add the voice of Congressman Jason Smith, the Republican chairman of the House Ways and Means Committee, is with us right now, live from Capitol Hill on Bloomberg TV and radio. Mr. Chairman, thank you for joining us. It's great to have you back with us here on Balance of Power. I'd love your take, before we get to matters of legislation, just on the jobs print today, what it means for our economy now that the commission of BLS has been fired. Do you believe these numbers are credible?
You know, I believe that I would agree with actually the person before me. I believe the numbers should be a little bit higher than what was released today. But let's look at it just this year. In the first 8 months of the Trump administration, there's been 500,000 new jobs, and those are American jobs. Those aren't government jobs. That's real jobs, and I think it's going to have a huge impact. But as the president said in one of the prior messages that I heard, when you look at a year from now, when the growth aspects take an effect from the passage of the tax bill on July 4th, you're going to see a lot of new jobs.
Chairman Smith, the economist that was speaking before you, Anna Wong, also said, though, that some of the negative prints that have come up in the last couple of months are likely to still be negative. Those revisions still stand. If that weakness persists, is that indicative of the effect of Donald Trump's tariff policy?
I don't believe so. And I think she also said that June was probably going to be the lowest level and then it should only go up from that point on. But just passage of the big, beautiful bill of the small business deduction, the National Federation of Independent Businesses claim that that tax certainty will create 1 million new jobs each year for the next 10 years. That's pretty substantial, and that's just one provision within the tax bill, and that was from the NFIB.
Well, it's interesting that you bring that up, Mr. Chairman, because there's been a lot of writing recently about the branding, the messaging around the bill. The president himself said he doesn't want to call it Big Beautiful Bill anymore. I think the White House is looking more for something like the Working Families Tax Act or the Tax Cut Act. And I'm wondering your thought on that, having just come back from August recess, the messaging and the communication with voters that needs to follow such a massive piece of legislation passing. It's basically an opportunity to educate people on what you just did. Does it need a new brand? Does it need a new look while you take this on the road?
What it needs is for people to know what's in the bill. And that's what we have to do a better job at. We have to show how this is a tax cut for working families, such as no tax on tips, no tax on overtime, increasing the standard deduction, which is what the majority of working class families use, increasing the child tax credit to $2,200, creating the Trump accounts for new children that are born that $1,000 will be invested for them. These different provisions, whether it's increasing a tax incentive for paid family leave or child care, these are items that need to be discussed rather than just one big broad brush. The bill, as you know, had 103 different tax provisions, which we passed through the House Ways and Means Committee, but it also had border security, it had military spending, it had welfare reform, so it was a variety of things. But just from a tax perspective, of course, these tax cuts, the majority affect working families.
Yeah. Well, I have to ask you not about only what's just been done, but what's coming up next. Mr. Chairman, there's talk of another rescissions package, for instance, because after the last one, we had a lot of Democrats come on the air here to say that they can't trust deals that are made surrounding appropriations in the House and we may well end up seeing a government shutdown. One more rescissions package, and we shut down, is what I believe Brendan Boyle said, the top Democrat on the Budget Committee. So give us your read on this. You're talking to your colleagues. Are we at risk of shutting down after September 30th?
You know, I really hate to hear that my Democrat colleague says no rescissions at all. That's saying that everything that's appropriated was needed to be spent. I don't think that's the case when you're looking at trillions of dollars. I'm sure you can find some things that aren't being spent and we should rescind it. I am very disheartened what I've been hearing from the other side of the building, from the Senate, from Leader Schumer, from Chuck Schumer, by saying that there's going to be a shutdown. We can pass a funding bill out of the House of Representatives, and we will pass a funding bill. The issue is you have to have 60 votes in the United States Senate. There's only 52 Republicans, so that means at least 8 Democrats are going to have to join in. But if they refuse to join in, there will be a government shutdown.
Chairman Smith, it sounds like you're saying that a continuing resolution may be the only option here. How long could that last if that's the way that it moves forward?
I would expect that there'll be a continuing resolution for at least a couple months because there is clearly no bipartisan agreement on an overall appropriations process. And so a continuing resolution is what you're going to be looking at over the next several weeks. The question is, will the Democrats in the Senate support a continuing resolution? They're saying right now that they won't, but if they don't, they are clearly shutting down government.
Well, it's interesting. We're hearing talk now from the White House, not the first time, of a full year CR, a year-long CR that would bring us all the way to the next fiscal year. Mr. Chairman, does that give you the sweats when you hear that, or could that really happen?
You know, I would really like for us to do our job and to appropriate. Getting tired of CRs. But that requires Republicans and Democrats to work together through this appropriations process. And hopefully people will be able to do that. But it's a huge challenge. It's a huge challenge. I think right now, if you were going to ask me to predict, it's going to be a CR at least for a couple months.
Well, Chairman Smith, you're talking about getting the Democrats on your side. Would you commit to more rescission packages to do that?
Well, the Democrats don't want rescission packages, as what was said earlier. I'm all about making sure you're appropriating money and you're cutting waste, fraud, and abuse, making sure that you're funding the things that should be cutting. So there's times that there needs to be rescissions. There's times that items shouldn't be rescinded. But to say a blanket across the board, no rescissions, that's not how it works up here.
We understand your position on that, Mr. Chairman. I'd love to know where you stand on Obamacare tax credits. We've got a big set of expirations, is the word I'm looking for, coming up at the end of the year. And there are questions about whether you could actually make a deal with Democrats by extending them. There are also concerns, as they call it, the Obamacare cliff at this point, about what it would mean for Republicans if they expired. Should these be renewed?
I think you look at everything when it comes to such a divided Congress is on the table, and there's a lot of negotiations throughout the whole process. I have concerns with the premium tax credits that you're referring to. The fact that if you make $600,000 in Scottsdale, Arizona, you get subsidized for your health care. That's not appropriate. And so those kind of reforms have to be maintained if there's any step moving forward on extending those credits.
Chairman Smith, can you talk to us a little bit about some of the talk we're hearing around a second reconciliation bill come October 1st? Is that a possibility?
Do you know, I've said all along that we needed to have one reconciliation bill, one big, beautiful bill, because if you look at history, there has not been a case in the history of the United States where two partisan reconciliation bills passed in the same year. That's never happened. And with these razor-thin majorities, I think it's going to be very difficult. So I'm glad that we were able to usher through the one big beautiful bill. We delivered the largest tax cut in U.S. history, the largest investment in border security in U.S. history, the most significant welfare reforms in U.S. history, just to name a few things. The second reconciliation bill, I think it'll be a whole lot more difficult to move through the system.
Well, I can only imagine going through that exercise once again, even though you can, doesn't mean you should. Jason Smith, it's great to have you back, Mr. Chairman. Thanks for joining us. He chairs the Ways and Means Committee in the Republican-led House, with us live from Capitol Hill here on Bloomberg TV and radio. They're going to head back home, Creedy, and come back next week to some pretty interesting challenges. As you mentioned, what are we down to, a dozen legislative days to figure this all out?
Absolutely. And the clock is ticking. It's still unclear if there's any way out of this.
That's true, as we just proved, I think, in another conversation about this whole deal. Democrats and Republicans are going to have to get in a room at some point and figure their way forward here, and they're running out of time. September 30, the end of the fiscal year. Alongside Creedy Gupta, I'm Joe Matthew in Washington. We'll assemble our political panel next. Jeannie Shanzano and Rick Davis, only here on Bloomberg. Washington and New York City are colliding again. Doesn't really have to do with Wall Street this time, but in fact, the mayor's race. And Donald Trump is investing himself. We've talked about this a bit. With reports, it began as reports this week, that he might urge a couple of candidates, you've heard of them both, including the sitting mayor of New York, Eric Adams, convince them to drop out of the race, Curtis Sliwa the other, the Republicans, so we could get this down to a one-on-one, right? A two-way race between Cuomo and Mamdani, who probably got quite a kick out of this story. He was asked about it earlier this week in New York. Listen.
Today's news that the White House is considering job offers for Eric Adams and Curtis Sliwa, it is not news that carries meaning because of any impact it will have on this race. We feel just as confident as we did yesterday that we will win this race in November. This is, however, about an affront to our democracy. An affront to what makes so many of us proud to be Americans, that we choose our own leaders.
It's interesting, Creedy, because Donald Trump doesn't appear to be backing down from these reports. And he actually talked about this when he was asked. He's maybe looking for a job for Eric Adams at Housing and Urban Development, maybe in Saudi Arabia. Did you see this report?
I mean, the New York Times talking about a potential ambassadorship.
Yeah.
Has Eric Adams been to Saudi Arabia?
I don't know. They talk about Turkey a lot, but let's hear from Donald Trump. He actually got into this just last evening when he was at the table with the tech titans. Here's what the president said.
Are you urging or encouraging any candidates in the New York City mayor's race to drop out, to clear the field?
No, I don't like to see a communist become mayor, I will tell you that. And I don't think you can win unless you have one-on-one, because somehow he's gotten a little bit of a lead. I have no idea how that happened, but I'd prefer not to have a communist mayor of New York City. And, you know, that's what he is based on his policy, if you look at his statements in the past. So I would like to see two people drop out and have it be one-on-one. And I think that's a race that could be won.
Generating a flurry of headlines. Trump wants two-way race for New York City mayor. Adams considering dropping out of race after secret meeting in Florida. Talks between Adams and Trump advisors center on Saudi ambassadorship. Apparently, Eric Adams will be in town next week now, according to the New York Post. Is going to sit down with Steve Witkoff to talk about next steps. Got to play this to the panel. Rick Davis and Jeannie Shanzano are with us now, Bloomberg Politics contributors. Jeannie is in New York as we speak, democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick Davis, partner at Stone Court Capital, our Republican strategist. As the Democrat on the panel here, Jeannie, I don't know your thoughts of Donald Trump removing the Republican candidate from this race, but where is this going? Will the president of the United States dictate the next mayor of New York?
That is what Mamdani says he is trying to do, and it is stunning. I will tell you, the local media here had something of a mini field day because the mayor was supposed to have a press conference that got canceled. Not that there was any direct tie between this, but of course, every little move he makes now is watched to see, is he going to be announcing he's out of this race or suspending his campaign? I think what's so stunning is that most of us thought that Mamdani was something of a gift to the Republicans, like this was going to be the Republican foil. He is the new Speaker of the House, Nancy Pelosi or AOC, and Republicans will be running against him for the next several election cycles. And yet what do we see is we see Donald Trump saying, nope, we want him out, which is quite stunning. And I thought it was interesting that Donald Trump has now recategorized him. He is no longer a democratic socialist. He is now a communist. But I guess we can't let little semantics get in the way.
Rick, weigh in here and maybe explore the hypothetical with us if you can. If this does ultimately become a one-on-one race with Andrew Cuomo versus Zohran Mamdani, does Andrew Cuomo have a shot here?
Well, assuming that the Sliwa and Adams have probably somewhere between 25 and 30% of the vote, that shift makes a difference, right? I mean, that would be a material impact on the race if it all went to Cuomo. The problem is we don't know if they're all going to go to Cuomo. A lot of them are going to probably just stay at home. A lot of Republicans who back Sliwa are never going to vote for Cuomo. They're never going to vote for Mamdani, so they're not going to vote. So it's kind of hard. It's very much a moving average, right? But without them out of the race, there's no chance Mario Cuomo can win. And so it's really just a shot in the dark at this stage. You've got only a few months left before the election. This is going to take some time to sort of play its way out as far as getting these folks out, and a lot of attention on Adams and this offer potentially to become an ambassador or something like that. Yeah. But we're not hearing much about Sliwa, who's got more support than Adams does, and he's already said, "I don't want a job." Which would make sense. Right. So how do you get him out of the race? Because he's really probably the more important candidate to move out of there than Adams at this stage, just because of the basis of he's got twice as much support.
Curtis Sliwa got the whole makeover and everything. I mean, he's not going to drop out of the race now, I'm guessing, right? By the way, I'm guessing Andrew Cuomo would love to get some Mario Cuomo signs up there. I know we're both old, Rick, but Andrew Cuomo, of course, who we're talking about here. But I'm curious, Rick, Jeannie touched on something important. I thought Mamdani was the foil that Donald Trump wanted for the next couple of years. Do you believe his intentions here?
Not really. I mean, look, you got to understand. And by the way, sorry for that Mario slip. I've been fighting him, for most of my career, so he's still embedded in my brain. Donald Trump has a lot of his business in New York. He has a lot of assets in New York. He is a Floridian now, but his entire life has been defined by New York. And I do think there is an aspect to that is, all his friends, a lot of the people sitting around at dinner last night, have homes in New York. They don't want to see a socialist, as Jeannie puts it, put in as mayor. And so, we're going to have a time of our life if he becomes mayor, and, we can talk about this leftist surge inside the Democratic Party, and it'll be very hard for Democrats to run away from their largest city mayor in the country. But at the end of the day, it's bad for New York City. Donald Trump knows that. So I think a lot of what's motivating him is to, do no harm to New York City, his assets, his businesses, his friends' businesses. I mean, it could be having a dramatic effect on his opinion about what to do about this race.
Jeannie, weigh in here. Again, explore the hypothetical with me. If Eric Adams is no longer in the race and he is being considered for many roles within the cabinet, whether it's at HUD or whether it's in Saudi Arabia, would Eric Adams make a good ambassador? What do you think?
Well, he hasn't made a very good mayor. So maybe it would be a better job for him than the mayoralty. He was subject not long ago to public corruption charges that Donald Trump's DOJ pulled back on, and those were dropped. So this is somebody with a record. This is somebody who has had, a lot of serious charges brought against him. By the way, Andrew Cuomo as well. Certainly neither of them found guilty or anything like that, although Governor Cuomo did, leave his very important post as a result. I would say a lot of this is being driven by polls, which show that if it's a two-way race, Andrew Cuomo certainly can be competitive with, even one poll showing him beating Mamdani. That said, he lost to Mamdani in the primary by double digits. I would also say there is a very serious concern, I would think, amongst Donald Trump and many people in the administration, that the financial capital of the world would be, certainly America, but the world as well, would be run by somebody who describes themselves as a democratic socialist and has policies that are very, very out of the norm of what we have seen in the United States. There was a very interesting study, he talks about no need for billionaires, but roughly half of the income tax in New York City is paid for by the top 2%. Imagine what that would do to New York City if those people flee, and flee they might. So there's a very real, serious economic repercussions to all of this, depending on if he does win. And he certainly could win if things stay as they are now.
Well, President Trump is not only weighing in on the New York mayoral race, he's weighing in on what will be a barn burner of a congressional race now that Jerry Nadler has decided to not run for re-election. And he's on Truth Social about this too, Rick Davis. The president writes, I'll be careful here, but this is the president. Jerry Nadler, one of the most disgusting congressmen in USA history, is at long last calling it quits. He's finally leaving Congress. I've been beating this bum, he says, for 40 years. First as a New York City developer where he opposed me for no reason at every corner, but could never stop me from getting the job done. He goes on to talk about then running against him as president, where this psychopathic nut job together with crazy Nancy Pelosi impeached me twice and lost. I could keep going. If you're with us on Bloomberg TV, you see it's a pretty long post here. Rick, we've got less than a minute. Will Donald Trump be stumping in New York for these two races?
He may stump if there's a decent Republican in the Nadler district, which may be irrelevant because it's a pretty Democratic district. And you can tell, Nadler should be very happy that he has had such a big impact on the psyche of Donald Trump. That's pretty impressive.
He calls him a lightweight in the same post. I don't know. We got to pick one. Rick, thank you. Jeannie, thank you. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano. We always learn something with these two. An important conversation ahead with Austin Goolsbee, only here on Bloomberg TV and radio. Great to have you with us on the Friday edition of Balance of Power. Jobs Day, and a lot of questions about the trajectory of our economy as we head for the next Fed meeting here. Creedy, there are concerns about a slowdown in the job market, which may well justify the interest rate cuts that President Trump has been pushing for.
There's the slowdown. We knew we were kind of getting on the off-ramp of hiring anyway.
Yeah.
But the margin of that off-ramp is really what's surprising here. The estimate was 75,000. We're getting 22,000. We had Anna Wong earlier come and talking to us about the fact that we might actually get an upward revision, but even, say, 50,000, which was her best-case scenario, doesn't sound too juicy.
You'd still be short, I guess, technically, of the estimate in this particular case. I'm glad to say that we're joined today in Washington by Michael McKee. He's been down for a couple of days with the Stephen Myron hearing, and now for an important conversation that we're going to bring you with Austin Goolsbee, of course, the president of the Fed Reserve Bank of Chicago. Michael is Bloomberg's international economics and policy correspondent. And this is the day before the blackout period starts. So this is the last we're going to hear.
We got about 10 hours to go. So we're hoping that we can squeeze in 9.5 with Austin here to get the full view of what the Fed is thinking.
Well, what's on your mind as you read the data this morning? The White House is framing this as kind of a one-off, even though last time we got a bad jobs report, the BLS commissioner was fired. Michael, how do we interpret this?
Well, that's an improvement, I suppose, in the White House response.
Yeah.
You can't blame him. It's the same thing for any party. When the news is bad, you try to spin it as good. In this case, the news is bad. But the president may get
what he was looking for. It's not the reason he wants to get what he was looking for, but it's likely he's going to get interest rate cut. So, I mean, we'll ask President Goolsbee about that in a few minutes. Sure. But it seems like Jay Powell set the stage for that, and these numbers certainly ratify that decision.
There were still questions, though, about just kind of hiring pauses or freezes that we saw where we did have that negative revisions number. Are we expecting a bounce back here? If this is a one-time data set, does it get better from here?
There is a lot of theorizing that it probably will, that maybe this is kind of the low period right now, that once the uncertainty over tariffs lifts some more and the stimulus from the big, beautiful bill starts to flow into the economy, that company investment will pick up and that maybe some of this will rebound, but we don't know for sure.
Well, it's a great pleasure to have you with us here in Washington, and of course, President Goolsbee in Chicago. Michael, why don't you take it away? We're going to be watching and listening.
All right. We'd like to welcome Austin Goolsbee to our broadcast of Balanced Power here on Bloomberg Television and on radio worldwide. Austin, you heard us talking here, 22,000 jobs, 4.3% unemployment. How's that economy of yours holding up?
Well, you never make too much of any one month, but it's definitely below what we would consider the break even for job growth. The only thing I want to highlight is we're getting some cross currents in the data, and so we want to be careful thinking about where we are in the business cycle. We know that in 2024 and going back into 2023 as well, when immigration was high, we were getting jobs numbers of 185,000 a month, which was faster than the break even, but it wasn't a very good indication of where we were in the business cycle. And that could be at work in these numbers too, that they could be artificially lower than the break even because immigration's going the other way and labor supply the other way. So for me, I like looking at a broader portfolio of numbers, and I think things that are rates and ratios prove to be a little more accurate as indicators of business cycle last year. Those include the unemployment rate, the layoff rate, the vacancy rate, the hiring rate, and you see some stability on those.
You've called them the four horsemen of the labor market.
Yeah, the four horsemen of truth on the labor market. Yeah.
The labor market does seem, though, to have deteriorated some. Does this report today basically lock in a rate cut for September 17th?
You know the rules. I'm not allowed to speak for the rest of the Fed, the FOMC. I'm only speaking for myself. I want to get more information. I'm still undecided as we're going into this. If it looks like the labor market is deteriorating on grounds more than just the monthly payroll numbers, because I want to emphasize again, when you have population growth changing around behind the scenes, just the aggregate monthly payroll growth is not a great indicator of the business cycle. If we start to see deterioration across all the four horsemen of truth in the labor market, the unemployment rate, the hiring rate, if we were to start seeing layoffs, then I think we would be nervous on the employment side of the mandate. But we can't disregard, we got to look at the inflation side too. And the more mild numbers we get on inflation, the better I'll feel about just focusing on the labor market. But in the last inflation reports, we also had this uptick in inflation coming from services. So I think we want to make sure that that's more of a blip and not a more ominous indicator.
Well, let me ask this. Because you'll be in the blackout when we get the CPI report next week, what would it take for you to hold off on a rate cut in terms of an inflation result?
It's not going to be a specific number. If you saw X number, then you would change. It would be, we're trying to get the through line of where the economy is. And one side of that shows relative weakness in the job market, at least measured by monthly payroll, more stability looking at more accurate measures. And then on the other side, if the inflation numbers come in and they give some indication that the inflation from tariffs is not looking to be persistent, or that the uptick in inflation on services, again, does not look to be persistent, looks to be more like it was just a temporary blip in the data, then that would provide comfort to me that we're still on what I was calling the golden path, and that rates can come down a fair amount.
Well, the administration thinks that you've fallen off the path. The universal response from administration officials today, including the president, is that you're still too late, that you should have been cutting earlier.
Factually, yes, that is what they said. I mean, my view is we go to the FOMC meeting and we look at the data and the economic outlook as best we can to figure out the through line. A lot of people outside the FOMC have a lot of opinions, but the independence of the monetary authority from political interference is critically important if we don't want inflation to come back.
Well, for the economy's sake, are you behind the curve?
It depends what you make of what the through line is on the economy. So, as I say, if you take the payroll employment numbers, they show weakness. If you take the open job vacancy rate or you look at the layoff rate, they don't show weakness. They show pretty stable full employment kind of values, sort of where they were, or sometimes even better than they were pre-COVID in what was a pretty tight labor market. And on the inflation side, we've had some really benign readings, which would not give you any indigestion on that side. But we now have at least one report where you see services inflation bumping up, and services inflation is not a thing that would likely be coming from tariffs. So it would tend not to be a one-time cost increase. So we got some currents that we have to balance out here, and that's fine. This is what always happens. There are conditions change. The central bank is supposed to be the steady hand, and there's political argument and there are market arguments, up, down, sideways. They have a lot of variability, and as I say, we're supposed to be taking the steady hand and figuring out the through line.
Well, the president's argument seems to be, at least the way he was talking last night, as, yeah, these numbers may be bad, but kind of channeling his inner Brooklyn Dodger fandom. He said, wait till next year. Next year, when all these tech palaces are built, we're going to see hiring like crazy. You've got to put in a new forecast for unemployment and for inflation at the next meeting. Do you see a rebound ahead and stronger economic growth and employment growth in 2026?
Yes. I mean, I think to me, until we get more convincing evidence, otherwise, I still think we're most likely in a kind of a full employment space where we're generating jobs and the economy continues to grow. This slowdown in payroll employment, the aggregate jobs number, as I say, you got to be extremely careful taking that as an indicator of the business cycle when things like immigration or labor supply and labor force participation are moving around behind the scenes. So to the extent that anybody's saying they think it's a strong job market and the job market may get even stronger going into 26, that's entirely a possibility. And that if it is, to me, that's still on the golden path, that we're around stable full employment.
We can't, unfortunately, avoid politics in these situations these days. Just a few hours ago, Treasury Secretary Scott Bessent came out with quite a broadside against the Fed in the Wall Street Journal, laying out a lengthy bill of particulars against the central bank. Your research is bad. Your forecasts are bad. You've contributed greatly to income inequality. You've destroyed the housing market, blurred the lines between fiscal and monetary policy, and created a culture in Washington where policymakers rely on the Fed to bail them out after they make poor fiscal choices. Are these criticisms fair or unfair?
Look, that's for the American people or the pundits or somebody to decide. Like I say, what we do at the Federal Open Market Committee is go down there as a collection and do what the law requires us to do. That is, set monetary policy based on maximizing employment and stabilizing the prices. At a moment like this, where we're getting shocks that are pushing us in a stagflationary direction, driving down employment and driving up prices simultaneously, that's a difficult environment for the central bank to be in. I've been in the Fed for coming on 3 years, so I don't know about the long historical litany of complaints that someone might have. Overall, we just go there and do our job. That's what the law requires us to do. And so I'm not going to get into a political argument about it.
Well, let me ask it this way. One of the criticisms he makes is that the Fed has a gain of function problem. In other words, since the great financial crisis, you've had a lot of tools to the toolbox, including quantitative easing, forward guidance, things like that. And the Fed also strayed into climate change. You've heard those arguments before, and other things like that, the fate idea for inflation. Are any of those valid, and is anybody at the Fed working on whether or not they have worked as you hoped and should be kept in the toolbox?
Well, yes, people are working and thinking about that all the time, both at the Fed and among economic researchers, monetary researchers around the country. As I say, these are a bunch of things that are from the years before I was at the Fed. I'm certainly not going to speak to them. I don't have any privileged information about how those were determined. I think on overall dual mandate grounds, you have to say that as you look at 2023 and 2024, we've got the inflation. We're coming off a period where inflation was well higher than the 2% inflation target. But we succeeded in getting inflation down almost as much as it has ever fallen in a single year. And for the first time ever in the United States and probably of any rich country in the world, we had that massive drop of inflation without having a recession, without the unemployment rate rising dramatically. And that's what we should be trying to do. That is absolutely our goal, to carry out the golden path and to continue to carry it out now. And that involves figuring out the through line of where we are in the economy, not overreacting to 1 month's report or 2 weeks, what happened in the market 2 weeks ago. The law is very clear. The FOMC stabilizes prices, maximizes employment. Doesn't say anything about make administrations happy, make the stock market happy. None of those are in the mandate. Congress has given us the mandate.
You know, they might want to change that mandate down at 1600 Pennsylvania Avenue. Ultimately, Treasury Secretary Bessent says what's at stake is the Fed's credibility and political legitimacy. Have you seen signs, or has anybody suggested to you that either of those have diminished?
No, I agree with those sentiments. The credibility of any central bank, and the Fed especially, is critically important. So that when you go through episodes like happened coming out of COVID, where inflation goes way up, but if you look at market expectations of what inflation would be in the future, people believed the Fed when it said we're going to get inflation back down to 2%. That is a sacred covenant between a central bank and the American public, that it's going to do the job as the law requires it. So everyone I know involved with the Fed system is open to criticisms, critiques, and analyses of models. How can they be improved? Of forecasts, of the Fed tools. All of those things should be on the table. We should have an adult conversation about those. How can we improve our decision making? That's something different than should there be political interference with the setting of monetary policy? Should the central bank not be independent? And I'm totally opposed to taking away the independence of the central bank, as are unanimously all economists that I know of, because just look at places where there is not central bank independence. Inflation comes back. Growth is slower. Unemployment is worse. So we really don't want to go there. And I don't think that's what they're calling for.
Unfortunately, I have to ask you one more question. Stephen Myron looks like he will be joining you at the 16th and 17th of September meeting. He had some nice things to say about you in his paper on Fed reform last year. Was your appointment sinister? Does he have a point about a revolving door between political administrations and people who are on the Fed?
Look, I'm not going to get into policy. He said my appointment was sinister. I served in an administration, and some 12 years later, I joined the Fed. So I think it's a little strange to call that a revolving door. But I look forward to meeting Stephen Myron, and I'm proud. He's coming from the Council of Economic Advisors, which was he had the same job I had 12 years before I joined the Fed. And there's a long history of CEA folks coming over to the Fed and doing a very effective job. I think anybody who comes and joins the FOMC is going to take the job very seriously. It's an important function, and we all just go down there and try to maximize employment, stabilize prices. That's what the law says.
Well, Austin Goolsbee, thank you very much for being diligent enough to come talk to us, and hopefully you'll talk to us shortly after the next meeting. I suspect it's going to be a very interesting meeting. Austin Goolsbee from the Chicago Fed, president of the Chicago Fed, former chairman of the Council of Economic Advisors, as he noted, someone with a vast experience in Washington and in monetary policy.
Sinister, huh? Interesting that he has not made up his mind yet. This meeting is days away.
Well, I kind of wonder. I mean, we don't have time to really go into depth with him, but I was wondering what other indicators he was expecting. Right. There'll be another jobless claims report, but that's about it in terms of the labor market between now and the meeting. I think if you read between the lines, he's saying he's open to a rate cut as long as inflation doesn't come in bad.
Mm-hmm. The piece on the labor market that I thought was crucial, he said, well, there's no layoffs just yet. That would be the alarm bell they're ringing. But anecdotally, we've heard of these hiring freezes, hiring pauses on Wall Street, in the tech space as well. Is it just a matter of time? Is that kind of where Austin Goolsbee is leading us?
Well, we're kind of at an inflection point. We don't know which way it's going to tip. Companies have been telling Fed officials for quite some time that they are on hold. They don't know what's going to happen to the economy, so they're not hiring. They're not adding to their expenses. We're starting to see some companies say we need to trim because the uncertainty just goes on. Mm-hmm. But do they start to trim a lot of people? That's the issue. The Fed watches the unemployment rate because it tends to, as Claudia Sahm always says, tends to start going up fast once it starts going up. And it went up for the last 2 months in a row. So if that continues, then we might see that. But we just don't know yet.
Well, real pleasure to have you playing into Balance of Power today, and thank you for bringing us that important conversation. Michael McKee, always a pleasure to have you in Washington for that matter. He'll make his way back to World Headquarters in New York, where we have Bloomberg Business Week Daily standing by. Alongside Kriti Gupta in Washington, I'm Joe Matthew. We'll meet you back here at 5 p.m. Eastern for the late edition of Balance of Power. Right now, Carol Massar, Tim Stenevec. Take it away, guys.
इंडियन मार्केट भी क्लोज होने वाला है, 15 मिनट रह गए हैं। नेचुरल गैस बहुत ज़्यादा ही साइडवेज है। देखो अगर ये नहीं आती है ना यहाँ पर सेलिंग, ऐसा थोड़ा स्ट्रिक्ट रखना, क्योंकि नॉर्मली तो अभी तक सेलिंग आ जानी चाहिए थी। इसको भी थोड़ा सा अब छोटा कर देते हैं, काफ़ी बड़ा लेवल है, लेट इट गो। सेलिंग आ जानी चाहिए नेचुरल गैस में अब फटाफट से। इतना देर लगाएगा तो थोड़ा सा याद रखना ब्रेकआउट के लिए ना चला जाए। इसमें एसएल भी छोटा कर देते हैं। ठीक है, अब थोड़ा सा रिस्की है तो एसएल भी छोटा ही रखो अब इसमें, बड़ा एसएल रखने की ज़रूरत नहीं है। ठीक है, तो लॉजिकली तो सेलिंग आ जानी चाहिए अभी तक। जितनी देर रुकेगा ब्रेकआउट के लिए जाने की कोशिश कर सकता है, तो लेट्स सी। इससे बड़ा एसएल मत रखना, बहुत छोटा एसएल है, 1.5 पॉइंट का, 1.5 पॉइंट इनफ है। आनी होगी सेलिंग आ जाएगी, नहीं तो एसएल जाएगा छोटा सा ही नीचे। टारगेट हमारे पास वही 270 271 के आसपास टारगेट रहेगा। यहाँ पर सेलिंग नहीं आई तो इसके इसके ऊपर एक लेवल है वो भी टेस्ट हो चुका है, तो आई डोंट नो वहाँ से अब सेलिंग आएगी भी नहीं आएगी। भी एक रेजिस्टेंस है, बट ये भी अब ये टेस्ट होके बैठा हुआ है ऑलरेडी 2 बार। बस लेवल है जो टेस्ट होना था पेंडिंग, हो गया है ऑलरेडी। ना ही आए तो बेटर है, यहीं से अगर सेलिंग आनी है नेचुरल गैस में आ जाए। लेट्स सी 330 के बाद तो वॉल्यूम थोड़ा बहुत इंक्रीज हो ही जाएगा। ठीक है, एसएल थोड़ा छोटा ही कर देना अब नेचुरल गैस में, क्वांटिटी का भी थोड़ा ध्यान रखना। मिनट है इंडियन मार्केट क्लोजिंग में। क्रूड ऑयल भी साइडवेज ही है, ओवरऑल देखोगे तो 30 पॉइंट की रेंज में घूम रहा है क्रूड ऑयल भी। ये क्या यहाँ तक गिरने वाला है क्या? वाह, यहाँ से तो ऑलरेडी सेलिंग आ गई। डेढ़ परसेंट यहाँ गिरा, उसके बाद फिर 3.5% यहाँ गिरा है, 3% भी नहीं, ऑलमोस्ट 6% यहाँ गिरा है। यहाँ से एक बार और गिरेगा तो परसेंट समथिंग अराउंड। क्रूड ऑयल में वेट करना, भी क्रूड ऑयल में भी रीटेस्ट जोन जरूर है, तो थोड़ा सा वेट करेंगे। अगर देखते हैं यहाँ पर मिल गया। कि इंडियन मार्केट 4 मिनट में क्लोज हो जाएगा. लेट्स सी वॉल्यूम इंक्रीज होता है तो नेचुरल गैस और क्रूड ऑयल में. इंडियन मार्केट क्लोज बाकी अब सीधा 5:30 पे न्यूयॉर्क सेशन की ओपनिंग है एंड 7 PM यूएस मार्केट ओपन ऊपर का लेवल रिमूव भी कर दो, ठीक है, जरूरत ही नहीं पड़ेगी उसमें। नेचुरल गैस में बार बार रिपीट कर चुका हूँ, मल्टीपल टाइम टेस्ट कर चुका है इस लेवल को। सेलिंग थोड़ी आ जानी चाहिए थी, अभी तक नहीं आ रही है। इट मीन्स कहीं ना कहीं थोड़ी प्रॉब्लम क्रिएट कर सकता है। अब अगर ऊपर जाता है, जो कि जितनी देर रुका रहेगा, ब्रेकआउट होने के चांसेस उतने ज़्यादा है। सेलिंग थोड़ी फास्ट आ जानी चाहिए। तो अपना एसएल को स्ट्रिक्ट रखना, थोड़ा छोटा भी कर सकते हो एसएल को, एंड क्वांटिटी थोड़ी कम भी कर लेना। ये क्या हो गया?
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
News when you want it with Bloomberg News Now. I'm Lisa Mateo.
And I'm Karen Moscow.
Thank you, Karen. We begin with geopolitics and President Trump's comments on a variety of global issues over the weekend. The president spoke about the war in Ukraine after indicating he was ready to ramp up sanctions on Russia without providing details. He spoke with reporters at Joint Base Andrews in Maryland.
I settled 7 wars. This, I would have said, would have been maybe the easiest one to settle of all. But with war, you never know what you're getting. But we're going to get it. I believe we're going to get it settled. But I am not happy with them. I'm not happy with anything having to do with that war.
President Trump's comments come as a massive Russian air assault struck a key government building in Kyiv, killing at least 4 people and injuring dozens.
And Lisa, U.S. Treasury Secretary Scott Bessent also commenting on secondary sanctions over the weekend, saying they could lead to an eventual deal.
If the U.S. and the EU can come in, do more sanctions, secondary tariffs on the countries that buy Russian oil, the Russian economy will be in full collapse, and that will bring President Putin to the table.
And U.S. Treasury Secretary Scott Bessent made those comments on NBC's Meet the Press, which you can hear Sundays on Bloomberg Radio.
Meanwhile, the EU preparing new sanctions and secondary tariffs on oil and banks to further squeeze Russia's economy and pressure Vladimir Putin to negotiate an end to the war in Ukraine. The possible package comes as a delegation of EU officials head to Washington this week to discuss the potential for joint action.
Well, Lisa, the president also commented on the Israel-Gaza war. In a post on social media, President Trump wrote that Hamas needs to accept his terms to end the fighting, writing, "This is my last warning." Last week, President Trump's envoy to the Middle East, Steve Witkoff, sent a new proposal to Hamas for a hostage and ceasefire deal. The president talked about the prospects of a deal last night.
It's a hell of a problem.
What gives you
Again,
that
it's a problem we want to solve for the Middle East, for Israel, for everybody. But it's a problem we're going to get done. So they have hostages. It could be a little bit less than 20 because they tend to die, right? They tend to die. Even though they're young people largely, they're dying.
President Trump's proposed deal would reportedly include the release of all remaining hostages in exchange for ending the war in Gaza.
Turning now to Boston, Karen, where federal immigration agents conducted raids across the city and nearby communities, arresting dozens of people. The Justice Department filed suit against the city and its mayor, intensifying a clash over local sanctuary policies, with Attorney General Pam Bondi calling Boston among the worst sanctuary offenders in America. President Trump has also threatened to send forces into Chicago to tackle crime.
We're not going to war. We're going to clean up our cities. We're going to clean them up so they don't kill 5 people every weekend. That's not war. That's common sense.
President Trump's border czar, Tom Homan, is further promising enforcement activities in Chicago and other sanctuary cities across the country.
Meanwhile, Lisa, in New York, Zohran Mamdani, the frontrunner in the city's mayoral race, says the city should brace itself for a deployment of National Guard troops.
We have to prepare for the inevitability of that deployment. We cannot try and convince ourselves that because something is illegal, Donald Trump will not do it.
And New York City mayoral frontrunner Zohran Mamdani made the comments at a rally with Senator Bernie Sanders over the weekend. President Trump has so far deployed National Guard troops in Los Angeles and Washington, D.C.
And in Georgia this weekend, Karen, federal agents detained 475 people at Hyundai's manufacturing complex as part of a months-long investigation into employment practices. The majority were Korean nationals, and people working unlawfully were turned over to ICE for removal proceedings. Hyundai said it was closely monitoring the situation, adding that production at its electric vehicle assembly plant nearby wasn't interrupted.
Let's turn overseas now, Lisa, and a major story in Paris. France's government could collapse today, with Prime Minister François Bayrou expected to lose a confidence vote in Parliament. Bayrou called the vote in a bid to pressure lawmakers into backing his budget plan, which includes spending cuts and tax hikes. Earlier, Prime Minister Bayrou spoke on French television.
de vivre une situation qui menace.
We are experiencing a situation that threatens the very future of the country, and everyone is whistling as if it doesn't exist. Everyone is looking the other way. Everyone is using the answers we could have provided to gain electoral advantage.
And Francois Bayrou speaking there through an interpreter. If the government collapses, President Emmanuel Macron could name a new prime minister or call fresh elections for the National Assembly.
Over in Asia, Karen, Shigeru Ishiba has announced that he will step down as Japan's prime minister. The move follows calls for his resignation after back-to-back election losses that cost his party its parliamentary majority. However, with no clear successor, his departure is likely to fuel uncertainty among investors. Japan's currency already slid against the dollar on concerns political instability will reduce the prospect of the Bank of Japan raising rates.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. Carlos Alcaraz, Yannick Sinner meeting in the Grand Slam final for the third straight time. Alcaraz won the French, Sinner won at Wimbledon. It was Alcaraz's turn. He won the U.S. Open final in 4 sets. What a wild Sunday night football game in Buffalo. Baltimore had a 15-point lead with 4 minutes to go. The Bills scored 2 touchdowns, then got a game-winning field goal from Matt Prater, who they had just signed days earlier to replace Tyler Bass. The Bills won by 1 point. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Lisa Mateo.
I'm Karen Moscow, and this is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity futures.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
Heard about it yesterday. At the same time, ICE was doing right because they were here illegally. But we do have to work something out where we bring in experts so that our people can be trained so that they can do it themselves. Does that make sense? Right? Is it straining the relationship with Korea at all? No, we have a great relationship with South Korea.
President Trump there commenting on the immigration raid at the Hyundai Motor LG Energy EV battery factory in Georgia. All of this at a time, of course, when the U.S. and South Korea have just struck a trade agreement, not to mention that Korean companies have now agreed to invest hundreds of billions of dollars in the United States. We'll be watching Hyundai Motor down more than 1.5% at the moment. We have seen them pledge $26 billion through 2028. But of course, Hyundai's broader EV production plans now in question given this immigration raid. We know that the construction on the Georgia plant has been temporarily paused. When it comes to South Korea's government, it secured the release of hundreds of their citizens detained in that U.S. immigration raid in the state of Georgia. Let's bring in Bloomberg Seoul Bureau editor Danny Thomas for more on this story. Danny, so what do we know at this point about what triggered this investigation and where these citizens go from here?
Well, this is, according to ICE, this was in the works for many months. So it only got concluded on Friday. In terms of what happens next, I think the discussion around releasing them has been concluded, and what we understand is that on Wednesday there will be a chartered flight which will bring most of these detained workers back to South Korea. In terms of the diplomatic kind of the rift now, the foreign minister of South Korea is going to be heading to US today. And I think some of the industry lobby groups, what they're trying to get the message across to US is that they don't want to see a repeat of this, because more important, I think South Korea feels a bit betrayed that just 2 weeks after some of the biggest companies came out with big investment pledges, you see the workers being detained. And the images and the footage and the photos of that being released was a bit of a blow to South Koreans here. So that is what the message the foreign ministers will be trying to convey, and trying to make sure that the visa issues that have previously also come into the picture get resolved in a way that, you know, these kind of humiliation is not repeated.
This came from the president this morning on social media. It looks like we've lost India, and Russia for that matter, to deepest, darkest China. May they have a long and prosperous future together. This relationship between the US and India has clearly soured. You yourself said earlier this year that India rubbed the US the wrong way. There's an understandable tension that continues to build. But they're not the only ones buying Russian energy. The Chinese are buying Russian energy, and for that matter, the Europeans too. And I think there's a sense from the Indian side, Mr. Secretary, that they feel singled out, perhaps unfairly. What's your comment, your message for them this morning?
Well, remember, before the Russian conflict, the Indians bought less than 2% of their oil from Russia. Less than 2%. And now they're buying 40% of their oil from Russia. What they're doing is, because the oil is sanctioned, it's really, really cheap because the Russians are trying to find people to buy it. And so the Indians have just decided, the heck with it. Let's buy it cheap and make a ton of money. But you know what? That is just plain wrong. It's ridiculous. And they either need to decide which side they want to be on. You know, what's funny is, remember, the Chinese sell. The Chinese, well, we're always willing to talk. The Chinese sell to us. The Indians sell to us. They're not going to be able to sell to each other. We are the consumer of the world. People have to remember, it's our $30 trillion economy that
out for that in the Asian session. But let's turn to our top story today, because it's really about outgoing Japanese Prime Minister Shigeru Ishiba's resignation, setting in motion a leadership race that will be closely watched by global investors. Let's bring in Bloomberg Politics and the economic reporter Sakura Murakami here. Sakura, and we were expecting the Prime Minister to resign given the increasing pressure, but it came a little bit earlier over the weekend. What set this in motion?
So ultimately, it comes down to the two bruising national election losses that Ishiba oversaw while he was prime minister. There was this growing momentum within the party to try and bring him down. There's no protocol within the Liberal Democratic Party to oust a sitting prime minister who's unwilling to go. So that's why they were going to hold this vote on whether to bring up and to hold an early leadership race, which would technically have been an ouster. Surveys over the weekend show that there was growing momentum, that it looked increasingly likely that the LDP was going to kind of hold a no confidence motion against Ishiba. And then ultimately, he had a chat with former Prime Minister Suga and also kind of Prime Minister hopeful Shinjiro Koizumi. And those two people are powerful, well-known figures within the LDP. They supported Ishiba, and without their support, Ishiba would not really last. So that's probably what triggered his resignation.
And you mentioned Koizumi, for example, as a prime minister hopeful. Who are the other contenders right now in the running?
So the two top contenders right now, we've heard Toshimitsu Motegi is planning to run, but the real focus will probably be on Sanae Takaichi, who is a protege of former Prime Minister Abe, and as I mentioned, Koizumi, Shinjiro Koizumi, who's the son of a maverick reformist former Prime Minister Junichiro Koizumi. The focus, especially on Takaichi, will be she's very much for fiscal stimulus, so that would probably impact markets. And also, would be the first female prime minister, whereas Shinjiro Koizumi, he's 44, young, fresh-faced, very media savvy, has very broad public appeal. So they both have their weaknesses and their strengths. It'll be up to the LDP to decide who they want to see lead the party.
As we watch for who these contenders are going to be, what's the next step for the LDP? What are the signs to look out for in the coming weeks?
So, as I mentioned, Koizumi and Takaichi all have their respective strengths. They appeal to different demographics, especially Takaichi would appeal to kind of more right-wing and conservative base. Koizumi has more of a broader appeal. So the next focus will be how the LDP holds its leadership race. And there's a shortened, abridged version that they can hold, and then there's like what's called the full spec version, or like the full version. And depending on which they hold, the number of votes that are allocated to normal, regular, rank-and-file LDP members, normal people who pay their membership fees and support the LDP, the number of votes that are allocated to them differs. And so if it's a full spec version, then Koizumi would probably have an edge because he has broader public appeal. Whereas if it's if less votes are allocated to those rank and file members, Takaichi would probably have more of an edge because she has more support within the party, within the LDP lawmakers.
Bloomberg Japan politics and economics reporter Sakura Murakami here joining us in Tokyo. Let's bring in Amy Catalinak, Associate Professor of Politics at New York University, where she focuses on Japanese politics as well. Great to have you with us. Of course, we've been focusing on the range of potential contenders for the premiership. But at the same time, when it comes to global investors, they'll be watching what the new prime minister will do in terms of fiscal spending, which will make such a big difference when it comes to Japanese government bonds and also global bonds. What are your expectations of what fiscal stimulus will look like with whoever becomes the next prime minister?
I think it's a little bit hard to say because we're likely to see quite a few contenders in the race. So last year there was an election, obviously, that elected Ishiba, and we saw 9 different contenders, and they all had sort of slightly different views on this. And I think at this time as well, we're likely to see a crowded field. I think it's hard to say, what type of candidate might emerge, but there are a couple of candidates. Takaichi Sanae is one of them, who probably would advocate for more fiscal stimulus and monetary easing. So I know that her stance is pretty clear on that, but some of the others, I think it's a little bit hard to say. Ishiba's decision to step down has literally only just happened, so I'm not sure. We don't have a clear picture yet of who's going to run.
Given that the ruling party lacks the majority in both houses, what does it mean in terms of needing the cooperation of opposition parties, which could mean more spending in the future? And just tell us about the state of the LDP right now.
Yeah, so the LDP has just suffered a really 2 bruising electoral losses. So it's been kicked out of its majority in the lower house last year, and also it's lost its majority in the upper house. So the LDP has to go through a period of trying to figure out what went wrong in these 2 elections. So they're going to be looking for a person who can kind of set the party on the right track and come up with reasons why the party lost some of its conservative supporters in the previous election. It was clear that it did so, and why it also failed to mobilise votes among so-called floating voters, people who are sort of non-partisan and don't have strong attachments. So the opposition, but as you said, Prime Minister Ishiba, who's now stepping down, one of his sort of signature achievements, I think, while he's been in office, was his astute management of relations with the opposition. So since October last year, the LDP has been in a minority in the lower house, and Prime Minister Ishiba was very good, in my opinion, at mobilising support among this party for this bill, that party for the budget, another party for the supplementary budget. So he did a very good job of managing relations with the opposition parties. And whoever the party selects now to replace him is probably going to have to draw on that expertise potentially, or maybe the party will try and choose someone with that expertise because they don't have a majority. So the first thing the person has to do, by the way, is actually win the vote in the lower house to become Prime Minister. And so that in and of itself is going to require because the party doesn't have a majority, it's going to require some people from the opposition. So that was something Ishiba did quite well, and so the party will probably be thinking about that as they choose a potential contender, his replacement.
Professor, as we were hearing from our colleague Sakura earlier, we are also waiting to hear whether this leadership election is going to be a full spectrum one or under emergency rules. How might either way shape the outcome?
Yeah, so the full spec version is the one that we had last year, the one that elected Ishiba, and that's one in which the rank and file get to vote. And there's about 1 million LDP members right now, and they all cast their ballots. They all get sent ballots in the mail. They cast their ballots, and they're translated proportionally into the same number of votes that the LDP diet members have. So that's the full spec version. The abridged version, the sort of the quicker version, can take place via a plenary session of people in both houses of the Diet who are LDP politicians. And in that instance, each LDP politician, there's 295 right now, they have one vote each. And the prefectural chapters, of which there are 47, so the party has 47 prefectural chapters around the country, they all get 3 votes each. And it's also a runoff. So the election rules do differ across the two full spec versus abridged versions. But as the former commentator said, the abridged version gives more weight to diet members' votes. And so the full spec version, all the party members get to vote, and in the second, they don't have the same weight. And so that could lead to the full spec version does prioritise someone with a lot of broad support throughout the country. So I'm not sure exactly how. I don't think Prime Minister has announced which one is going to take place, but there are some slight differences there.
Speaking of support, regardless of who the contender is, what is your sense of how factions within the LDP might provide that sort of support, including Taro Aso's faction, for example?
Yeah, so the reason that we saw such a crowded field last year with 9 contenders, and we're likely to see sort of quite a few people this year, is that factions have really, they've been substantially weakened. So they've basically been dissolved last year in response to the slush fund scandal. So I see there are sort of 2 groups that remain, but I don't see them as having a lot of power actually in this vote. I think it's likely that people are going to vote according to who they think should become the party leader. However, if you are a faction leader, you have a sort of an incentive to sort of argue that you played a role in the election of this person because you want that person to help you and to help you please your faction members and pass policies that you want after the election. But I don't see factions as playing a big role in this election at all. There could be some, maybe in the runoff and the convincing people to change who they voted for it if there is a runoff. In those scenarios, the 2 remaining groups might play a role. But in general, I think we're going to see a lot of contenders and people will probably vote according to who they think can sort of take the party ahead and try to recoup some of its support that it's lost in these 2 previous elections.
Amy Katalinak, really good to have you with us, Associate Professor of Politics at New York University, as we continue to follow the fallout from the resignation of Japanese Prime Minister Shigeru Ishiba. Take a look at how U.S. futures are trading at the moment. We're seeing upside after stocks fell on the Friday session. We had that data showing sharp cooling in the jobs market, which also led to treasuries rising. That flight to safety, but also investors pricing in Fed cuts on that self-labor data. We continue to watch the bond markets very closely. Given what's happening here in Japan, we have seen global yields spike higher with JGB yields when there's change here in the country. Take a look at Brent crude, very important because we saw the production boost coming from OPEC+. More ahead on the Asia trade. This is Bloomberg.
At that whole situation. We have a lot of industries that we don't have anymore, and we're going to have to train people. And the way you train people is bring people in that know what they're doing and let them stay for a little while and help. So I'm going to look at that. It's a very interesting situation that took place in Georgia. And we heard about it yesterday. At the same time, ICE was doing right because they were here illegally. But we do have to work something out where we bring in experts so that our people can be trained so that they can do it themselves. Does that make sense? Right?
Is it straining the relationship with Korea at all?
No, we have a great relationship with South Korea. Really good relationship. You know, we just made a trade deal. But I'm going to look at it because I understand exactly what they're saying.
Page 6 crowns you the king of the U.S. Open. They put out all these old pictures through the years of you at the U.S. Open. What does it mean for you to go back after going for so many decades, growing up in Queens? Now you're going back as the president in a different capacity.
Well, I loved it. First of all, the 2 players have unbelievable talent. It just seemed that they hit the ball harder than I've ever seen before. Incredible talent. And I enjoyed it. And I used to go all the time, but, you know, lately it's a little bit more difficult to go. I really enjoyed it. They were really nice. The fans were really nice. I didn't know what to expect. Usually you would say that would be a somewhat progressive, as they say nowadays, crowd. Sometimes some people would call it liberal, but we'll use the word they like to use, progressive. But they were great. The fans were great.
Back on Russia. Russia had a pretty big attack on Ukraine over the weekend.
I know all about it.
You have always said how good your relationship is with President Putin, but he's not really giving you anything that you want. Is that making you less trustful of him?
Well, nobody was tougher in Russia than me. That has to do with the pipeline, as you know, Nord Stream 2 and lots of other things. But I'm not happy. I'm not happy. I'm not happy about the whole situation. You know, it's interesting. It doesn't affect us because it's not our soldiers. But they're losing now. I used to tell you 5,000. They're losing 7,000 between Ukraine and Russia, 7,000 soldiers every single week. It's such a horrible waste of humanity. So, no, I am not thrilled with what's happening there, I will tell you. I think it's going to get settled. So I settled 7 wars. This, I would have said, would have been maybe the easiest one to settle of all. But with war, you never know what you're getting. But we're going to get it. I believe we're going to get it settled. But I am not happy with them. I'm not happy with anything having to do with that war. It's just such a waste of great humanity.
The greatest obstacle to a peace deal in Ukraine?
Say it?
As of right now, what do you think is the greatest obstacle to a peace deal?
Well, we're going to see. I mean, we have some very interesting discussions. You know, Europe, certain European leaders are coming over to our country on Monday or Tuesday, and individually. And I think we're going to get that settled. I think we're going to get it settled. We have to. You can't lose. You know, when they're losing 5,000 to 7,000 soldiers a week for no reason, you have to get it settled. Of all of the wars, whether it's the Congo and Rwanda, they said it was impossible to settle. You look at Every one of these wars were impossible. I got every one of them settled, 7 of them. 7. This was the one I really thought would be the easiest, but it's not. But I think it's going to get settled.
So there was some reporting in Axios that in the last 3 months of the Biden administration, they did about 4,000 pardons. The chief of staff's assistant was sending emails to pardon his own family members. Are you still interested in getting to the bottom of the auto pen scandal?
Well, I think the auto pen is one of the great scandals of our time. The auto pen was our president, or to put it a different way, whoever operated the auto pen was our president. It's not allowed. It's just not allowed. And they gave a pardon to the Unselect Committee after the Unselect Committee realized that that whole situation was a hoax and it was all their fault, including Nancy Pelosi turning down security and all, turning down soldiers. It all came out bad for them. They burned everything. They got rid of everything. There's absolutely nothing there. It's all gone. And that was based on an auto pen. They gave those members of Congress that were on the Unselect Committee, they gave them pardons.
What do you think?
So I think it's a tremendous scandal.
What do you think the media would say if you pardoned your kid their last day in office via an auto pen? Don't you think the media would go?
Well, I think it would have been a big story.
It's a good story.
Would have been. I like this guy.
Multiple times on a Charlotte subway. You've seen this video, and do you have any reaction to it?
Yeah, and where was it? The subway was where?
She was in Charlotte on a light train. She was stabbed multiple times by a...
Horrible. No, I haven't heard. Okay. When did this happen?
It happened in August, but the video just came out.
I see, yeah. I see the video. I'll know all about it by tomorrow morning. Okay? Thank you.
Do you have plans for Chicago this week?
No, not really. Not really. We're going to go someplace. We're picking. Look, D.C. now is 100%. I don't want to say 100, but it's pretty close to 100% healthy, happy, thriving. It's a crime-free zone. You know that. You could go out to dinner tonight, Jeff. You could go out to dinner, and you most likely will not be harmed. You know that. You won't be beat to hell.
There's still some crime.
There's
still some crime.
Very little. And within a week, there will be nothing. Do you agree with me?
I feel much safer walking around. I can't fight though.
No, it's a safe place now. But
you've been talking a lot about Chicago, and there was
Chicago's been talking a lot. So, Chicago last week lost 9 people were killed and 28 people were shot. The week before, it was 7 people were killed and 37 people were shot. The week before that, it was the same kind of number. Chicago is a very dangerous place, and we have a governor that doesn't care about crime. I guess we could solve Chicago very quickly, but we're going to make a decision as to where we go over the next day or two. When you look at what happened to D.C. in a short period of time, honestly, it's amazing. Over a period of 12 days, in other words, on the 12th day, we had the crime just about solved. And right now, people are walking out. They're going out right now to restaurants all over D.C., whereas if you go back a year ago or 6 months ago, nobody was going out. Nobody. We did it in 12 days. Now it's better than it was in 12 days. We'll make it even better, and then we're also going to clean it up. We're going to clean up the city. We're going to make some great improvements to the roads, to the medians, to all of the signs. You got signs that have been up for 30, 40 years. They're worn out. They look like hell. We're going to redo the signs. We're going to put up new signs. It's going to look beautiful. Within a 6-month period, it'll look really beautiful. But you have essentially a crime-free zone. I mean, here we are on a nice Sunday evening. If you'd like, it feels like Saturday, actually. If you like, you could go out and you could have dinner on me, but you wouldn't do that. But you could have dinner on me if you'd like. Go ahead. What else?
When do you plan to speak to President Putin next? And what
Very soon. Over the next couple of days. Look, we're going to get it done. The Russia-Ukraine situation, we're going to get it done. I have confidence we're going to get it done. Think of it. I got 7 done, all of which were impossible to do. If you look at any one of the 7, you know them. I don't have to go through them. Many of them were impossible. One was 31 years 10 million people killed. One was 34 years with 8 million people killed. How about the Congo? They lost 9 million people, and it went on for years with Rwanda. All settled. Everybody happy. The one that I thought would have been, for me, the easiest, because of Putin, I thought that would have been, it's not turned out that way, but we're going to get it settled.
You brought him in to discuss the Gaza issue and help make peace in Gaza. What's some of the advice he's giving to you, and why did you bring him back in to work on this deal?
I think we're going to have a deal on Gaza very soon. It's a hell of a problem.
What gives you
Again, it's a problem we want to solve for the Middle East, for Israel, for everybody. But it's a problem we're going to get done. So they have hostages. It could be a little bit less than 20 because they tend to die, right? They tend to die. Even though they're young people largely, they're dying. Young people don't die. Young people stay alive. But with this whole thing, they tend to die. But we have, let's say, 20 people, and we have about 38 bodies. Bodies, meaning bodies.
Are you confident you can get them all released?
Yeah, I think so. I think we're going to get them all.
Did you see the turnover of the Japanese Prime Minister stepping down? Do you have any reaction to that?
No, I was surprised because I knew him. I liked him. And he's just now stepping down. A little bit surprised. I found him to be a very nice man, actually. We dealt very well together.
Mr. President, the price of beef continues to rise and other items keep going up. Is there any way to address the cost of beef?
Yeah, once it kicks in, once our policies kick in, the price of beef will be going down, just like the price of eggs went down and the price of a lot of other grocery items went down. Beef will go down. It'll all go down. Energy has gone way down. The price of gasoline has gone really, I think you'll be hitting $2 very soon. And it was $4.50 a little while ago. So energy's gone way down. That brings everything else with it. But beef has gone, as you know, for other reasons. The price of beef has gone up a little bit. It'll be coming down.
Before you went to Alaska, in the Oval Office, you said that the First Lady expressed she wasn't too enamored with Putin. You said you came home, you said you spoke to Putin. She said, well, I heard he just blew up a village today. Has she expressed anything since you've come back?
No, the First Lady actually got along great with Putin,
right,
as I did. But, we're disappointed. Both of us are disappointed that this ridiculous war continues.
Are you proud to see her sending the letter that she sent?
Yeah, she is. And she's felt very strongly about the children. Yeah, feels very badly about it. Thank you, everybody.
Thank you. Do you have plans to go to Japan and South Korea this fall?
What does that mean?
Or do you have plans to go to South Korea?
Maybe. We'll see. But it's going to be very interesting what comes out. I think we may have learned something because when they come here and there's nobody that can do what they're supposed to be doing and they bring people, those people can also teach our people. It's complicated stuff. And something very interesting could come out of that. Thank you, everybody.
President Trump there speaking on a range of issues, even reacting to Prime Minister Shigeru Ishiba here in Japan, resigning over the weekend, saying that he liked him and that they worked well together. Asked whether he would go to South Korea or Japan in the fall. He did not clarify that, but he mentioned how people coming to the United States should train Americans when it comes to doing their jobs. And that really in reference to what we saw also, that immigration raid at the EV battery plant run by Hyundai and also LG Energy Solutions. We have seen Hyundai Group stocks gaining ground this year, but of course this really puts into question the future of Hyundai's EV production plans across the United States. We have seen the release of 300 of South Korean citizens agreed by Korean officials and also U.S. officials, but President Trump saying that Korean workers in the plant were illegal, but that they do have a great relationship with South Korea, April.
Take a look at how Japanese assets are faring after the announcement of resignation of Prime Minister Shigeru Ishiba. We are seeing the yen weakening towards that 148.5 handle. And based on what the Chicago Nikkei futures are pointing to we could see upside in Japanese stocks, maybe helped along by gains in some of these export-related names against the backdrop of what we're seeing in the yen. JGB is also the futures pointing to some gains. For more on the market action in Japan, let's bring in Bloomberg's MLive strategist, Mark Cranfield. So Mark, looks like quite an interesting setup. Maybe we avoid that triple dip given how the yen is faring. Might that help Japanese equities? Focus is on the JGBs. How much of a jolt are you expecting potentially?
JGB is probably more about the curve. You probably see steepening there. The investors will come to the quick conclusion that the Bank of Japan interest rate hike, which was a possibility for October, is likely to be off the table pretty quickly. It's going to be very hard for the Bank of Japan to proceed with a rate hike, given that they won't know who the new leader for Japan is, or they may know by the time of their meeting, but there's going to be several weeks of uncertainty, and so that will incline the Bank of Japan to push back further. So it doesn't look as though the yen is going to get any help from the Bank of Japan. That will keep inflation going in Japan for longer. That will hurt the long end of the Japanese curve. The short end will probably stay reasonably anchored. It's getting help from the US. The US now is looking towards a rate cut pretty quickly, and the discussion of 50 basis points for the Federal Reserve will certainly be there. So people will be thinking it could be an even bigger cut that will help to keep short-end rates soft. And then when you think about what it means for Japanese equities, obviously longer the yen stays weak, that's got to be good for Japan stocks. And on the other side, they will expect whoever is the next leader in Japan that they'll want to get on with a bigger spending boost as soon as they possibly can. So that, again, is something that Japanese equities will feed off. So it's not surprising that the futures are pointing to a much stronger start here. And this may well be enough to trigger the topics going through the recent highs in August. We may see an extended run here for Japanese stocks, particularly as the global backdrop is pretty good. US stocks at pretty high levels as well. So that all helps to support Japan.
Mark, JGBs have been very consequential for global bond markets as well at a time when we continue to see the pressure on the long end, fiscal concerns, really a worldwide issue at this point. How does that factor in with other data that we're getting from the U.S., like inflation numbers and, of course, the path of the Fed?
Well, certainly it would have been a lot more dramatic had we not had those job numbers last week. So now
इसी क्रूड ऑयल में ध्यान रखना, इसमें छोटा सा ही टारगेट है, इसको अगर थोड़ा बड़ा फॉल करना है, नीचे तक आना है तो क्लोजिंग देनी जरूरी है 5524 के नीचे. इसके नीचे अगर ब्रेक डाउन हो गया तो थोड़ा और गिरेगा, नहीं तो थोड़ा सा ही है सेलिंग के ऊपर. एक रेजिस्टेंस और है, वो रेजिस्टेंस ही है एग्जैक्टली, ये तो रीटेस्ट है, मॉर्निंग से वहीं पर रुका हुआ है, रीटेस्ट पर ही आता है. रीटेस्ट से वेल एंड गुड, नहीं आता है तो फिर नेक्स्ट रेजिस्टेंस एरिया पे देखेंगे सेलिंग का. ठीक है, ये भी एक पेंडिंग जोन है सेलिंग के लिए इन 15 मिनट टाइम फ्रेम इन क्रूड ऑयल. बाकी नेचुरल गैस भी बहुत स्लो है, बहुत ही ज़्यादा स्लो. ये इतना देर लगाता नहीं है रीटेस्ट पे, वैसे तो प्राइस कुछ ज़्यादा ही रीटेस्ट कर दिया लग रहा है. यहाँ पर रीटेस्ट के सेलर भी गायब हैं अब. Okay, look at this. बाकी गोल्ड को देखोगे तो कंटिन्यूसली अपसाइड ही जाया जा रहा है। मंडे है, कुछ डेटा भी नहीं है, तो ऐसा लग रहा है बिल्कुल साइडवेज ही निकल जाएगा मार्केट कंप्लीटली। अगेन ऑल टाइम हाई गोल्ड। कहीं से भी सेलिंग की कोई अपॉर्चुनिटी नहीं है। इंट्राडे में देखोगे तो फॉरेक्स ही ऑलमोस्ट 1% अप होने वाला है। ये क्रूड ऑयल का रीटेस्ट जोन है, ये कोई एग्जैक्ट रेजिस्टेंस नहीं है, सपोर्ट था, ब्रेकडाउन हो गया है, तो थोड़ा बहुत रीटेस्ट ही कर रहा है मॉर्निंग से उसी लेवल पे। अब वो भी नहीं आ रहा है एक्चुअली।
Unless, of course, the party shifts so quickly and it feels like there's a fast-forming consensus around one candidate, and maybe they will do the emergency rules, but I don't think we're going to see that necessarily.
We're getting breaking news out of Japan at the moment as well. Second quarter GDP number surprising to the upside. This is the revised final figure, annualized growth of 2.2%. The estimate was only for growth of 1%. Of course, we have seen some momentum in the Japanese economy. Quarter on quarter is also growth of 0.5% at a time, of course, when we continue to expect perhaps the Bank of Japan to come out with a rate hike as early as October. And of course, a variable now is that we have a prime minister leadership election for the ruling party here. We're also getting the current account balance as well. We are now getting those numbers on the terminal. It is a surplus of 2.68 trillion yen. But let's continue to discuss the state of the Japanese economy and turn to Kei, who is still here with me. Given the strength of the Japanese economy, people were expecting the Bank of Japan will move as early as October. But now the leadership election is a key question. What will investors be watching out for in the next couple of months?
Unfortunately, if we look back the last several years, the changement of the prime minister has become almost like an annual occurrence, August, September. And as a result, this has sort of meant for many global investors that, politics aside, I think the economy is probably what's most important and the outlook for what the BOJ might do next. That said, we have seen back in the Shinzo Abe era what a stable political environment can do for Japanese equities. And I think that is one of the reasons why we are seeing equity futures higher today. And we do think that down the line, if there is a stable political environment, that would definitely bode well for Japanese equities, especially the mid-cap section of the market that has lagged over the last sort of 12, 24 months or so, especially those companies that, we think are very aggressive in terms of capital management reforms. Those will likely be in a very good situation going forward.
How much does Japanese yen factor into the equity markets these days? Because it's been pretty range bound.
It does factor in. We can't ignore it. But at the same time, I think, somewhere between here and 140 is a palatable environment for many company management. That said, if we see some volatility where, if we see swings up to 130 or if we see swings down to 150, that would not bode well for Japanese management who need to plan ahead in terms of capital spending going forward. So I think, let's get these elections done. Let's find out who the next prime minister is. But then there needs to be a stable political environment and a good way for the Bank of Japan to continue raising rates going forward.
And Tobias, of course, the state of the economy, very important when it comes to the broader Japanese public, but that doesn't necessarily make such a big difference when it comes to the leadership election of the LDP.
Yeah, well, I mean, I think we've seen a kind of disconnect in a lot of conditions, that in the last few weeks, of course, we've seen Ishiba's poll numbers going up, and that didn't really make a difference as far as sentiment within the party. And I think that there's I think, a really important need here, when we think about this leadership election coming up, what is the mindset of the electors going into this election? So it's the lawmakers, it's going to be the prefectural chapters and the rank and file dues paying members. And really, they're very focused on the reality the fact that the LDP has lost 2 straight national elections, there's, I think, a profound sense that the party is completely out of touch with voters. They've lost voters they used to get in the past. They've lost independents. They've lost young voters. There's a feeling that the party is just not meeting a lot of voters where they are, and that there's just a lot of work to do, updating the party, modernizing the party, a lot of internal governance issues that have to be addressed. And so I think keeping that front of mind, I think, over the next few weeks is really important, that this is not necessarily going to be an election that's just going to be decided on the issues or on the platforms. I mean, of course, it's going to be part of the discussion. There are some real differences between the right wing and the left, or reformist wing, let's say, not left wing. Let's not go crazy here. There's going to be some real differences. And so there's going to be policy discussions, but front of mind is going to be, how do you modernize the LDP? How do you reform the LDP? What kind of party is the LDP going to be if it's going to get through this crisis, and when the next general election rolls around, actually be in a position to actually win it? And that really is going to be front of mind, I think, for just about everyone during this campaign.
Tobias Harris, good to have you with us, Principal at Japan Foresight, and Kei Okamura here joining me in the Tokyo studio, Portfolio Manager at Neuberger Berman. Thank you so much to both of you for joining us as we head to the market opens in Japan. Of course, we have seen already JGB futures moving higher. We continue to see the Japanese yen falling against the U.S. dollar. Nikkei futures pointing to the upside as well after we heard over the weekend about the resignation plans for Prime Minister Shigeru Ishiba. We're now headed towards a leadership election as well. The market opens are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens, and the countdown also on for the leadership election here in Japan after Prime Minister Shigeru Ishiba announced his resignation in April over the weekend. Of course, what that means for the market's a key question as we continue to see weakness on the Japanese yen. The new Prime Minister will serve out Ishiba's lasting 2-year term.
Yeah, and also over the weekend, we had the OPEC Plus supply hike that is committed to, which has been characterized as relatively cautious. So we're going to be watching that in the session on commodity prices as well, Sherry.
Yeah, we will be watching those oil-related stocks across Asia as well. But take a look at how the Japanese market is coming online, because we have been watching the Japanese yen weaken against the U.S. dollar. We are seeing also JGB futures move. Of course, the key question is how fiscally conservative will the new Prime Minister be? The expectation is that there will be nobody more hawkish than Prime Minister Ishiba at this point. What that means for already the existing pressure on the long end of JGBs is a key question. We had already seen 30-year JGB yields trade at record highs last week. Nikkei stocks at the moment rising, of course, the expectation of more stimulus, a weaker yen that usually benefits the stock market. So we'll continue to watch the market as we are also digesting the GDP numbers for the second quarter. The final figure coming into surprising on the upside, growth of 2.2% on an annualized basis. So what that means for the Bank of Japan as well, because expectations of that rate hike that were as soon as October may have been pushed back because of the uncertainty on the political landscape. But take a look also at how Korea is coming online. Of course, what we've been watching are the Hyundai named groups, because President Trump also commenting in the last few minutes about that immigration raid on that Georgia EV battery plant run by Hyundai as well as LG Energy Solutions. At the moment, the Kospi is up 0.2%, while the Korean won is also weakening against the U.S. dollar. Of course, in South Korea, we'll also be watching for the jobless rate to come later in the week. But it's really all about Japan today, and the political landscape after Prime Minister Ishiba's resignation set in motion a leadership race that may generate concerns for investors.
While I feel there are still things I wish to do as premier, I have made the difficult decision to step down. But I felt that if I continued amid a vote on an early leadership race, it could have created an irreversible division within the party, which is certainly not my intention.
Joining us now is our economy and government reporter, Erika Yokoyama. And Erika, you were actually at that press conference by Prime Minister Ishiba. Did this come at a surprise, or was it pretty much expected, given, of course, the pressure that he's been seeing in recent weeks?
I would say it's pretty much expected, to be honest, while it's a little bit surprised as well. Like, he seems like sticking to the position as well. But yesterday at the press conferences, he actually looks pretty calm and determined after weeks of calls for his departures. And the focus of the presser yesterday was like, why now? And also, what will be the next as well? Like, in terms of like, why now? Ishiba said that he has been thinking of like taking responsibility of the election loss, while he was also waiting for the U.S. trade deal is firmly implemented. He also wanted to avoid the split divide within the party as well. As you know, like LDP was expected to have a vote today to decide whether they should bring forward the leadership election or not. And the RE survey already suggested that nearly a majorities are voting for an RE election. So there was already divide as well. And as for what's next, Ishiba said there will be of course, the extraordinarily the leadership race, and it's largely expected in October, while like Ishiba didn't specify the date. And he said he's not planning to run again. He wants to succeed it to someone who can deal with his priority, including like wage growth, a trade deal implementation, as well as the national security.
As we wait to see who that someone will be, how do you see these scenarios shaking out and what their market impact will likely look like?
Right. I feel like it's going to be some sort of replication from a year ago. You know, you still remember last September, like 9 candidates ran for the positions. And you probably remember Sanae Takaichi, a female candidate, narrowly lost to Ishiba. And it's highly expected she will run again with her preference for monetary easing and loose fiscal policy. And yeah, that's probably her victory potentially makes the BOJ a little bit difficult to proceed with ongoing tightening project, potentially weakening the yen further and lowering the bond price as well. And another strong candidate is probably Shinjiro Koizumi, who recently appealed his ability to do things after he got appointed as agriculture minister and lowered the price of rice successfully. In terms of monetary policy, he seems to see continuity, so maybe bringing less impact to the market. So there may be more candidates as well, including Cabinet Secretary Hayashi. But at the point, I feel like as the LDP is seeking the new face to capture the younger generations or some of the right-wing supporters that left Ishiba's LDP to support far-right Sanseto, the market expects the higher chance for a conservative Takaichi or young and fresh Koizumi.
When it comes to the economy, of course, much stronger second quarter GDP numbers will be very consequential for the Bank of Japan. Right. But at the same time, what are some of the other concerns that we're watching across Japan when it comes to this leadership election and the future of the country?
Right. So beyond the monetary policy, there will be lots of issues as well and challenges as well. Especially the new leader, whoever it becomes, has to face the minority situation in the chamber. So, for example, towards the end of the year, Japan has annual tasks including economic package, extra budget, annual tax revisions, and the annual budget as well. Then last year we saw lots of trouble as the ruling coalition couldn't find agreement with the opposition party. The government was working on these projects after the Christmas or even the New Year's. And the first things the new leader has to deal with would be the economic package. Ishiba already said that the LDP wants to do the 20,000 yen cash handout to lower income group, while opposition parties calling for the sales tax cut, right? Then that was one of the major cores behind the LDP's great loss in the election. So I think that's the first things they need to find the answer, as well as the trade negotiations implementation as well.
Erica, thank you so much for running us through all that. Erica Yokoyama is our economy and government reporter. Now let's get more insights on the markets with Dillian Wu, research strategist at Pepperstone. Dillian, really good to see you. First off, we are seeing not just, as Erica was highlighting, those monetary policy concerns, also what Japan does fiscally speaking at the time when the long end is already a focus globally. What is your sense of the curve steepening? How much more is there to go from here?
Well, actually, Prime Minister Ishiba's decision to step down to me ahead of the LDP snap leadership race looks a pragmatic move, and the spotlight now shifts to who takes over and whether this could bring political stability or shake up this kind of coalition dynamics. And for the Japanese government bonds, it has already reached the historical high. I mean, the long end from last week, and at the moment, I think the BOJ is really in a tricky spot to add any interest rates or to implement any rate hikes for this year, because the market has just priced in a 12 basis points rate hike by the end of this year. And I think probably we can see a weaker yen down the road and also higher the GJB rate.
This higher long end yield is really a global story, though, right, Dylan? I mean, we have the UK DPM resignation. We have in France some of these fiscal concerns as well, with the Prime Minister potentially losing a confidence vote. What are you watching, globally speaking?
Well, I personally look into the Nikkei performance because obviously the Japan has got a 50% tariff from the US, and ideally this is a plus for the Japanese equity. And but with this kind of domestic political uncertainty, we probably see some losing of the confidence from the Japanese traders. And also I will look into, like how this kind of political landscape will unfold in the following months, and who will take the Ishiba's position.
When it comes to the broader Asian equity markets, we are also waiting for export numbers out of China. Is the Chinese market an alternative to a lot of this uncertainty, even as you mentioned with the politics landscape changing here in Japan?
Well, I mean, sure, China is obviously a market very interesting to look into. And for the export data, actually the exports in the first half of the 2025 to the US decreased by 1/10. And I think is a really healthy shift for more resilience to the Chinese exporters. And also we're looking into the retail sales data and the NPC meeting down the road from this week. And I think if there's more, stimulus to put in place and more stimulus expected to be in place in the AI sector, then I would still be bullish to the AI sector in the Chinese equity market.
Yeah, let's talk a little bit about that AI momentum that we're seeing, not only in the Chinese market, but across Northeast Asia. How much legroom does that rally have, especially across Japan, across South Korea as well, with some of those semiconductor names?
Well, I think if we start from China, recently both the CN50 and Hong Kong 50 has been consolidating at elevated levels, and many of the international capitals just flooding into Chinese tech as a new deployment sector. And from established names like Alibaba and Tencent to some newer startups like Cambridge, and these stocks have done much of the heavy lifting for the.
ओके गाइस 5 PM हो चुका, आधा घंटा है। 5:30 पे फिर से न्यूयॉर्क सेशन ओपन हो जाएगा अपना। लाइक भी करते रहो गाइस, इन लोगों ने लाइक नहीं किया। नेचुरल गैस का व्यू कुछ नहीं है, थोड़ा बहुत सेलिंग आ रही है रेजिस्टेंस एरिया से, नथिंग एल्स। इंट्राडे में व्यू का क्या मतलब होता है? सपोर्ट दिखेगा बाय करोगे, रेजिस्टेंस दिखेगा सेल करोगे। इंट्राडे में व्यू का कोई ज़्यादा मतलब नहीं रहता। रोहन सरकार जी, कैन यू एक्सप्लेन ऑप्शन सेलिंग इन शॉर्ट? आई एम अनेबल टू रिकॉल इफ आई हैव टू शॉर्ट क्रूड, सो आई हैव टू बाय क्रूड पुट ऑप्शन और सेल क्रूड। मींस ऑप्शन सेलिंग क्या होती है, आप ये कह रहे हो? लाइक अगर आपको क्रूड में शॉर्ट करना है तो क्या करोगे? तो लाइक ऑप्शन सेलिंग में या तो कॉल सेल करते हैं या पुट सेल करते हैं। कॉल सेल तब किया जाता है जब आपको लगता है कि प्राइस गिरने वाला है, मार्केट डाउन जाने वाला है, तब आप कॉल सेल कर देते हो। नॉर्मली रेजिस्टेंस पे आप कॉल सेल करोगे। आपको लगता है मार्केट ऊपर जाएगा, बाइंग आने वाली है, तो जहाँ पर आप बाई कर रहे हो वहाँ पर आप पुट शॉर्ट करते हो। तो पुट शॉर्ट करना या पुट सेल करना एक ही होता है। तो जब हम कहते हैं पुट शॉर्ट कर रहे हो या पे पुट सेल कर रहे हो, तो आपको लगता है मार्केट ऊपर जाएगा तो आप बाई जब करने वाले हो जो ऑप्शन सेलर, तो आप पुट शॉर्ट करोगे, और आप जब आपको लगता है जब मार्केट डाउन जाएगा तो आप कॉल शॉर्ट करोगे। तो अगर आपको लग रहा है कि अभी क्रूड ऑयल डाउन जाने वाला है तो कॉल शॉर्ट करोगे। ठीक है, सिंपल है। ऑप्शन बाइंग का बिल्कुल अपोजिट मान लो। जैसे ऑप्शन बाइंग में हम ऊपर जा रहा होता है प्राइस तो कॉल ऑप्शन बाई करते हैं, बट अगर ऑप्शन सेल करते हो तो अगर आपको लग रहा है ऊपर जा रहा है तो आप पुट शॉर्ट कर दोगे, पुट सेल कर दोगे। इतना ही डिफरेंस होता है बस।
Really change the near-term policy outlook of the Fed. A 25 basis point cut is due likely be the case in September's meeting, aimed at providing a bit of a insurance kind of cut in the near term. But the upside inflation risks do present. So I see little chance of any front-loaded cut, where the chance of a 50 basis point rate cut in September. And I mean, my best case would still be a 25 basis point rate cut in September and another 25 basis point in December. And I think the rate cut is obviously a bullish factor for the equity market in general, but as we're not just looking at the federal rates policy, but also into the economic outlook, and with some strong, like tech advance backing in behind, I think I would be still optimistic about the AI sector in the Asia market.
Dylan, what does all of this mean for the U.S. dollar, given that on the other side of that trade, we not only have the Japanese yen that sees continued pressure, but we also have, of course, the euro. We do have the ECB rate decision this week as well.
Well, I feel like the market has already not fully priced in a rate cut in this ECB meeting, and I feel like one of the black swan events I will look into, and maybe some of the market participants ignore, is if Cook really were to leave earlier, or will be kicked off in the near term, then market participants will be eager to figure out what this means for the future path of the federal interest rate and the Fed's broader policy toolkit. And this kind of uncertainty tends to widen the range of views, and when potential outcomes are more extreme and harder to gauge, it can hurt liquidity. And that's, I think, when we could really see the dollar drop sharply and go spike. So apart from this Fed rate cut narrative, I will also look into this kind of early step down potential of Cook.
Dylan, thank you for your insights. Dylan Wu is research strategist at Pepperstone now, as we've been unpacking not just the U.S. jobs data and the impact on the dollar. We actually are seeing the U.S. currency climbing, reversing some of Friday's decline. The Aussie dollar is coming under pressure. We're also seeing a slide in Australian stocks. In terms of the 10-year, you are seeing that yield creeping up in U.S. treasuries. Flip the board, take a look at some of the movers in the Australian session. We are hearing, of course, that potentially the Abu Dhabi consortium that has been pursuing Santos, the Australian energy producer, they could be mulling $10 billion worth of financing for that. Santos, for the moment, is down, as are some of the other energy-related names. This is, of course, after the OPEC Plus decision, the commitment to hiking supplies from October, though some have actually characterized this as a relatively cautious move in terms of what this could mean for supplies in energy in the market. And let's also take a look at some of these South Korean names, because, of course, we also have been unpacking that story related to U.S. immigration raids on these EV battery plants in Georgia, and how there were detentions of employees from Hyundai as well as LG Energy. These are the counters that are in focus. They are down for the moment in South Korea. More ahead on the Asia trade. This is Bloomberg.
heard about it yesterday. At the same time, ICE was doing right because they were here illegally. But we do have to work something out where we bring in experts so that our people can be trained so that they can do it themselves. Does that make sense? Right?
Is it straining the relationship with Korea at all?
No, we have a great relationship with South Korea.
President Trump there commenting on the immigration raid at the Hyundai Motor LG Energy EV battery factory in Georgia. All of this at a time, of course, when the U.S. and South Korea have just struck a trade agreement, not to mention that Korean companies have now agreed to invest hundreds of billions of dollars in the United States. We'll be watching Hyundai Motor down more than 1.5% at the moment. We have seen them pledge $26 billion through 2028. But, of course, Hyundai's broader EV production plans now in question given this immigration raid. We know that the construction on the Georgia plant has been temporarily paused. When it comes to South Korea's government, it secured the release of hundreds of their citizens detained in that U.S. immigration raid in the state of Georgia. Let's bring in Bloomberg Seoul Bureau Editor Danny Thomas for more on this story. Danny, so what do we know at this point about what triggered this investigation and where these citizens go from here?
Well, this is, according to ICE, this was in the works for many months. So it only got concluded on Friday. In terms of what happens next, I think the discussion around releasing them has been concluded, and what we understand is that on Wednesday there will be a chartered flight which will bring most of these detained workers back to South Korea. In terms of the diplomatic kind of the rift now, the foreign minister of South Korea is going to be heading to U.S. today, and I think some of the industry lobby groups, what they're trying to get the message across to U.S. is that they don't want to see a repeat of this because more important, I think South Korea feels a bit betrayed that just 2 weeks after some of the biggest companies came out with big investment pledges, you see the workers being detained. And the images and the footage and the photos of that being released was a bit of a blow to South Koreans here. So that is what the message the foreign ministers will be trying to convey and trying to make sure that the visa issues that have previously also come into the picture get resolved in a way that, you know, these kind of humiliation is not repeated.
Danny, there's still a bit that we don't know, including what sparked these raids and to what extent you think this might cast a shadow on some of these South Korean investment pledges into the U.S.
So clearly there is going to be some tangible impact. We're already seeing LG trying to push back the start of its project. So there is going to be some fallout of this. How damaging will it be depends on how quickly South Korean companies can get visas. That's been one of the issues they've been trying to get resolved, that as you bring in more money into the country, you need more workers to work on these projects, and not having proper visas and documents for workers to work, it's going to delay the work. And that's what I think this particular issue is going to snowball into, where the US can get the visa issue sorted for the investment that is to follow.
Danny, did we have more clarity on how these Korean investments into the U.S. would work out? Because they were talking about funds and sharing of profits of billions of dollars of investments. But of course, we haven't seen that many details so far.
Yeah, so I think there are two components of it. The $350 billion is going to be largely in terms of loans. And what South Korea has tried to say is that only less than 5% of that amount will be in actual investments, as in equity investments. So there has been some dispute around that, but I think that's where South Korea has kind of been sticking to its gun. And this did not come up in the summit between President Lee and Donald Trump. So I think that's kind of resolved, or maybe there are still something to resolve. On the other hand, there's a bigger component, or kind of chunkier component, which is $150 billion that the South Korean private companies have agreed to invest in. And that will be mostly in terms of equity investments, and that's where the big dollar is flowing in. So that's where things stand now.
Danny, thank you for talking us through the state of play. Danny Thomas is Bloomberg Seoul Bureau Editor. We'll have more ahead on the Asia trade. This is Bloomberg.
We continue to watch the latest when it comes to the leadership election of the ruling LDP here in Japan after the resignation of Prime Minister Ishiba. The LDP's Aizawa now saying that they will set the leadership election date on Tuesday, so we'll be on the watch for that. As we continue to see the Japanese yen weakening, as you can see there, against the US dollar towards the 149 level. This, of course, as we continue to see political volatility and uncertainty here in Japan. And 2-year yields at the moment are lower, so we are seeing the curve steepening in Japan, April, foreign outflows and political concerns as well, and all of this really having implications for assets across Japan.
Indeed, and as you say, the yen is weakening. It's weakening against all major currencies, including the greenback that is seeing a slight bump from Friday's performance following weak U.S. jobs data, which prompted a repricing in the Fed's rate cut path. 25 basis point fully priced in for September, and beyond that, something October, December, another few cuts is a possibility. We are seeing still that stuff keep curve steepening trade at play and U.S. stocks picking up slightly. More ahead on the Asia trade. This is Bloomberg. Let's take a look at how Asia markets are faring. We are seeing Japanese stocks bouncing with the yen weakness that's come through and breached the 148.5 level, which is, of course, a key level that we've been watching. South Korea stocks seeing a bit of firmness, but really not by much. And we have with us now Diana Musina, Deputy Chief Economist at AMP, who hopefully will get for some analysis in just a bit. But for the moment, take a look at how Australia stocks are faring. They're down about 0.2% among the sectors that we are watching in the session, not just Japanese stocks overall, but also about these energy names following on from OPEC Plus over the weekend committing to hike supplies, though some have called this relatively cautious move. Maybe some of it was already priced in by markets. You are still seeing Brent hovering at almost towards the $66 handle, and WTI at around 62. Gold is also seeing a bit of firmness for the moment, Sherry.
Yeah, I mean, we have been following oil prices a lot because we have seen that pressure over the past year, down more than 10% or so. And OPEC Plus continuing to change strategy and really announcing that production boost again. You talked about that 137,000 barrels a day from October. That's only the first part of a 1.65 million barrels a day tranche. So we'll continue to watch how the fluctuating oil price really affects also equity markets globally, of course, and what that means for the broader economy as well.
Yeah, Sherry, let's bring in Diana Musina, Deputy Chief Economist at AMP. Diana, we're still unpacking what we got from the U.S. jobs numbers on Friday. Investors seem now so focused on the labor market. It seems easy to forget we still have a CPI print coming this week. How clear do you think the path of the Fed is for the rest of the year?
Well, I'm taking my cues from what Powell said a few weeks ago, where he basically reiterated that the Fed's focus, at least in the short term, is probably going to be on the labour market, because the pressures on inflation, at least in the US in the short term, are more around the impacts from tariffs and how that's going to increase consumer prices rather than a demand-driven increase to inflation. So from the Fed's point of view, I think if these are supply challenges increasing inflation, then they want to focus more on the labour market, basically to prevent any sort of serious downturn in jobs growth. So even if we get a hotter CPI print, I think the Fed's next move is still going to be a cut, and we should be expecting probably a few cuts from the Fed in the next 12 months.
What are you expecting out of Chinese economic data? We're going to get trade numbers as well, and potentially we see that loss of momentum in exports, which for a long time have been a key pillar supporting the Chinese economy.
Well, in this particular month, the pace of export growth is expected to soften a little bit from last month, but it's only really because of base factors rather than the actual renewed start of slower global demand and growth. If we look at container freight shipments around the world, they're actually still holding up very well, particularly coming out of China and also out of broader Asia, going into the US and other Western countries. So I don't think that we're actually seeing a global slowdown in demand or in export growth, and global growth seems to be holding up at about its long-term average, which is around 3% on a yearly number. So there doesn't really seem to be any large negative impacts from higher tariffs around the world. So more or less, Chinese growth is still holding up relatively well, even though this month we are going to see some softer export numbers.
And perhaps softer inflation data also later in the week. What's domestic demand looking like within China, aside from external factors? And what are the implications for other China-dependent economies across Asia?
It's sort of a tale of two cities, I guess you could call it that, because there are still some very strong parts of China, like industrial production, fixed asset investment too, outside of property. The property market, though, is still incredibly weak, and we are still seeing home price growth down 30% on a year ago, and investment into housing has been fairly subdued as well. But other sides, like the industrial production side, especially areas related to things like electric vehicles or solar panels or investment into the green and the new economy, is still holding up incredibly well. So it is quite a mixed growth picture in China, but when you sort of marry up all the different factors, it still looks like the Chinese economy is going to grow by 4.5% or 5% this year, which is enough to generate the sort of global demand that you would want. China itself contributes about a third of global growth every single year, and that's likely to remain the case in 2025 and 2026. So that's what's important for countries that are reliant on Chinese demand, other parts of Asia, and of course in Australia too.
Growth here in Japan very strong as well. In fact, the second quarter final number surprising to the upside, annualized 2.2% growth. What does that mean for the Bank of Japan? Because we were expecting potentially a rate hike in October, and yet we have this uncertainty on the political landscape.
I mean, in the short term, the Bank of Japan may just hold steady and try and sort of let the dust settle after all the political changes in the economy. I mean, I think it's still the case that the Bank of Japan is going to keep hiking rates, but we also need to understand what the new government is going to do around fiscal spending. That's probably the more important thing here for Japan, and how that impacts the economy. Despite that strong growth number, in the last 18 months, the Japanese economy hasn't really been particularly strong. So there is still the need for more fiscal stimulus, I think, but the Bank of Japan may want to just let the dust settle.
Meantime, we are seeing that sort of fiscal impetus in the U.S. We are still trying to figure out what tariffs are going to mean globally for inflation. We've seen over the weekend OPEC Plus coming through, commitments to supply hikes. What is your sense of how subdued energy prices might help maybe tamp down potential inflationary effects from tariffs?
Well, I guess that's more of a global factor that could help to ease some of the inflationary concerns around the world. But at least in the short term in the US, we can see that tariffs are having an impact to consumer prices. Things like durables and non-durables have been increasing in the past 2 to 3 months. We know that the average tariff rate is running at about 11% in the US. Compare that to about 3% before Trump started. So it does take time for these tariffs to actually hit price growth. And I think that in the next 6 months, US CPI is going to get up to about 3.25%, maybe even 3.5% on a year ago. But some of the Fed governors have said that they would actually look through the short-term upside impacts to inflation, especially if it was just a one-off or potentially even just a few months' worth of higher prices. So I guess the point is, will the tariffs continue to impact inflation? I think that that's probably unlikely to happen. the tariffs are just going to have a short one-off impact to raising prices. The other global factors around lower oil prices, for example, is good news in trying to keep global inflation weaker.
What have all of those dynamics meant for Europe? We do have the ECB rate decision this week as well.
Yeah. Well, the Eurozone economy has actually been doing relatively well. The unemployment rate across the Eurozone on average is still at a relatively low level. They haven't really seen the increase like New Zealand, Canada, or even the US has. I mean, there are still some political challenges in Europe at the moment, for example, things that are going on in France. With the vote of no confidence in the Prime Minister. So that's why we've seen bond yields increasing in Europe. But European equities have been doing incredibly well in 2025, actually on par performance with the US, and they were outperforming the US in the first part of the year. And if we think about the outlook for Europe, there's going to be more fiscal spending that's going on, particularly out of Germany, more defence spending as well. So I think that Eurozone economic growth is actually going to look pretty strong in the next 12 months. And I think that that should mean good news for European equities as well.
Anna Musina, really good to have you with us. Deputy Chief Economist at AMP, had a very busy week when it comes to eco data and monetary policy decisions as well. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how Japanese bonds are trading at the moment. Of course, JGB's, the direction of this market, very key and consequential for global markets as well, at a time when we continue to see the yield steepening, the yield curve steepening, that potential Bank of Japan rate hike potentially delayed given the resignation of the Prime Minister. Traders pushing long end yields higher at the moment, and we could see more volatility. The 30-year JGB yield already traded at record highs last week. Rising inflation, growing fiscal concerns, of course, a key question here in the Japanese economy. And we already saw the second quarter GDP final numbers surprising to the upside as well. But let's talk a little bit about the political uncertainty here in Japan that might really put into question where the markets go from here. Joining us now is Purnendra Jain, Emeritus Professor at University of Adelaide's Department of Asian Studies. Great to have you with us. I mean, what does this mean for who could become the next Prime Minister of Japan in the next couple of months?
It's quite complex at the moment. As you know, Mr. Ishiba, the current Prime Minister, announced yesterday at a press conference that he intends to step down. And that's going to be a very complex process following his announcement to resign. Because it's not so straightforward. First, the LDP has to elect a new president, and that president will then present himself or herself to the parliament, and the parliament has to endorse that person's leadership as Prime Minister of Japan. And given that the LDP doesn't have a majority in the lower house or even in the upper house, that's not going to be as straightforward as in the past. Because in the past, when a LDP president went to parliament with a majority in the lower house, it was almost certain that that person will be elected as Prime Minister. So this time the situation is much more complex.
Yeah, with a weaker LDP, does that mean that they will have to really negotiate with opposition parties? And what does that mean for a potential economic package to come later this year?
Yes, most definitely. Mr. Ishiba ran a minority government. The LDP already has a coalition with a party called Komeito. But even the LDP Komeito coalition numbers are not enough for them to have a majority in the lower house. So the new leader, whoever that might be, will have to negotiate with some opposition parties, kind of like-minded opposition party or parties who will come on board with the LDP new leader so that a simple majority could be maintained in the lower house for legislative purposes and for policy purposes and, of course, for economic purposes. it depends who that leader is, because leaders have different viewpoints on how they want to handle the Japanese economy, whether it is in terms of monetary easing, whether in terms of fiscal stimulus. So we have to wait and watch as to who the new leader is and what kind of policy that leader is going to announce on economic front, as well as on many other domestic and political and foreign policy fronts.
On foreign policy, when it comes to tariffs, of course, last week we also saw the U.S. and the implementation of the trade agreement with Japan. Do you think that process might potentially be affected given what's happening domestically in Japan?
Yeah, I mean, one of the reasons that Mr. Ishiba was resisting the pressure to resign, telling the party and government that he has got some very important jobs in his hand. And what he meant was the negotiation process, the process which was taking place between Japan and the Trump administration about the tariff issues. So finally, Mr. Ishiba's team negotiated a deal with the United States of America.
इस नेचुरल गैस देखो टारगेट पे पहुंचने वाला है, इसमें बुक कर लेना। यहाँ पर वैसे देखो ये जो लेवल है ना, यहाँ पर ये टेस्ट हो चुका है ऑलरेडी। ये जो लेवल है ये भी सपोर्ट ही है, बट ये टेस्ट हो गया है लास्ट ट्रेडिंग सेशन में। आई नीड टू सी किया ये फिर से रुकता है यहाँ पर या फिर क्या करता है। थोड़ा सा अगर नीचे आ जाए यहाँ से बाइंग हो तो ज़्यादा बेटर है। वैसे यहाँ पर भी रुक ही जाएगा थोड़ा बहुत तो जो कोई अगर बड़ी क्वांटिटी में है तो ट्रेल कर लेना, नहीं तो बुक करके निकल भी सकते हो यहाँ पे। ठीक है, ट्रेल करोगे तो ये सेकंड टारगेट है। यहाँ से भी बाइंग में प्लान नहीं कर रहा हूँ। थोड़ा सा नीचे आएगा तो देखेंगे, अगर आता है तो, नहीं आता है तो फिर लेट इट गो, क्योंकि यहाँ पर टेस्ट हो गया है लेवल। बाकी क्रूड ऑयल की कैंडल का भी ध्यान रखना, 5:30 होने वाला है। 5:30 ऑलमोस्ट 4 मिनट रह गए हैं। न्यूयॉर्क सेशन ओपन होगा तो कहीं ऐसा ना हो कैंडल ओपन इक्वल टू हाई बन जाए। छोटा सा एसएल है इसमें, इस रिटेस्ट जोन पे 20 पॉइंट का जाएगा एसएल, तो वेट भी नहीं करना है। ठीक है, क्योंकि काफ़ी देर से रुका हुआ है रिटेस्ट पे, इतनी देर सेलर पेंडिंग है नहीं है वहाँ पर। भी डोंट नो एग्जैक्ट रेजिस्टेंस होता तो फिर भी ठीक था। बाकी नीचे आया तो टारगेट छोटा सा ही रहेगा। 5:30 की कैंडल का थोड़ा ध्यान रखना, ओपन इक्वल टू लो ना बने क्रूड में, स्पेशली रेजिस्टेंस के पास में। बाकी कोई डेटा भी नहीं है आज, देयर इज़ नो डेटा शेड्यूल फॉर टुडे। तो अभी 5:30 न्यूयॉर्क सेशन ओपनिंग, देन 7 PM यूएस मार्केट ओपन। बाकी इस वीक सीपीआई का डेटा है यूएस का, इन्फ्लेशन का डेटा बहुत इंपॉर्टेंट है अनएम्प्लॉयमेंट क्लेम्स के साथ, उसको नज़र में रखना। तो ये हो गया इसका डन, एक लेवल और पेंडिंग है ऊपर। भी करते रहो गाइस, जिन लोगों ने लाइक नहीं किया स्ट्रीम को, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। Palestinian gunmen killed 6 at Jerusalem bus stop. Israel woves hurricane of strikes on Gaza to force Hamas to accept surrender demand. Palestinian gunmen opened fire at a bus stop on the outskirts of Jerusalem on Monday, killing 6 people in what police describe as a terrorist attack, one of the deadliest in the city in the past few years. लग रहा है फिर से वॉर वॉर क्या गाजा में फिर से बम्बार्डमेंट ही होने वाला है। थोड़ी देर पहले न्यूज़ ब्रेक हुई थी, अभी लेट्स सी और क्या अपडेट आता है इसमें, क्योंकि अब इजराइल और ज़्यादा बम्बार्डमेंट करने की कोशिश करेगा वहाँ पे। लेट्स सी और कुछ न्यूज़। To X, formerly known as Twitter, YouTube, other online platform restricted in Turkey. Internet Monitor says. India likely to finalize Qatar trade pact framework in October as Trump tariff bite. इजराइल के साथ भी हो गया इनका। Israel and India signed bilateral investment agreement. सिल्वर में क्या हो रहा है? सिल्वर और गोल्ड तो बुलिस हैं। सिल्वर, गोल्ड और बिटकॉइन, ये तीनों ही सुपर बुलिस हैं भाई, सुपर बुलिस। इसके पीछे ना मुझे लॉजिक लग रहा है, परसों भी हमने बात करी थी, थर्सडे को या फ्राइडे को आई थिंक। ऐसा लग रहा है कि ओवरऑल मार्केट ना गिरने के चांसेस हैं। मैं इक्विटी मार्केट की बात कर रहा हूँ। इंडिया की अगर बात करें तो देखो, अगर ऐसा कुछ होता है, क्योंकि नॉर्मली गोल्ड और सिल्वर तभी ऊपर जाते हैं जब मार्केट गिरने वाला होता है। वैसे तो मार्केट भाग ही रहे हैं काफ़ी टाइम से, बट करेक्शन जरूरी है। बट ऐसा लग रहा है इक्विटी मार्केट का हाल होने वाला है कुछ ना कुछ बुरा। द मेन रीजन बिहाइंड दैट, अगर कुछ एआई की वजह से इशू आता है, जॉब जाती हैं कई लोगों की, तो उससे एक बहुत बड़ा बर्डन आ जाएगा इकोनॉमी पर। इनडायरेक्टली आएगा, डायरेक्टली तो नहीं आता, बट इनडायरेक्टली लोग डिफ़ॉल्ट करना शुरू कर देंगे अपनी ईएमआईज पे, तो बैंक पे प्रेशर आता है। बैंक पे प्रेशर आएगा तो बैंक अपने लोन्स जो उनके रिकवर करने हैं, उनको रिकवर करने के लिए अपने बॉन्ड, जो गवर्नमेंट बॉन्ड है, उनको सेल करना शुरू कर देते हैं। एक बार उन्होंने, सारे बैंकों ने गवर्नमेंट के बॉन्ड सेल करना शुरू कर दिया, तो जो गवर्नमेंट अभी बॉन्ड्स पे बॉन्ड यील्ड देती है, इंटरेस्ट देती है, वो बढ़ जाएगा। अगर अभी 2% देती है तो बढ़ते बढ़ते 3-4% हो जाएगा। तो ऑलरेडी जो गवर्नमेंट है, कोई भी कंट्री की गवर्नमेंट जो अपने बॉन्ड पे अभी 2% इंटरेस्ट दे रही है, अगर वो 4% उसको देना पड़ गया, तो वो पैसा कहाँ से आएगा? उसके लिए फिर सेंट्रल बैंक पैसा छापती है, नोट और छापने लग जाएंगे, मनी प्रिंट होगा, तो फिर इन्फ्लेशन बढ़ जाएगा। इन्फ्लेशन बढ़ेगा तो लोग कम खर्च करेंगे, कंपनियों के रेवेन्यू गिर जाता है, तो विशियस साइकिल है। ऐसा लग रहा है कि गोल्ड और सिल्वर, बिटकॉइन भी कह सकते हो, कहीं हद तक देख चुका है इस चीज़ को पहले ही। नहीं तो गोल्ड को यार लॉन्ग, अभी इतना हाई जाने के कोई लॉजिक तो है नहीं, लाइक ऐसा कुछ इवेंट तो नहीं हो रहा, कोई नई वॉर तो शुरू नहीं हो रही, फिर भी गोल्ड ऊपर जाया जा रहा है, तो कुछ तो लॉजिक होना चाहिए। नॉर्मल नहीं तो गोल्ड और सिल्वर जो सेफ एसेट्स होते हैं, वो ऐसा नहीं ऊपर जाते हैं, लॉन्ग टर्म में ऊपर जाते जरूर हैं, बट करेक्शन के साथ, अनटिल अनलेस कोई न्यूज़ ना आ जाए। जैसे रशिया यूक्रेन वॉर हुई, गोल्ड ऊपर चला गया, ठीक है। ऐसी कोई और वॉर हो जाए तो चांसेस रहते हैं, या फिर कोई बहुत बड़ा इकोनॉमिक इवेंट जैसा कुछ हो जाए, कोविड टाइप जैसा कुछ हो जाए। अदरवाइज विदाउट इसके लोग गोल्ड में पैसा क्यों लगा रहे होंगे? कोई लॉजिक ही नहीं बस समझ में आता। तो या तो फेयर है बहुत ज़्यादा, जो हमें पता नहीं है अभी फिलहाल के लिए, बट सेंटिमेंट तो ये बता रहे हैं। सब कंट्रीज को डिस्टेबलाइज करके क्या करना चाहते हैं लोग? यूएस का भी नुकसान होगा ना इसमें, ये फिर सभी कंट्री का होगा। शुरू वो यूएस से ही होगा, फिर जाएगा अलग अलग कंट्रीज में। ऐसा नहीं है कि इंडिया में होगा, या इंडिया में होगा तो पूरी दुनिया में होगा, इतना फर्क नहीं पड़ता। बट अगर यूएस में गड़बड़ हो गई तो उसका इम्पैक्ट फिर पूरी दुनिया में पड़ता ही है, क्योंकि सबसे बड़ी इकोनॉमी है। And मुझे लग रहा है जानबूझ के ट्रम्प ऐसा करना चाह रहे हैं कि मार्केट गिरे नीचे। कब तक यार, ये कब तक तो यार ये किसी को नहीं पता, कब टॉप बनेगा कब बॉटम बनेगा, क्या पता बन गया हो, हु नोस। हम सोच रहे हैं कि टॉप बनेगा बनेगा, क्या पता बन गया हो। बट मैंने जितना भी एनालिसिस किया, मैं मॉर्निंग पे भी बोल रहा था, मैंने दो तीन स्टॉक पिछले काफ़ी टाइम से मैं ट्रैक कर रहा था। जैसे मैंने रिलायंस को देखा, रिलायंस इंडस्ट्री हैवी वेट जो है, मैंने आईसीआईसी बैंक को देखा। हायर टाइम फ्रेम की बात कर रहा हूँ मैं, वीकली मंथली में। तो इनमें करेक्शन ही नहीं आया 2020 में, जब 2019-20 में जब कोविड में बड़ा करेक्शन हुआ था, उसके बाद से करेक्शन ही नहीं आया। मैक्सिमम करेक्शन जो इन स्टॉक्स में आए हैं वो हैं 10-12% के बस। दैट इज अ नॉर्मल करेक्शन। इससे ज़्यादा करेक्शन आया ही नहीं है। जबकि आप नॉर्मली हिस्ट्री उठा के देख लेना, कोई भी स्टॉक होता है, ठीक ठाक स्टॉक, पैनी स्टॉक की बात नहीं कर रहा हूँ, तो उनमें मार्केट ओवरऑल तो स्टॉक कंपनी की वजह से ऊपर ही जाता है, बट उनमें जो करेक्शन आते हैं ना, उनकी एक साइकिल रहती है। वो साइकिल कोई फिक्स तो नहीं होती, बट ऑन एन एवरेज देखा गया है 6 साल के अंदर करेक्शन आते हैं। कभी वो 7-8 साल भी हो जाता है, कभी 5 साल भी होता है, तो 6 ± 1 ईयर कर दो। तो उस हिसाब से इस साल या अगले साल एक गिरना तो चाहिए मार्केट को ओवरऑल। और जब मैं गिरने की बात कर रहा हूँ तो मैं कोई 5-10% स्टॉक करेक्शन की बात नहीं कर रहा हूँ। वो जो करेक्शन आते हैं हर एक इंटरवल के बाद, वो थोड़े हैवी करेक्शन होते हैं। हैवी मतलब लगभग 30%, 30% ऑन एन एवरेज करेक्शन मिलता है। कई बार ज़्यादा भी मिल जाता है, कई बार 40% भी गिरे हैं स्टॉक, 40-45%, बट ऑल टाइम हाई से, हाँ, ऑल टाइम हाई की बात कर रहा हूँ। क्योंकि उसके बाद फिर से एक नई रैली स्टार्ट होती है। तो इतने बड़े करेक्शन आए ही नहीं है रिसेंट टाइम्स में, जो ठीक ठाक मतलब इन्वेस्टमेंट करने लायक स्टॉक्स हैं उनमें। तो जब ये गिरेंगे तो फिर बड़े बैंक निफ्टी निफ्टी भी एटलीस्ट आप मान के चलो 10-15% तो देगा ही देगा। क्या वैसे बैंक निफ्टी को देखोगे तो मैं बैंक निफ्टी को अब एक्सपेक्ट नहीं कर रहा हूँ कि बैंक निफ्टी था, हाँ बैंक निफ्टी था शायद, कि वो वापस अपने ऑल टाइम हाई जाएगा। बैंक निफ्टी फ्यूचर का जो मैंने चार्ट एनालिसिस किया था डेली टाइम फ्रेम के आसपास, शायद डेली में किया था, वीकली में किया था। ठीक, अनलेस कुछ बहुत यूनिक नहीं हो जाता, ऑल टाइम हाई को दोबारा टच करना बहुत मुश्किल है अभी रिसेंट ईयर्स में। बाकी मैं तो ये सोच रहा हूँ कि ये बस 56,100 के ऊपर भी शायद ही जाएगा बैंक निफ्टी। मैं इस फ्यूचर की बात कर रहा हूँ, अलग अलग फ्यूचर में प्राइस ऊपर नीचे हो सकता है। फ्यूचर को देखोगे तो ऊपर अभी स्पेस है, जरूर जाने को जा सकता है 55,600 से 56,000 के बीच तक जा सकता है, बट मैक्सिमम 56,100 के ऊपर दिखता नहीं है जाता हुआ। इवन दो सेंस नहीं बना है अभी भी मंथली में, क्योंकि नॉर्मली कोई स्टॉक होता है ठीक ठाक, या फिर जो इंडाइसेस होते हैं उनमें हायर टाइम फ्रेम पे, लाइक मंथली टाइम फ्रेम पे सेलिंग के सेटअप नहीं बनते हैं। सेटअप मतलब वैसे सेटअप की बात नहीं कर रहा हूँ, सेलिंग तो आती है, मतलब जो जानबूझ के सेलिंग करनी होती है ना, कि यहाँ पर आएगा तो फिर सेलिंग ही होगी, इस तरह की सेलिंग नहीं होती, क्योंकि वो एक करेक्शन है। इस तरह का रेजिस्टेंस बना दिया तो कभी प्राइस वहां पर आएगा तो वहाँ सेलिंग ही करता रह जाएगा मार्केट, फिर वो कभी स्टॉक या फिर वो इंडेक्स ऊपर जाता नहीं है। तो इंडेक्स में नॉर्मली इस तरह के रेजिस्टेंस बनते नहीं है, बट स्मॉलर टाइम फ्रेम पे थोड़े बहुत दिख जाते हैं, जैसे कोविड के टाइम पे बना था। तो जब लॉकडाउन लगा था उससे लगभग ने पहले ही रेजिस्टेंस क्रिएट हो गया था, उसके बाद सेल ऑफ आया था वो, और जब वो लॉकडाउन लगा था वहाँ बॉटम बनाना शुरू कर दिया उसने। $55,600, 55,800 मेजर अच्छा लेवल है एक तरह से सेलिंग के लिए। थोड़ा करेक्शन आ ही जाए तो अच्छा है इन्वेस्टमेंट के लिए भी। इन्वेस्टमेंट भी नहीं कर सकते। कोडिंग करनी भी नहीं चाहिए अभी, स्पेशली अगर स्टॉक्स या फिर इंडेक्स में इन्वेस्टमेंट करने की सोच रहे हो, बिकॉज अभी मार्केट में बिल्कुल अनसर्टेनिटी है ट्रम्प की वजह से। कोई एक्सेप्ट नहीं कर रहा था कि इंडिया पे 50% टैरिफ लग जाएंगे, इवन दो मार्केट पे उसका उतना इम्पैक्ट नहीं हुआ, बट धीरे धीरे कंपनीज पे इम्पैक्ट देखना शुरू हो जाता है। तो अगर और टैरिफ बढ़ा दिए स्पेशली इंडिया की आईटी कंपनीज पे, तो फिर तो मार्केट अच्छा खासा करेक्शन दे ही देगा। मार्केट को बहाना, ओवरऑल देखोगे इंडिया का जीडीपी का नंबर अच्छा ही आया था लास्ट वाला, जीएसटी भी कम कर दिया है, उससे पहले जो बजट आया था वो भी अच्छा था, फिर भी मार्केट चले नहीं उतने कुछ खास। तो अगर हल्का सा भी कुछ बहाना मिला, लाइक टैरिफ लगा दी इंडिया पे, और स्पेशली आईटी सेक्टर की जो कंपनीज है उन पे, तो फिर मार्केट को बहाना मिलेगा, तो मार्केट एक करेक्शन दे सकता है उस केस में, क्योंकि ऊपर जाने का भी कोई लॉजिक नहीं है, रीजन ही नहीं दिख रहा। 'से यूक्रेन वॉर का भी कुछ खत्म होने के चांसेस ना के बराबर ही हैं, कुछ वहां भी अपडेट नहीं है। करेक्शन मिले तो बेटर है, तब इन्वेस्टमेंट करना ज़्यादा सेफ रहेगा, क्योंकि लॉन्ग टर्म में मार्केट ऊपर जरूर जाएगा, ऐसा नहीं नहीं जाएगा, जाएगा तो पक्का। ये 5:30 न्यूयॉर्क सेशन ओपन हो गया है। द कैंडल, प्रॉफिट बुकिंग कैंडल काफी अच्छी, नेचुरल गैस में वापस। क्रूड ऑयल में कुछ भी नहीं हो रहा है। मंडे को ऐसा ही रहता है, मार्केट थोड़ा बहुत ठीक से चलता ही नहीं है। गारंटी जो भी होगा रिटेल को कोई चांस नहीं देगा, नहीं रिटेल को चांस मिल सकता है, ऐसा नहीं है। अगर लॉन्ग टर्म बाइंग के लिए सोच रहे हो तो करेक्शन का वेट करना ही पड़ेगा, और कुछ ऑप्शन है नहीं। हाँ, शॉर्ट करने की पोजीशन बनाने की सोच रहे हो तो फिर थोड़ा ठीक ठाक लेवल पे बनाना, नहीं तो फंस सकते हैं, स्पेशली ऑप्शन में अगर ट्रेड करते हैं तो। बाकी ऐसा नहीं है, मिल ऑप्शन तो मिल जाएगा, मुझे लग रहा है बैंक निफ्टी में अच्छा ऑप्शन है, अगर जो मैंने लेवल बताया, अगर उस एरिया के आसपास अगर आता है, वहाँ एक शॉर्ट पोजीशन बनाई जा सकती है। प्लीज लाइक भी करते रहो सभी लोग। 5:30 हो चुका है, कैंडल ऑलमोस्ट क्लोज। मार्केट ही ओपन होगा सीधा एट 7 PM इंडियन टाइम के अकॉर्डिंग।
TD Cowen raising its price target on JetBlue to $5, citing strong pricing and premium fare momentum, and finally Citi cutting its price target on Nvidia to 200, expecting a sales hit from Broadcom's chip deals. That stock is up just about by 1/3 in the pre-market. Let's turn to banks. PNC buying First Bank in a deal valued at more than $4 billion. The acquisition will add 95 branches to PNC's network. Joining us now, Herman Chan, US Regional Bank Analyst for Bloomberg Intelligence. Herman, welcome to the program. Just talk to us about this deal, where it comes from, and why it makes sense.
Sure. So PNC has talked about growing organically in some of its expansion markets, including Denver and the Southeast, building upon what they've done with the BBVA deal a few years back. So this is just a continuation of that. And the regulatory backdrop has been really positive. You've seen some regional bank M&A deals close really quickly and gain really fast approval. So this is something that we expect to see going forward for the regional bank space.
That's what I was going to ask, Herman. How much more to come is this? Is this really going to open up be a watershed moment to open up a bunch of deals that are in the pipeline? Can you give us a sense of the scope of those types of deals?
So M&A has definitely been more constructive over the past couple months. You've seen Huntington buy Veritex in Texas.
ठीक है, लेवल्स डिस्कस करेंगे, सैटरडे को करेंगे। लास्ट सैटरडे को किया था एक डिस्कस वीकली एनालिसिस में, तो नेक्स्ट वीकली एनालिसिस करूंगा मैं जब इस सैटरडे को, तो तब फिर से एक बार डिस्कस करेंगे लेवल्स को, निफ्टी के भी और बैंक निफ्टी के भी। तो वो लास्ट वीडियो देख सकते हो निफ्टी की, वजह से निफ्टी बैंक निफ्टी दोनों का एनालिसिस किया हुआ है वहाँ पर, वीकली एनालिसिस की जो वीडियो है सैटरडे वाली।
It sounds like a needlessly difficult question, but is a regional bank still a regional bank when they want to become a coast-to-coast lender?
Right. I would say for PNC and some of the larger ones, I would call them a super regional bank that have graduated from the regional bank moniker, but aren't of the size of the trillionaire banks like a JP Morgan or a B of A.
Got it. Herman, appreciate your take, sir. Herman Chan there. Joining us now to build on this conversation, Chris Marinac of Jenny Montgomery Scott. Chris, welcome to the program, sir. We've been talking about this happening for a long, long time. Is this a start of something bigger?
Absolutely. I mean, I think Herman nailed it with the other acquisitions that were announced, John. I think that there are several more in the pipeline. the consolidation of this industry has been happening for 40 years, and it will continue to play out. The regulatory environment is much better today, so it's greasing the skids for commerce to take place in the banking consolidation game. I also think it's good for customers because if you're in Colorado, you now have access to a national bank platform with PNC. PNC is going to do, I think, a very low-risk transaction here because they're buying a bank with very good deposits, low-cost funding, and then they also have a lot of mortgages that they're picking up, which are immediate customers they can cross-sell. This bank, First Bank, has almost 50% of their portfolio in residential 1 to 4 family mortgages.
Chris, are there certain regions right now that are hotter than others?
Well, the Southwest and Southeast have the best of population growth. I think even post-COVID, we still have a lot of move-ins to Texas. The tax advantages in Tennessee and Georgia and Florida are very much popular. The Carolinas are doing well. So those are the markets that I think are most likely to have the best bank demand. But even in the West, certainly the mountain states like Colorado have been a boom. It's a migration from California that's been happening for years and years, and it's particularly accelerated during COVID. So Colorado specifically has been a standout. I think that is obviously on PNC's radar screen. I also think that demographically, you're going to see the Pacific Northwest is still attractive, and certain pockets of the Midwest, like Chicago, are having a sort of reemergence, particularly as you have onshoring that continues to take place.
I'm trying to grapple with the scope of the M&A that we're about to see. We've heard a lot of reports about some 4,000 regional banks getting consolidated down to 2,000 or 1,000 banks in the next number of years. What do you see as the sort of scope of this mergers and acquisitions wave?
So, Lisa, there's about 4,500 U.S. bank charters in the FDIC system that are alive today. I could see that coming down by 15 to 20%. I'm not sure it's going to go down to 1,000. I think you still have a lot of family-run banks that will stay intact. You have a lot of community banks that don't have a bid today. So that's going to sort of gum up the number and the head count. But I think in terms of mid-size and larger banks, you will see consolidation. What will be interesting to me is, are we going to form more $100 to $200 billion banks like Synovus, like Flagstar, that was created a couple years ago? I think that ultimately is going to be the question that remains to be seen. We do have, again, the commerce, skids have been greased by Treasury, by the Fed, by the OCC to allow consolidation to take place at a much faster pace. We're getting deals approved way sooner than we used to in the past few years.
How much does a turn in the economic cycle challenge that? And this is sort of the tension right now that we've been talking about all morning. Is it a good thing to see the Fed cutting rates, or is it a bad thing? How much does that either act as a support or a detriment to some of these deals and the outlook for a lot of these firms?
Well, I think investors like lower interest rates. I think the cost of funds for banks dropped a lot with the first 100 basis points cut. So I feel like you're going to see 30 to 35% betas for bank funding costs. That ultimately is going to be helpful to net interest margins staying where they are, if not expanding slightly. I think that the capability of banks to solve any credit issues they have is better with another 25 or 50 basis points of Fed cuts. So I think ultimately it's a positive, not a negative. Yes, there are banks who are technically asset sensitive who will get a near-term squeeze, but ultimately banks are still resetting interest rates from the past couple of years and all of the low rates from 2020 and 21. So anything that's happening to drop the cost of funds, enable things to turn over, I think is positive in the big picture. So I still see more positives and negatives from the rate cuts that are upon us.
Chris, just to build on that, how much do you think it moves the dial on volume, just on the amount of demand that's sitting out there for loans, for mortgages, that's waited and waited for this moment? 25 obviously doesn't move the dial that much. Is it 50, 75? How do you think about that?
So 50 at least would move the dial, John. I think you're asking the right question. 75 would absolutely be a behavior change, in my opinion. I'm not sure we get 75 this quickly. However, seeing the 10-year Treasury break on Friday, I think, was helpful. If you can get mortgage rates down, there are an awful lot of fence sitters out there. I also think there are corporate fence sitters, folks who have not made decisions to borrow more in the corporate sector. And that, of course, can be an even bigger boon for the banking industry. You know, we've got a ton of liquidity between U.S. U.S. deposits, U.S. money market funds, they really have been growing nicely this year, and you could put that to work into loans much more. But banks are also buying securities again, and that also is another way for banks to make money and drive spread income. I think we've got a really good third quarter ahead of us that's going to be talked about at some of the conferences this week. And I think generally should be good as October rolls around.
Chris, appreciate you jumping on. Just one final question. Top picks at the moment. What do you like?
I like Fifth Third, FITB. We're buy rated there for Citizens, FCNCA. We are a positive on the Synovus Pinnacle merger. We think there's a lot of opportunity there as well.
Chris, appreciate it. Thank you, sir. Chris Marinac there of Jenny Montgomery Scott. That last line on volume and the amount of volume growth that we could see and that wall of demand that's just sat there waiting and waiting for this moment. Let's see if it's unleashed.
Yeah, the idea that the pipeline's been strong for so long, when is that pipeline going to get unleashed? Right? We've heard that for so many months. The corporate M&A pipeline is just absolutely stacked, and then it never comes to fruition. Is it enough to see 25 basis points change that equation? Maybe not. 75 basis points being a game changer is interesting, given that's increasingly what's getting priced into the market through the remainder of this year.
It's 25 plus. What's the signal that comes with a 25? And the good news, and I'm right there with Chris, is what happened on Friday. Yes, the data was bad, but the fact that long bonds rallied, the fact that you're pricing in cuts at the front end, and it's actually spreading through the curve and yields are coming down across the curve, particularly at the long end, that could unlock that mortgage activity we've been talking about for a while.
We're retracing that this morning, though, of course. So if you're trying to get too clean of a read, and the reason why I say this is not to be a pain in the butt, but it's to ultimately say this is a market that is so confusing. And that is one reason why there also has been hesitation to complete deals. Notable that this deal is announced and highlights how the banking sector is unique and has been uniquely positioned given some of the change in attitude at the White House toward the financial sector, trying to support regional banks in particular.
We just don't want to see a repeat of last year, dropping rates 100 basis points and yields climbing 100 basis points at the long end. The good news so far is we're not seeing that.
Totally. And I think that people were saying this is a positive signal. This also is coming with the idea that people brought down the entire expectation for where the Fed would end up next year, the idea of a neutral rate. It's early days, and that's what I think a lot of people are trying to gather. Exactly how much are we entering into a downtrend that could potentially be negative for the economy? I mean, if this is head spinning.
The curve just a little bit steeper this morning. Yields down at the front end by a single basis point, up at the long end by a single basis point. 10s at 4.08%, 2s at 350. Coming up on the program, we'll catch up with Kathy Bosjancic of Nationwide as investors gear up for a busy week of inflation reports. Plus, Danny has your morning movers with stocks jumping on news. They're joining the S&P 500.
For over 147 years, BGRIM has embraced doing business with compassion, always committed to giving back to society. We empower people and strengthen communities for a better future.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern, only on Bloomberg.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Tech is integrated into every aspect of our lives, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Tom McKenzie in London. Watch Bloomberg Tech Europe. New episode Friday, only on Bloomberg Television.
The open bar is about 60 minutes away. Equity futures positive by 0.1%, up by 1/3% on the Nasdaq. On the Russell, the small cap run continues, up by 0.2%. 5 consecutive weeks of gains for small caps, led by the Russell 2000 off the back of a real repricing of rate cuts from this Federal Reserve over the next year. As we count you down to the opening bell at 9:30 Eastern Time, let's get you some morning movers ahead of the cash open. Here's Danny with more. Hey, Danny.
Hey, John. Some deal news to work through this morning. First, EcoStar gaining off the back of SpaceX's Starlink, buying mobile spectrum for them. $17 billion is the price tag on that deal, and it gives SpaceX the ability to deliver direct-to-device internet. The bad news, though, is for the likes of T-Mobile, who had been partnering with them in order to deliver that. T-Mobile, also one of the companies to have been reported to bid on those EcoStar assets. So EcoStar up 19%, T-Mobile down 5%. We're also going to get some more earnings throughout the week. That includes Oracle, which will report after the bell tomorrow, and ahead of that, a whole lot of sell-side upgrades from the likes of Morgan Stanley, Barclays, also JP Morgan, all upgrading them, all with a view into their AI offerings. So the bar has been set high. Will it deliver? Ahead of that, shares are up 3%. Finally, we got the rebalancing of the S&P 500, learned who would be included and who would be excluded. Two of those names, AppLovin, the app monetization company, and Robinhood, the online brokerage, both gaining because they will be added a lot of passive money flowing into them. A lot of being made in the sell side of what this means for Robinhood, that you get another financial services company included into the S&P 500. So both those, some of the top gainers this morning, John.
Danny, appreciate it. Thanks for the update. Looking forward to the programme. Danny Berger, Matt Miller taking things over in about 29 minutes' time for open interest at 9 a.m. Eastern Time. Right here on Bloomberg Surveillance, we're counting you down to the opening bell and a week full of economic data, including PPI and CPI. Bloomberg's Mike McKee joins us now with more. Good morning, Mike.
Good morning, John. Danny and I were just talking about how crazy last week was and how crazy this week's going to be and how crazy next week's going to be. We can only take it 1 week at a time, so let's look at the last data that could influence the Fed is inflation numbers, and we get a lot of them this week. Today we get the New York Fed Inflation Expectations Index. You know how much the Fed cares about keeping rates anchored, rate beliefs anchored. Tomorrow, NFIB, the small business people, they do have prices charged index that people are going to watch, and payroll revisions. Now, watch that one. That could be the sneaky number of the week if it provokes people down at the White House. Wednesday and Thursday, though, the big days with PPI and CPI. Jobless claims also Thursday, and then we get another inflation expectations number on Friday with the University of Michigan. And all this inflation stuff adds up to this. Will we see the core rate for CPI go even higher? It's above 3% now. Does it get up to a point where the Fed might reconsider the idea of a rate cut? Hard to see that happening, but I guess it is always possible, so we'll keep our eyes on that. And of course, that's not all for the week. The data aren't just the only thing. We've got a decision on whether Lisa Cook can stay on the Fed due any day now, and then we're going to be waiting to hear from the Supreme Court whether it's going to take the case on the tariffs that were ruled illegal last week. And then we've got this Scott Bessent versus William Pulte Ultimate Fighting Championship bout. How does that end up? Because Pulte's the guy who's really been pushing to get rid of Cook. Is this going to have any impact on that? So an awful lot to watch this week, and as Danny and I were saying, going to be another crazy week.
And we should take those threats of violence seriously, because the Secretary of the Treasury, Mike McKee, Scott Bessent, has form with his left hook, based on what we may or may not have heard from Elon Musk in the last few months.
And, you know, if you don't know Scott Bessent, he's a fairly big guy. I mean, he could probably take either one of us out. But I'm not fighting with him. So.
I'm not fighting with him either. I have no doubt he could do that. Mike, thank you. Appreciate it. Federal Reserve in a quiet period ahead of the meeting next week. You just wonder how much that inflation story will shape this meeting, because there is a perception, I think, consensus view right now in this market, that the inflation data matters less now after the Payrolls report that we just had on Friday.
And after what we heard from Chair Powell when we were at Jackson Hole in Wyoming, a real question of the emphasis on the labor market taking a little bit more precedence than the inflation data. I wonder, there might be a really high bar for inflation to be too high to cut. But how low is the bar for the inflation to be so low that they cut by even more? And I wonder how much that's increasingly the discussion.
The CPI comes on Thursday. Sticking with the economy, Kathy Bostjancic of Nationwide Mutual Insurance writing the following. The stall in employment growth supports the Fed starting rate cuts at the next meeting. We continue to see a total of 75 basis points of rate cuts by year end. Kathy joins us now for more. Kathy, welcome to the programme. That is a rate cut at every single meeting going into year end. Does the inflation story matter?
Yeah, good morning, John. Well, it's not irrelevant. It certainly does matter, but I think the emphasis, as Lisa said, is it's shifting more to the labor market and employment now. We just can't get big surprises, negative surprises in inflation. If we did, that makes it a little trickier, but I think ultimately, still it does come back to the labor market because even if we get some real shocking numbers, it will be analyzed to see is that repeatable and are these one-off changes that eventually will fade over time. What it could influence is the pace of rate cuts this year and the total amount, not necessarily rate cuts themselves.
Kathy, there's a feeling amongst many that if we'd had the revisions at the time we actually got the economic data, this Federal Reserve would have been cutting already. The Federal Reserve, some officials have basically acknowledged that. Now, Kathy, I wonder, this debate about 25 versus 50 next week, in just a moment we'll catch up with Steve Englander of Standard Chartered, who's going to make that argument. Do you have a different view on things? Does 50 worry people? Would it spook people? Do they worry about the optics of a 50, even though it might be required?
Great question. So I think from the fundamentals, it could support 50, certainly, because I think what's happened is the Fed has gotten behind the curve, right? And that's what we've been thinking all along. That's why we thought they would go 75. And actually, a few months ago, we had 50 basis points as our forecast for September. We removed that because we saw that maybe getting a consensus around that would be more difficult. It's not off the table, but I think I would expect them to go more cautiously 25 because there are still some who are worried about inflation. They could always go 50 in October or even December if needed, and they can wait to see more data, in my opinion. I think getting that consensus right now, and I think to your point, would it spook the markets? It may, although now the narrative has shifted so much. Everyone's sort of talking about 50. The market's pricing in some odds of that. Maybe it wouldn't, but I think there is also still that potential. And that's what we were thinking maybe even just a few weeks ago. It could be too dramatic.
At the same time, we're about to get revisions tomorrow, the latest preliminary benchmark revisions to the establishment survey data out of the BLS. The expectation is for those revisions to show even less momentum heading into the year through March than we previously examined. You said the Fed is behind the curve when it comes to their easing cycle. Are we overestimating their ability to stave off a downturn? And that's something that we keep hearing.
It's great. That's another great point. I think what concerns me is employment's a coincident indicator, not a leading indicator. And the fact that it's gone flatline for the last 4 months, and yes, we'll get those backward revisions, which are going to be pretty sizable. It does suggest that policy was too restrictive for too long. And there is always that possibility that we get that harder landing. It's not our forecast, but it is that possibility. Well, I guess what I see, though, in the labor market is really companies paralyzed by the uncertainty, given that, we're getting a little more certainty. It's still very high, but we're past peak uncertainty. It means that there could still be the possibility, like looking ahead, not this year, but next year, of them starting to hire and invest. So it's not as if the rates themselves have really paralyzed companies from hiring. It's really the uncertainty and the uncertainty around tariffs.
So you don't think that this is actually the beginning of something that would warrant the Fed to be much more aggressive, not just this year, but also next year. Is that right?
I guess it depends how you label aggressive. I mean, we've had 75 basis point call for a while. The market's now coming to that. I mean, that's pretty sizable, but it's not 50 at each meeting. Next year, I think it's an open question. Right now, we have 50 basis points because we think inflation, lingers a little higher. Maybe that restrains them. And if they go 75 now, they get a little bit closer to maybe neutral, but the composition of the FOMC will matter. Certainly, they could end up doing even more rate cuts next year if that becomes a big factor.
We've talked a lot about this economy. This is actually also a super awkward Federal Reserve meeting, Kathy. The issues over Governor Cook, the prospect that Stephen Myron might be there at the FOMC meeting on the 16th going into the 17th. Kathy, with the news conference in focus, not just the forecast and the decision, what kind of tone do you expect from the Federal Reserve Chair about some of these issues in the news conference?
Yeah, this is really an important meeting because we'll get that press conference. We'll also get the Fed's updated macro and interest rate dot plot estimates, and those will be scrutinized. What are they giving us in terms of guidance, and how much can they give us guidance, right? There's so much uncertainty, and as you said, the shifting of personnel among the board of the FOMC, it's really, really going to be an interesting time. I think Chair Powell, it will be open to being a bit more dovish and signaling this is not one and done, that this is a series of rate cuts if the labor market continues to be soft and there's that belief inflation is kind of one time and eventually fades. These are going to be multiple rate cuts. That's what I would expect to hear from Chair Powell.
Kathy, appreciate it. Kathy Bonjantic there of Nationwide Mutual Insurance. Looking ahead to the Fed meeting next Wednesday. Decision, forecasts, news conference. Can he get the rest of the committee to come with him beyond just agreeing to a 25 basis point rate cut? And after that data that we saw on Friday, commit to more in the future?
I'm going to make your day because I'm going to talk about the hawkish rate cut, right, that a lot of people were expecting after Jackson Hole. Does this move to a dovish rate cut, right? I mean, that's essentially the difference that people will be looking for. Is there a signal that they're going to be cutting more substantially going forward? And can Jay Powell signal that, given, to your point, the lack of agreement that we see on the committee?
The personnel issues are going to be interesting, aren't they, in this news conference?
Yeah, who's going to be there? Is Stephen Myron going to be on there?
I think he's going to reach to that piece of paper and just go through things line by line and say it's over to the lawyers.
Yeah, look, this is going to be a very difficult moment. He's going to have to answer questions about Lisa Cook. He's going to have to answer questions about Stephen Myron if he's there. And he's going to say no comment, no comment. This is an independent Federal Reserve, and he's going to stay the course. How the market reads this, whether the market thinks this is overblown or whether they actually think this is valid, will be in the long-term bond rates. Because if you see yields creep up, that's when bond independence starts to come into question.
The good news is we haven't seen a whole lot of that recently. Yields are down this morning by a basis point now on 30s, likewise on 10s, on 2s as well. The whole curve just pulling back going into the opening bout for equities. About 50 minutes from now, equity futures on the S&P 500 positive by 0.2%. With an update on stories elsewhere with your Bloomberg Brief, let's cross over to Yahira Arnott for more. Hey, Yahira.
Hi, John. Israeli police and medics say 6 people were killed and 13 wounded in a shooting this morning. Authorities say the gunmen were from the Palestinian West Bank and that they arrived by car and opened fire toward a bus stop. They were then shot dead by an Israeli Israeli security force member and an armed religious student. Meanwhile, U.S. Health Secretary Robert F. Kennedy Jr. may add new members to the committee that recommends which vaccines Americans should get. According to two former federal health officials, most of the people Kennedy is considering have been highly critical of COVID-19 vaccinations. The committee is scheduled to vote on those COVID vaccine recommendations later this month. And Aryna Sabalenka successfully defended her U.S. Open crown, defeating Amanda Anisimova in straight sets Saturday. Sabalenka is the first player to win back-to-back U.S. Open women's singles titles since Serena Williams did it over a decade ago. And on the men's side, Carlos Alcaraz beat Jannik Sinner, taking home his 6th Grand Slam title and his 2nd at the U.S. Open. I'm just sad I won't get to watch tennis every day. That's your Bloomberg Brief. John?
Yahara, thank you. The tickets just got so expensive going into the weekend. Do you check some of the prices?
Yes, although not as often as you do, I know.
$1,000 for the nosebleeds.
To me,
Sunday afternoon.
I'm just thinking you pay that kind of money and then you get stuck waiting in a line, having to give away your free deodorant handouts because of some of the security.
You knew the president was coming.
Yeah.
I mean, come on. Couldn't they have organised things better? They knew the president was coming, and they still had all those lines outside.
Yeah, and couldn't they have signaled what the actual requirements were going to be so that people didn't bring in more than 3 ounces of liquid or whatever else it was? I feel like it was rather haphazard.
Yeah, I'd agree. Congratulations to Alcaraz and to Sabalenka as well. Just absolutely dominant wins. Up next on the programme, we'll set you up for a big week ahead. Plus, we'll catch up with Steve Englander of Standard Chartered, expecting a jumbo rate cut from the Federal Reserve next Wednesday.
AI is definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Investors becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think could be time because you have a strong hardware power and you have a strong software power as we see, and it's accelerating significantly. But a very important another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase
News when you want it with Bloomberg News Now. I'm Karen Moscow. U.S. job growth in the year through March was probably far less robust than government figures currently show. Economists at Wells Fargo, Comerica Bank, and Pantheon Macroeconomics expect the Bureau of Labor Statistics preliminary benchmark revision tomorrow to show the March payrolls count was almost 800,000 less than currently estimated. Nomura Securities, Bank of America, and Royal Bank of Canada say the downgrade could even be closer to 1 million. While a dated snapshot of job growth, a substantial downward revision would illustrate a labor market with far less steam last year and reinforce expectations for a series of Federal Reserve interest rate cuts. SpaceX, the Elon Musk-backed company that owns the Starlink satellite network, has agreed to acquire wireless spectrum from EchoStar for about $17 billion in cash and stock. Shares of EchoStar jumped in early trading. Satellite operators like SpaceX are seeking to provide direct-to-device mobile service from space, and they usually need to team up with at least one mobile company that holds ground-based mobile licenses. South Korea's biggest conglomerates are rushing to contain fallout from a sweeping U.S. immigration raid at a Hyundai Motor LG Energy Solution battery venture in Georgia. It sparked concerns over billions in planned investments. And we get more with Bloomberg's Tyler Kendall in Washington.
This is no doubt casting a shadow over South Korea's multi-billion-dollar investment drive in the U.S., seen as really critical to those ongoing trade negotiations. And Hyundai plays a really big role in that. The company has so far pledged to invest $26 billion in the U.S. through 2028. Not to mention, it's probably worth pointing out that this was an electric vehicle battery plant, and we know the administration has identified those sectors they say they want to de-risk, and there's a huge reliance on China when it comes to the electric vehicle supply chain.
And that's Bloomberg's Tyler Kendall. A Korean media outlet reported that LG has tentatively decided to postpone the start of its EV battery plant with Hyundai in Georgia, and that Hyundai has banned all U.S. trips by its staff. The European Union is exploring new sanctions on about half a dozen Russian banks and energy companies as part of its latest round of measures to pressure President Vladimir Putin to end the war against Ukraine. It comes as President Trump indicated he was ready to ramp up sanctions against Russia, and we get more with Bloomberg's Jill Desis.
You're really seeing very little willingness from Moscow to stop this war. You're seeing, European leaders talk with Zelensky in Ukraine about measures to respond to Russian attacks. So while Trump is certainly projecting this confidence over bringing an end to the war in Ukraine, I think we still have to see that substance behind it to actually know whether or not that's something that has any chance of happening anytime soon.
And that's Bloomberg's Jill Desis. The possible package being explored by the EU comes as a delegation of EU officials heads to Washington this week to discuss the potential for joint action. Israeli police and medics say 6 people were killed in a gun attack on a bus in Jerusalem. At least 12 others were wounded. Hamas hailed the attack without claiming responsibility. Meanwhile, a drone launched by Yemen's Houthi group has hit Israel's southern airport, closing airspace and halting flights, and that according to the Israeli military. Federal immigration agents are conducting raids across the city of Boston and nearby communities, arresting dozens of people. The Justice Department filed suit against Boston and its mayor, intensifying a clash over local sanctuary policies. President Trump's border czar, Tom Homan, is further promising enforcement activities in Chicago and other sanctuary cities across the country.
You can expect action in most sanctuary cities across the country. President Trump's prioritized sanctuary cities because sanctuary cities knowingly release illegal alien public safety threats to the streets every day.
And White House border czar Tom Homan also noted that additional workplace raids are planned following the recent Hyundai raid in Georgia. France's government could collapse today, with Prime Minister François Bayrou expected to lose a confidence vote in Parliament. Bayrou called the vote in a bid to pressure lawmakers into backing his budget. Meanwhile, in Asia, Shigeru Ishiba has announced that he will step down as Japan's prime minister. The move follows calls for his resignation after back-to-back election losses that cost his party its parliamentary majority. Jury selection is set to begin in the trial of a man charged with trying to assassinate President Trump while he played golf last year in South Florida. The court has blocked off 4 weeks for the trial of Ryan Routh, but attorneys are expecting they'll need less time. In the chip space this morning, the U.S. is proposing annual approvals for exports of chip-making supplies to Samsung and SK Hynix factories in China. Sources tell Bloomberg the plan would require the firms to seek approval from Washington for a year's worth of restricted gear, parts, and materials in set quantities. PNC Financial Services Group agreed to buy First Bank Holding for about $4.1 billion. It'll add $26.8 billion in assets and branches in Colorado and Arizona. And stocks are rising to start the week, along with U.S. stock index futures. This week is packed with events that will be crucial in shaping sentiment as markets trade near all-time highs. S&P futures up 0.2%, Dow futures up 0.1%, NASDAQ futures up 0.33%, and the 10-year Treasury yield at 4.07%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
खतरे जी बुक नहीं किया क्या? हाफ प्रॉफिट बुक करके ट्रेल करो यार, साइडवेज है मार्केट। ओवरऑल देखोगे कुछ मोमेंटम ही नहीं आ रहा, डाउन साइड से थोड़ी बहुत बाइंग आई, फिर सेलिंग आई, वहीं अटक गया, 5 पॉइंट के अंदर ही घूमे जा रहा है। तो हाफ प्रॉफिट बुक करके ट्रेल कर लेना चाहिए था उस समय। वैसे भी 5:30 न्यूयॉर्क सेशन की ओपनिंग थी, मैंने बताया कई बार न्यूयॉर्क सेशन की कैंडल के वक्त रिस्क मत लिया करो। कभी भी कोई मार्केट ओपन होता है, न्यूयॉर्क सेशन, लंदन सेशन या फिर इवन यूएस मार्केट, उस समय थोड़ा सा कॉशियस हो जाना चाहिए। बाकी हाफ प्रॉफिट बुक करके ट्रेल कर लो, ज़्यादा रिस्क मत रखो उसमें। बाकी लोअर एंड से मत लेना भाई, जितना नीचे से लोगे एसएल उतना बड़ा हो जाएगा ऑटोमेटिकली। वैसे ही काफ़ी लेट सेलिंग आई थी उसमें। जी ये मार्केट पूरा, क्रूड ऑयल भी वैसा नहीं है कि मूव कर रहा है कुछ, कंप्लीटली साइडवेज मोमेंटम इन क्रूड ऑयल, नेचुरल गैस, रेंज बाउंड मार्केट कह सकते हो।
Van, good to have you with us. First off, your reaction to Lutnick. He says in 2 to 3 months, India will say sorry and come to the negotiating table.
Well, I'm not going to react to his remarks directly. Of course, the Indian Commerce Minister said conversations were going on and that he does expect something to materialize by November. So I think that is the best possible reaction that the Indian Commerce Ministry, which deals with these matters, has put out. So I suppose that's the response to Commerce Secretary's remarks.
Give us some clarity. Trump also came out to say that India has offered to remove tariffs on U.S. goods. Can you confirm that?
No, I can't confirm or deny that. As I said, Commerce Ministry is the nodal ministry, and I think they are the people who are spearheading the negotiations with the U.S. side. And so whatever they say is the final word on this matter. I have nothing to add, Haslinda.
The final word on the matter right now is tariff stands at 50%. How much will that weigh on India's economy?
I'm sure it is weighing on export prospects right now, and I have mentioned this, that the second fiscal quarter in India, which is basically July to September, and also to some extent, the coming quarters will reflect that impact in terms of production, in terms of export numbers, etc. I've also said that my hope is that the tariffs, the additional penal tariff is a short-lived phenomenon. I hope so. And if that is the case, then the impact will be contained inside the current fiscal year. And that impact, depending on how long it lasts, even in this current financial year, it may translate into a GDP impact of somewhere between 0.5 to 0.6%. However, if it continues into the next financial year and we feel the impact fully in the full financial year, then the impact will be larger. We should remember that there was some front-loading of exports in the first 3 to 4 months of the current financial year, which began in April. And August also saw some good export growth. So half of the usual exports that go to the U.S. in terms of goods have taken place in the first 5 months of the current financial year. Yes, there will be efforts made to find other markets. And there are also silver linings for India. And I will probably mention that later. The oil price is well behaved. The GST tax reduction is now going to take effect from September 22. So the final impact may be somewhere closer to 0.5% rather than north of that.
The thing is, not everybody shares that view, Van. I mean, we've had some economists, projecting that India's economy could grow as low as 5.8%. What would it take for you to reassess the number that you have right now?
As I said, we have 6.3 to 6.8 as the range for our GDP number. And we said we will not remove this range at this point after a very good first quarter. And also the second quarter, until August, the domestic economic variables were showing pretty good momentum. If, as I said, as I hoped, that this tariff impasse is not short-lived and turns out to persist well into the new calendar year in 2026, then we will review this. At this stage, I would still stick to the fact that when I say 0.5 to 0.6% impact with the midpoint of 6.5 in my range, it is not too far away from what some private sector economists are putting out. But, we should also remember that the consensus widely underestimated the first quarter GDP figures.
The GST taxes and the cuts which are coming, I'm just wondering how much of a buffer will that provide the economy?
So in the current financial year, I think it will bump up the GDP by somewhere between 0.2 to 0.3%. And the full effect may be felt in the next financial year. And that indeed is a very important buffer. So this rate rationalization has been a fairly significant and profound exercise. And on top of the fact that overall inflation has already been very well behaved. Food prices have been lower. So, and if you remember, we have a direct tax cut provided in the budget in February. So you are looking at 3 important tailwinds for consumption, spending, disposable income, etc. Direct tax cut, indirect taxes, and an extremely well-behaved food inflation. These things can actually shore up the domestic consumption quite significantly, offsetting the export drag that is likely to come from the tariff that the U.S. has imposed on Indian goods.
The thing is, the bond market is pretty much on edge. We saw how yields surged because they're concerned about the fiscal position of India. I mean, what can you say to allay those concerns?
Absolutely, Haslinda. I think we should remember 2 things. The bond market reaction in India was also in keeping with the pickup in bond yields at the very long end in different Western nations, G7 countries as well. That is point number 1. Point number 2, the Indian bond market yields have softened since then. The 10-year went to as high as 6.6. And if I'm not mistaken, as we speak, it is closer to 6.47 as you're showing on the screen right now. So there has been a pullback in the bond yields spike. And again, remember, we promised to bring down the fiscal deficit to GDP ratio by more than half from 2021 level of 9.2%. And we have done that. And we are quite committed to ensuring that fiscal prudence and fiscal stability remain the pillars of our macroeconomic performance in this financial year as well. So we are very confident of being able to meet the deficit target of 4.4% of GDP.
But Van, revenue growth has been weak. Some say that, you can only imagine India will have to issue more bonds to support the spending that it wants. Will it? Will it have to?
Well, non-tax receipts have held up very well, and I think in the recent interview post-GST, the Honorable Finance Minister has spoken about privatization, disinvestment targets, etc., and a momentum being imparted to asset monetization and so on. And there is also room for taking a look at some of the expenditure items, etc. So I think in line with the good receipts and dividends we have seen from the central bank, etc., I think overall we are confident that there will be revenue compensation coming in from non-tax sources, and with expenditure also being closely monitored, etc., with the recent technological improvements actually enabling the government to do very, very tight and efficient cash management. We are confident that we will be able to avoid major slippages in the fiscal deficit target and be close to the 4.4% of GDP, if not at 4.4% itself in the current financial year.
We're seeing warming relations between India and China. We're seeing perhaps the resumption of direct flights, easing of visa restrictions. How should one look at developments in relations between the two countries?
Well, I mean, these normalization efforts, as the Ministry of External Affairs has been saying, have been in the works since last year when the Prime Minister and the President of China met on the sidelines of the BRICS summit in Kazan. So I think this is part of the normalization after what happened in Galwan in 2020.
What could be the next steps in terms of easing investments? What can be expected?
Well, I think the government is considering that. I think it will be premature to speculate on that. There have been several reports in the media. I've also been following that, but I think it will be premature to speculate on what they would be in public. And it won't be a good thing to speculate on what those measures would be in public at this stage.
Van, you've expressed confidence in India's economy. I'm just wondering what you view as the biggest risk for it right now.
Well, sure. I mean, the biggest risk is the tariff uncertainty and the tariff impasse lasting longer than what I hope that they would last, and continuing into the next financial year, and that having impact on sentiment overall, leading to private sector pulling back on capital formation and employment generation, etc., offsetting the very positive impacts coming from the direct and indirect tax relief, etc. So that is the most important risk that we see. But otherwise, we have a lot of things going for the Indian economy domestically. We have had a great monsoon. We have had a very high disposable income in the hands of the public. Oil prices are well behaved. The government is implementing reforms. There is a lot of momentum and trust on deregulation, both in the union government and in the state government level. So the external uncertainties have indeed imparted a dynamism in the domestic economy in terms of both growth, economic activity, and reforms. They will offset some of this drag, but I think it's important to ensure that the current impasse gets resolved soon, and India can actually look at a growth prospect of more than 7% in the next financial year.
So given the optimism you have in India's economy, no need for India to say sorry to the U.S., Van?
I'm not going to comment on that one, Haslinda. I'll leave it to the diplomats to take care of that. Yeah.
We know that the framework for inflation targeting is up for review in March, and you have said before that the volatile food inflation should not be included in that. Do you still share that sentiment? Do you still hold that view?
Well, I mean, from a conceptual perspective, in general, any agency has to be given the responsibility to achieve a target over which it has control. Definitely, yes, a central bank should look at second round effects if they happen, but maybe it is possible to impart flexibility even within the existing framework. I mean, the framework comes up for reconsideration only next year, and the central bank has done the right thing by putting out a discussion paper. So all views will be aired, and of course, whether we stick to the current approach or we look at something else, one has to look at the net cost and benefits to the economy and the potential for unintended consequences. I'm also aware of the fact that once a framework is put in place, any change that is made, we have to keep in mind the reaction of the financial markets, the bond market, especially given that India is now part of the indices, global indices, etc. So all these factors have to be weighed, and one cannot simply approach it from a conceptual purity argument alone.
Van, before we let you go, the RBI, how much support do you think it will give to the economy?
Well,
how many more rate cuts are we looking at, Van?
I'm not going to speculate on that in public either. It is up to the central bank. They have done a fabulous job so far this year, providing liquidity support, removing some of the macro-prudential measures, and cutting interest rates as well. I'm sure the central bank and the Monetary Policy Committee know what they are doing.
नेचुरल गैस लगता है ब्रेकआउट के लिए जाने वाला है. नेक्स्ट रेजिस्टेंस सीधा फिर 296 298 के आसपास ही है. गैप अप ओपन एंड देन मार्केट कंटिन्यूसली मूव. ओपन इक्वल टू लो तो नहीं है, बट गैप अप कैंडल जरूर है. रेंज भी ब्रेक हो रही है. साइडवेज ना जाए बस. मोमेंटम होना है तो यहीं से हो जाएगा. ऑयल में भी टारगेट होने वाला है. इसमें क्रूड ऑयल में ध्यान रखना. ठीक है, इसमें कोई नीचे सपोर्ट तो नहीं है वैसे. यहाँ तक देखोगे पूरा एरिया खाली है. देयर इज नो सपोर्ट टिल हियर, बट इतना बड़ा टारगेट डायरेक्टली तो गिरना नहीं चाहिए. 150 पॉइंट डायरेक्टली तो गिरेगा नहीं. तो यहाँ पर हाफ प्रॉफिट बुक करके ट्रेल कर लेना. नहीं, ठीक है, हाफ प्रॉफिट बुक करके ट्रेल कर सकते हो. उसके बाद फिर देखते हैं. में भी कैंडल गैप डाउन हुई है. ओपन इक्वल टू हाई तो नहीं है, बट गैप डाउन जरूर है. इसमें नहीं है. Britain could cut visa from countries that don't accept migrant return. Wow. रेजिस्टेंस पे होगा, देखेंगे लास्ट रेजिस्टेंस ही है। ठीक है, नेचुरल के बड़ा इंपॉर्टेंट लेवल पर है, लास्ट रेजिस्टेंस जो नहीं है इसके ऊपर अगर ब्रेकआउट हुआ सक्सेसफुली तो फिर नेक्स्ट रेजिस्टेंस सीधा 295-98 के आसपास ही है। सो दिस इज द लास्ट रेजिस्टेंस जोन फॉर नेचुरल गैस। सेवन PM होने वाला है, यूएस मार्केट इज गोइंग टू ओपन। दैट इज लेफ्ट, क्रूड में भी बुक कर लेना, ठीक है। ये कोई बहुत बड़ा टारगेट तो नहीं है, 50-60 50-60 पॉइंट, 66 पॉइंट का टारगेट है, तो ऑन एन एवरेज 60 पॉइंट ही मान के चलो। इसके नीचे सस्टेन करेगा तब कहीं चांसेस है डाउन जाने के, नहीं तो फिर से यहीं से रिटर्न कर जाएगा वापस उसी रिटेस्ट पे, क्योंकि रिटेस्ट पे मॉर्निंग से ही पड़ा हुआ है, कोई बड़ी सेलिंग आ नहीं रही है रिटेस्ट से। मार्केट की कैंडल भी थोड़ी वॉलेटाइल हो सकती है, तो थोड़ा ध्यान रखना यूएस मार्केट की ओपनिंग पे। अगेन देयर इज नो डेटा शेड्यूल फॉर टुडे, आज कोई डेटा तो नहीं है, बट इस वीक यूएस का इन्फ्लेशन का डेटा आएगा, सीपीआई का और अनएम्प्लॉयमेंट क्लेम्स का डेटा भी है, जिसको मार्केट नॉर्मली वॉच करेगा। वो थर्सडे को है आपका। वेडनेसडे को क्या है फिर? वेडनेसडे, हाँ थर्सडे को ही है सीपीआई का डेटा। थर्सडे को कोर पीपीआई और पीपीआई का डेटा है, तो वेडनेसडे और थर्सडे इंपॉर्टेंट डे रहेंगे। मार्केट के बाद देखते हैं क्रूड ऑयल। देखो अगर ये क्रूड ऑयल यहाँ से वापस गया ना, फिर तो इसमें मोमेंटम होना शायद ही है, रहेगा दिन में। ठीक है, नेचुरल गैस स्टिल ऑन रेजिस्टेंस, अभी भी ब्रेकआउट नहीं हुआ है। ब्रेकआउट होता है 281.2 के ऊपर सक्सेसफुली, तो फिर नेक्स्ट रेजिस्टेंस सीधा 295। नहीं होता है तो फिर ये रेंज में बढ़ना हुआ है, इसी रेंज में फंसा रह जाएगा आज के दिन। 280 से 270 के बीच में 10 पॉइंट की रेंज है।
What they are going to invest so that they can curry favor with the president.
Politics and PR, marketing down in Washington.
That was quite
I understand all of that. Let's stay on 2026 and market pricing for 26. I think there's some tension brewing here. If you believe there's a real threat to the independence of the Federal Reserve, you've got to ask yourself why we're only pricing a handful of rate cuts through 2026. You can have one. You need to have the other two, which is why Mark Cabana of Bank of America came on the programme earlier on this week and made the case, why would they stop at 3%? If you're really worried about the independence of the Federal Reserve, and this Federal Reserve, this institution being totally captured by the White House, then you should also believe interest rates are going way below 3% for 26 and beyond.
This is a market that isn't yet truly very concerned about the loss of Fed independence, because if it were, you would see a runaway in inflation expectations and break-even rates. You are seeing a weaker dollar, but not the kind of dollar crash that you might see. You are seeing gold as the hedge that really is gaining some clout. But to me, this is really a key question, is the basis of the interest rate cuts that are priced into the markets, splitting the difference between people who think that they can just stay the course and those who think that they're going to cut well below 3%.
No drama so far this morning. Equities coming into Friday at record highs. Futures this morning up another 0.2%. Coming up this hour, Chris Verone of Strategas as equities bounce back to all-time highs. Steve Englander of Standard Chartered on what it would take for a 50 basis point rate cut, and Sarah House of Wells Fargo on the fragile standing of the US labour market. We begin this hour with stocks at record highs as traders count down to this morning's jobs report. Chris Verone of Strategas, a bad company, writing the following: there's a fine line of rates up and down for the right and wrong reasons in this business. Chris joins us now for more. Chris, good morning.
Great to be here.
Let's get to that quote that you've just laid out. Are we looking at rate cuts for the right or the wrong reasons?
Well, I think we'll use the leadership within the equity market to make that judgment. And what I take some comfort in, and I think, Lisa, you addressed this, is the Fed cutting to spur reacceleration, or is it cutting as the market already reaccelerates, or the economy does? And I think it's more the latter right now. When I see consumer discretionary acting as well as it is, when I see banks globally continuing to really carry the flag of leadership here, I think the economy is okay. So I think we're cutting into it. There is a fine line, I do think, between what level lower bond yields actually start to suggest, hey, wait a second, is the economy actually slowing? I would suspect that's more 380, 375 on 10-year yields, not breaking this 420 number. We've been more bullish bonds, I think, than the street. I think the market's validating that, but I do want to be a little bit mindful of kind of where that line in the sand is.
You've mentioned that cyclical tilt that's emerged in the equity market more recently. You've talked lots about it. Are you seeing any economic data validate the cyclical tilt?
Well, I think at the end of the day, you have to remember a couple things. I say, number one, unemployment claims are still in the 225 camp. We actually went back and looked historically, where are claims typically when you get your first negative payroll print? They're more like 275 or 280, not 225. So I think the timely employment data is still in pretty good condition. And then when I shift globally, I see things like PMIs actually starting to hook up. I see Chinese money growth starting to hook up. I think maybe the most important leading indicator out there, London copper, has started to perk its head up here. So I think there's some evidence on balance that would suggest the global economy is actually reaccelerating. Now, the great irony of this is we're only 6 weeks removed from the IMF cutting global growth. That is one of the great contrarian indicators of all time, and it's right about the time we began to see all these kind of very potent cyclical indicators start to turn.
That was so wonderfully harsh, said so nicely. In other words, you just bet against the IMF no matter what they say?
There's very few things in this business that work time and time again. That has generally been one of them.
One thing that you said is you're bullish on bonds, and yet you see a global reacceleration, which sometimes will come with inflation, especially if you see copper prices reaccelerating and it coming from places like China. So what makes that work
that
for you?
Contradiction,
yes,
right?
Exactly.
So I want to be clear about a couple of things. I say, number one, I'm very keen on this idea of reflation before inflation. And I don't know if the ultimate destination is inflation, but I think there's some reflationary vibe starting to weave its way through markets. You see it with life in copper and some of the materials, even a hint of life in the energy stocks. These are not leadership yet, and nor are they happening at the expense of the consumer. That's what I think is really key here. When you start to lose the consumer because materials or energy are working, that's a problem. That's not what's happening here. Discretionary still acts great. On bonds, this is a U.S. call. I think the U.S. bond market is the envy of the world right now. When you look at where German yields are, where French-German spreads are, even what we've seen in Japan. So this is a U.S. bond call. I think, frankly, it reflects year over year the fiscal condition is better here than it was a year ago. And I think year over year, the fiscal backdrop is worse in Europe than it was a year ago. I think the bond market has that. That's that convergence trade. You're seeing German-French spreads kind of migrate their way back to where nominal U.S. yields are.
We can get into fiscal and the idea of growth versus the fiscal deficit and how much tariff revenues will or will not plug that hole, depending on court cases, et cetera. But on a broader level, how much is this also a bet that there will be some modicum of, I don't want to say yield curve control, but yield curve control?
Yeah, I think the old Marty Zweig rules of don't fight the Fed should be revised. Don't fight the Treasury here seems to be the operating rule these days. And I think, listen, the pendulum historically, when you look between where the power is in the financial markets, the Fed and the Treasury, that swings over time to time. And basically since the Volcker years, it's been with the Fed. I think that is clearly shifting now back to Treasury. I think the bond market certainly reflects that. I was very comforted on Friday after that court case, that 7-4, the way bonds reacted. You could have made a case that you would see some steepening or some selling off in the long end. That did not happen here. I mean, 30-year yield has been completely indifferent here for 8 weeks. 10-year yields, as we know this morning, are under 420. The 2-year yield, which I joke is the only Fed speaker we need, the 2-year yield is trading at 358.
Down for 4 weeks.
So what's that, 75, 80 basis points below where the effective Fed funds is. I think it's a pretty benign environment. At the same time, you have credit conditions pretty calm. You have discretionary leading and global banks generally okay.
I'm pleased you've brought this up. I think it's been understated this week that this bond market in America has been so much more resilient relative to what we've seen play out in places like the UK and in France. When you talk about the power shifting from the Fed to the Treasury, what is it that the Treasury is doing that's supporting fixed income in America?
Well, I think, Lisa, you make a very good point, and I'm reminded of those kind of early 1950 Treasury Accords where we were able to keep the long end relatively controlled as we kind of came out of World War II. I do think it's interesting from a rate perspective. You look at 30-year fixed as well. You're about to break below 660 here on the 30-year fixed, which really means there's nothing in its way to about 550. Why are home builders turning up? Why are housing stocks generally turning up? I think there's certainly some cover on that front. I think the harder question here is, what is gold's vote in all of this? Because gold is still the one piece of information out there that probably runs counter to some of the things I'm saying, with gold making new highs this week. Is that more a reflection of some U.S. fiscal condition, or is it just a response to fiat's bad everywhere around the world?
I'll add one to that.
Yeah.
The dollar. The fact that the dollar is at the weakest right now for going back in 2025. Doesn't that also kind of run counter to that if the U.S. were in such a better fiscal picture than, say, Europe?
Yeah, let's watch DXY here. This is one we've been wrestling with. I think the sentiment is very, very one-sided. We've certainly seen it in our own survey work, in the positioning data. You have a lot of dollar bears, a lot of dollar shorts. We've started to see some resilience in this kind of 97 to 99 DXY range. If it can put its head above 100, I'd be open to the idea that you're going to get some type of a rally. Remember, if you believe the ECB is done, and I believe the ECB is done here, I think German two-year yields are telling you the ECB is done. When the ECB was cutting, Euro counterintuitively was strengthening. If ECB is done and we're passing the torch of rate cuts to the Fed, I do wonder if that, again, somewhat counterintuitively, is the reason you might get some dollar strength in the months ahead.
You think it's about relative growth and not relative
Absolutely.
rates?
I think right, you kind of go back to the old Soros rules of the world, right? There are times when the FX world was driven by rate differentials or by growth differentials or policy differentials. I think rate differentials are not what is driving FX right now. I think it's growth differentials. And my suspicion is the Fed taking the baton of the easing cycle here may be bullish for DXY.
New orders picking up. ISM manufacturing services yesterday, big time.
Yeah, well, this is the reason why I think it's curious. If the U.S. really is doing so much better fiscally, why the dollar has been so persistently weak, why people come on the show and they say, buy Europe, right? I mean, at what point is that the reason why you might end up getting some sort of big reversal?
You know, it's funny. I said this at a dinner this week. 10 to 1, the client questions are more about Europe than Japan. Yet Japan's the real bull market. The ability with which Nikkei or Topix or any of the Japanese indices have shrugged off what you've seen in the JGB market is remarkable. Japanese banks continue to trade well. It has more of the stocks that frankly fit the themes that the market craves right now. Japan is one of the real bull markets in the world right here, yet it gets not even remotely the same attention that, say, Europe gets. Just an observation.
Just quickly, why do you think that is?
I think we've all been trained to look at this move in JGBs and suspect the worst must come. Yeah. I think it's the same mistake a lot of people made here in 22, early 23, when they missed actually the stimulative effect that higher yields were actually having. You know, Japanese consumer discretionary is really outperforming here. I think that's a suspicion, or that's a signal that higher rates are not as debilitating to the economy there as many might expect. The yen has actually been fairly stable here, kind of in this 145 to 150 neighborhood. I think it's notable all the Japanese autos have started to turn up here. Japanese banks continue to act well. 80+% of the Nikkei is above the 200-day right now. That's about as good internally as you'll see anywhere.
Dollar yen, 148 this morning. Chris, it's good to see you.
Thank you.
Thanks for dropping by. You got a jobs number? Quick guess?
Streets at 75. I'm a bit more optimistic, low 100s.
OK, looking for a bounce back. Chris, thank you, sir. Chris Ferrone there at Strategas with an update on stories worldwide. With your Bloomberg brief, let's cross over to Yahara Anand. Hey, Yahara.
Hi, John. The Justice Department has opened a criminal investigation into whether Federal Reserve Governor Lisa Cook committed mortgage fraud. Sources telling us here at Bloomberg that federal prosecutors have issued subpoenas. Cook has denied the allegations against her and is fighting President Trump's attempt to remove her from the Federal Reserve. Meanwhile, the new chief at Paramount Skydance is calling all his employees back to the office 5 days a week. David Ellison saying he believes collaboration is vital to the success of the business. The mandate comes as staff are bracing for even more job cuts. Paramount slashed more than 3% of its workforce ahead of the August merger. And WNBA star Caitlin Clark has announced she will officially miss the rest of the regular season and playoffs. The Indiana Fever guard has not played a game since suffering a groin injury back in July, according to ESPN. Clark also suffered a bone bruise to her left ankle during an August workout. The 2024 number one pick played just 13 games this season. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later this hour. Up next on the program, chip tariffs coming shortly.
Chips and semiconductors, and we'll be putting tariffs on companies that aren't coming in. We'll be putting a tariff very shortly. If they're coming in, building, planning to come in, there will not be a tariff.
That conversation up next with Ed Mills of Raymond James, live from New York City this morning. Good morning. Payrolls just around the corner, 2 hours away. Later on this morning, a conversation on the economy, on tariffs and trade with the Commerce Secretary, Howard Lutnick. Howard joins us a little bit later this morning at 8 a.m. Eastern Time. Don't miss that conversation. Ahead of all of that, equity futures just about positive on the S&P 500 by 0.2%, coming into Friday at all-time highs. Under surveillance this morning, chip tariffs coming shortly.
Chips and semiconductors, and we'll be putting tariffs on companies that aren't coming in. We'll be putting a tariff very shortly. You probably are hearing we'll be putting a fairly substantial tariff on, not that high, but fairly substantial tariff, with the understanding that if they come into the country, if they're coming in, building, planning to come in, there will not be a tariff.
So here's the latest this morning. President Donald Trump saying tariffs on semiconductors are on the way. Trump hosting tech executives at the White House, noting companies pledging to boost U.S. investments like Apple would be spared. Bloomberg's Tyler Kendall has the latest. Hey, Tyler.
Yeah. Hey, John. Good morning. So we know the White House has been gearing up to announce these sector-specific chip tariffs, but at this point, the timeline really does remain unclear. Back in April, the administration had launched that Section 232 investigation over national security concerns into the entire chip supply chain, from the equipment used to make the chips to those downstream products that use the chips, like consumer electronics. And we saw a whole host of those tech execs that really rely on these chips yesterday at the White House, where, as you mentioned, President Trump appeared to reaffirm the idea that if these companies onshore production, they will be given a reprieve. Now, he highlighted Apple, which has so far committed $600 billion in U.S. investments. And while that number is, of course, very substantial, our own reporting indicates that it does fall short of the White House's goal for a full shift to U.S. production that they originally envisioned and had pushed the company for. Now, these tech execs have been lobbying this White House for some sort of carve out, some sort of reprieve from the beginning. And it really comes at a time now where Washington is pulling these other levers to try to exert control over the global chip supply chain. Take, for example, earlier this week, the White House moving to revoke waivers from companies that ship chip supplies to China, impacting the likes of Samsung, TSMC, and SK Hynix. Now, John, of course, ultimately, one of the biggest things that we're waiting for is where these chip tariffs are going to come in. You heard President Trump there say they won't be too high, but they'll still be very substantial. Most recently had floated it could be a 100% tariff, but he's also threatened as high as a 300% tariff rate.
Tyler, appreciate the update. Tyler Kendall down in Washington. This news just crossing a social media post from the president on China, India, and Russia. Looks like we've lost India and Russia to deepest, darkest China. May they have a long and prosperous future together.
This follows what he said with them conspiring over in China with Xi Jinping when you saw them all together on the red carpet. A real question here about what this means with respect to the Indian tariffs in particular. Very interesting to a lot of U.S. companies that have shifted their manufacturing production to India from China and are hoping for a reprieve rather than actually changing any of their business plans in the wake of some of the high levels of Indian tariffs.
We've got Ed Mills standing by, joined us from Raymond James. Ed, welcome to the program. I'm sure you're following the latest with India. What do you think the end game is here?
I think there's going to be a deal. I think that what we're seeing here, John, is escalating to de-escalate. I think that the president thought that India was going to be first after the April 2nd reciprocal tariff announcement, there was really good negotiations with India. They weren't able to get that to the finish line, and I think he's been frustrated with them. Right now, India is the only country that has secondary tariffs for Russian oil. We don't see it on China because right now President Trump is trying to have a good relationship with China. The reason for that is that we need China's rare earth minerals. We were really close to shutting down a lot of industrial production here in the United States a couple of months ago because they weren't sending it to us. So we got a detente with China. We've been getting their rare earth minerals. We're able to produce what we need to do. We don't have that same relationship with India. So he's trying to push as hard as he can, trying to get India to the table, trying to get them across the finish line and get a deal. This is classic negotiations that I've seen time and time again from him.
And it comes after a conversation with tech leaders, including Tim Cook of Apple, after Apple reported that their Indian sales hit a record $9 billion, and they've talked about moving production to India. Has the U.S. and this administration lost leverage during this process, given the increasingly close, or at least the appearance of it, relationship between Modi, Xi Jinping, and Vladimir Putin?
Lisa, that's a good question. I'm not sure if it's been a complete loss of leverage. I do think it is that frustration. I do think that President Trump wants to have the United States to maintain this sphere of influence. There has been a narrative out there that, look, if you see a lot of production moving from China to India, what does India provide for the United States? Early on in this administration, when I talked to a lot of Trump administration officials, they always put India number one. They said, look, India has about an 18 to 20% tariff on almost every good worldwide that comes into their economy. It's 1 billion plus people. Is there an opportunity to bring that for U.S. companies down to zero? The juice would be worth the squeeze when you have the highest, tariff rates, one of the largest populations compared to a lot of other countries where we already had free trade agreements. To me, this really is about the optimism that they had in January and the pessimism that they've had as they've gone through this process and still have not been getting across that finish line.
And maybe the changing goals, Ed, and this is something that John was touching on yesterday. There's a real tension here about whether the administration's goal is to bring in revenues to plug the deficit, whether it's to bring business back to the United States, or whether it's to really penalize some of the rivals, I should say, with the United States on a geopolitical scale. Are we getting a clear sense of which it is?
Yeah, Lisa, what I've always told clients at Raymond James is a three-pronged process. Number one, bring in revenues. We have a big trade deficit. We just passed the largest bill in the history of the country with the tax cuts. Number two, protect national security interest. If we are at war with China, if we are at war with any large country, what do we need to produce here in the United States? That's semiconductors. That's why the president is putting those tariffs on semiconductors that you led off this program with. And number three, can you use the economic force of the United States to force that policy change? Open up countries that have not been open, lower tariff and non-tariff barriers to produce more opportunities for U.S. companies, because that tax bill also has a lot of incentives to build here in the United States. If you can use those incentives to build in the United States and then provide them with export markets that didn't exist, to me, when I've talked to folks in the administration, that's their three-pronged strategy to promote the United States in our economic growth.
Ed, appreciate the update from you, sir. Ed Mills there of Raymond James. Thank you very much. With Ed's thoughts in mind, very much in mind, we'll be talking to the Commerce Secretary later this morning, Howard Lutnick. We need to talk about this $550 billion investment fund, this agreement with Japan, exactly how this is going to work, how it's going to be enforced.
Is this essentially just money that's being given over? Is it something where the U.S. keeps the control, but the Japanese give the money? Is this to try to, sort of plug any kind of trade deficit with giving the money that otherwise might get withdrawn if you do reduce trade? Look, there's so many questions. To understand what the scope of this investment is and how different it is from what was already announced is going to be key.
Lots more on trade still to come. If you are just joining us, welcome to the programme. We arrive into Friday at all-time highs on the S&P 500. Futures up again by 0.2%. The jobs report very much in focus. In just a moment, we'll catch up with Steve Englander of Standard Chartered on how today's payrolls print could lead to a 50 basis point rate cut. Plus, we'll touch base with Danny with your morning movers as Lulu slashes its outlook. That stock is down almost 18%. Two-day winning streak on the S&P 500 coming into Friday at record highs on the S&P, adding some weight to the rally. Futures up by 0.2%. On the Nasdaq 100 up by 0.5%. On the Russell, small caps looking for the fifth consecutive week of gains, up every single week since that disappointing payrolls report for the month of July in early August. In the bond market, just before that payrolls report, your 2-year was in the 390s. This morning, it's in the 350s, down just a little bit going into payrolls, down again on 10-year bond yields. Bramo, 415.48 on 10s this morning.
You know, to me, this has really been the vote that there will be lower yields ahead, and we won't get runaway inflation, or potentially that we'll get some sort of Fed, not control, but influence over the long end of the yield curve. Either way, this hasn't been a bond market screaming about runaway inflation and runaway growth, albeit at a strong pace.
On the week so far, bond yields down across most maturities, 2s, 10s and 30s. That's the cross-asset setup. Let's get you some single names, some morning movers. With more, here's Danny Berger. Hey, Danny.
Hey, John. A major coup for Broadcom. They will be working with OpenAI to develop specific AI chips for them. Those shares up 9 1/3% really shows that they are in this race. They are a serious challenger to NVIDIA. The CEO saying they already have $10 billion worth of orders and shipments will start next year. Oracle, some of our exclusive reporting here, kind of a similar thing, trying to cement their status as a major player in the AI infrastructure build out. $38 billion is the amount of debt that they will be raising in order to build out some AI infrastructure. Again, we're in this world that spending, loading up debt is a good thing this time around because it means they can play in AI. Those shares up just under 2%. The real mover to the downside this morning, though, it is Lululemon. Yet again, cutting their forecast, something Lulu has done consecutively this time. Shares are down 18%. It cited higher costs. It's starting to raise prices, competition among Alo, Viore, and also a $250 million hit when it comes to tariffs. So all that sponsoring of U.S. Open players, you literally can't go anywhere and see Lululemon without them talking about tennis, seemingly not helping them right now, John.
Lisa saw it coming. Viore, very early on.
Oh,
Danny,
yeah.
thank you.
I'm definitely a fashion trend setter. That's definitely my reputation.
Danny, thank you very much. More from Danny in the next hour. One more stock for you. Tesla in the pre-market. Check this out. Big news. Tesla proposing a new compensation agreement for the CEO, Elon Musk.
Yeah, let's talk about the worth of this potential pay package over the next decade. $1 trillion. So Elon Musk, already the world's wealthiest individual with some $374 billion of net worth. He could become the world's first trillionaire. That's essentially what this means at a time where the board is saying we need to incentivize him to stay and perform. And if we can, that is going to be key to the future. So evidently, what does it take to get it done? We all have a number. His is $1 trillion.
$50 billion pay package back in 2018. Remember that one?
Oh,
that
yeah.
incentive package struck down by a Delaware court. Clearly, they need to keep him engaged in the company.
Yeah, and they're trying to get him to they're setting certain targets, saying if he supersedes those, he gets the $1 trillion pay package. It's just as notable how everyone has a number. We've talked about this many times, probably off air.
Sure,
but
mine's not $1 trillion.
Yours is $1 trillion, and maybe his wasn't, 20 years ago. But now, for Elon Musk to get it done, his number evidently is $1 trillion.
There is some clear and obvious key man risk associated with that company. That stock is up by close to 2%. We'll have more on Tesla later this morning. On our radar this morning, some of our top stories for you. President Donald Trump saying he'll impose fairly substantial tariffs on chips very shortly during a White House dinner attended by top tech executives. Trump adding the companies pledging to boost their U.S. investments will be exempt. Broadcom teaming up with OpenAI to design and produce an AI chip to take a market dominated by NVIDIA head-on. Broadcom's CEO saying the company has secured more than $10 billion in orders from OpenAI with plans to ship starting next year. And finally, the Department of Justice opening a criminal investigation into Fed Governor Lisa Cook over allegations of mortgage fraud. Cook responding that the allegations disguise the president's true intentions of gaining control over the Fed.
This is a frustrating story for me. I'll tell you that all around it feels kind of icky. On one hand, you could say, is this politically motivated? Well, why did they originate with the FHFA? Why were they going after line by line a particular type of what they call mortgage fraud that is fairly common? On the flip side, she is a Fed governor, and if she did some of this, then potentially that is problematic. Either way, we're talking about all sorts of layers of ickiness. On one hand, political interference. On another hand, any kind of malfeasance, whether it's common or not, with respect to mortgage applications at a time when a lot of people are saying, can't we just make the noise go away around the Fed so we can get back to some sort of traditional Fed policy? And the answer clearly is no.
My question this morning, who's more likely to be at the Fed meeting? September 17th Fed decision? Stephen Myron or Governor Cook?
I have no idea. I mean, right now it seems like Stephen Myron got a pass, regardless of some of the concerns about him staying on the Council of Economic Advisors, or at least pausing that while he goes to the Fed and then returning to it, even though he doesn't like the revolving door.
Our next guest gets that question. Start thinking about it, Steve, all right? Less than 2 hours away from the payrolls report, the first jobs report since President Donald Trump fired the previous BLS director. Trump saying the first real jobs numbers won't come until next year. With the latest, here's Bloomberg's Mike McKee. Good morning, Mike.
Good morning, John. Well, interesting thing we heard from the president last night. He didn't seem very excited about the numbers, saying that next year is when we're going to see some good employment numbers. If that's the case, then prepare Wall Street for what might be considered bad news under any other circumstance, but would be considered good news this time around because it would back up the idea of a Fed rate cut. If we got 75,000, which is oddly enough the whisper number as well, suggesting maybe people don't really have a good idea of what the number is going to be today, and we don't get a big revision, then does everybody just nod and go about their business and wait for CPI next week? That's going to be an interesting question to see what the market reaction is today, because we put so much on this number that if it doesn't surprise somehow, people might be a little bit surprised.
Mike McKee with the latest down in Washington, D.C. Mike, stay close. We'll catch up with you later this morning going into this print. Sticking with the labour market, Steve Englander of Standard Chartered has this to say. In our view, published non-farm payrolls below 40K and an unemployment rate of 4.4% will make a 50 basis point rate cut more likely. Steve joins us now for more. Steve, good morning. Good to see you.
Good morning.
What's your base case at the moment?
Our base case is still 25 because we're not sure where the payrolls are, and we think the published number, even though we disagree with the accuracy, will be 75,000.
Oh, you've got to get into that. You disagree with the accuracy. What does that mean?
We think it actually overstates growth by about 70,000. The issue is that there are two measures of jobs created by newly formed firms, less closing firms. One is accurate, and through 2024, it tells us that's running like 10, 15,000. And then you have the so-called birth-death adjustment that's running like 90, 95,000, which is based on kind of a very rough and ready model. So we would go with the 10 to 15,000, and that's going to be the major source of the downward benchmark revisions for through March of 2025 that we're going to see next week.
This is the reason why the Fed has been talking about the unemployment rate as being possibly more important than the actual number, because a lot of the responses to the Bureau of Labor Statistics surveys have come in late. And that's the reason why revisions have been so significant. Do you buy that?
Not entirely. I mean, some of it's lateness, but some of it is that, the model itself has no behavioral characteristics. They do a sample of 160,000 firms and 600,000 establishments. And basically, they figure out, okay, in these firms, they were in operation last month, this month, how much has jobs changed? Then when they get to the new firms, they take this very kind of odd, model. And, if you seasonally adjust those numbers, birth death has been stable at 95,000 in a way that's like completely implausible.
So you believe that the labor market is a lot weaker
Yes.
than it currently is showing, and that a 50 basis point rate cut should be on the table?
Yeah. Sorry.
Go ahead.
I worry about casual sort of conversations where you take a top-down analysis that says, oh yeah, potential, employment growth is 50 to 75 or 100,000, but you don't realize that analysis is correct, but the number that's published is way off.
But no one actually thinks that this Fed, or very few people, the market is not betting this Fed will drop rates by 50 basis points, even with that threshold, simply because you have the likes of Beth Hammack of the Cleveland Fed coming out and saying she doesn't want to cut at all. So at what point are you saying yields on the long end should be a lot lower if you think that the economy is a lot weaker than it currently is being stated? And this is not a Fed prepared to cut rates as quickly as you think is warranted.
Well, I'll tell you, I don't think they have to cut rates a lot. I think that they have some catch-up to do. I think had they known the numbers in June as they were going to play out, they probably would have done 25 in June or July. Because ultimately, if the labor market is weak, that kind of takes care of inflation for you. I think that's Waller's view. And I'd say this, that even though the unemployment rate is stable, you look to employment to population ratio, it's going steadily down because we know participation is cyclical and the participation rate's been dropping. So saying, okay, it's been flat at 4.142 is actually pretty misleading because employment to population is going the other way.
Let's talk about catch-up, or we should say catch down. Catch down to what? Let's talk about interest rates and this glide path towards whatever neutral is. How are you thinking about that glide path?
We don't think that they have to do much more than we have 25 and nothing, but they could do 50 if the numbers are soft. We don't think they have to do much more because that will take them pretty close to trend. And, and again, when you look at the economy, nothing's falling off a cliff.
That sounds like a mid-cycle adjustment, not an end-of-cycle easing cycle. Is that fair enough?
Yeah, no, and switching to the dollar for a second, we think that there's downside dollar risk in the short term as, these data risks are kind of incorporated. But once we get past that to the end of 2025 and into 26, we think the market will back away from Fed cuts.
Well, to that point, there's a time limit to this conversation. It's May 2026. We'll have a new Fed chair, and arguably a completely different way of looking at the world, won't we?
Yes and no. I mean, the bond market's way of looking at the world is not likely to change. Ultimately, there's some market discipline that gets imposed. And yes, even Moran yesterday, kind of probably used the word independence 100 times in his discussion.
What does market discipline look like?
I think, we saw this in April after the Liberation Day tariffs were announced. The market really didn't like what it saw. And bond yields, backed up severely. Risk premium backed up severely.
Did we see discipline over in Europe with respect to yields, particularly in France and the UK, at a time where the economy is struggling? And you're seeing that in the revisions in the UK, too, because the data there isn't so great either, evidently. Or is this just the tip of the iceberg?
I'll tell you, the UK is trading like an emerging market economy. The characteristic is currency and interest rates have currency goes down, interest rates go up. It means the market's adding risk premium to asset prices there. I think Europe is a bit different because the ECB is a very much bigger area. I think if France itself was trading off French characteristics, we'd probably see something similar to the UK.
Steve, just finally, the UK is trading like one. Is it being governed like one?
They have a tough situation. There's no spark of growth. And, inflation is kind of stubbornly high. They have all these issues. I mean, the thing that makes people somewhat optimistic about the U.S. is that you say maybe AI, maybe stablecoin. There's a lot of innovation. You see that neither on the continent nor in the U.K. And you sort of say, how's it going to get out of this?
And I've got no idea. And it sounds like you don't either.
No.
Steve Englander of Standard Chartered, the UK in a tricky place. Let's get back to this Fed debate. Bramo, the Federal Reserve into next year. Should there be a timeline on the kind of frameworks we have for thinking about this Federal Reserve? And does it end in May next year when we have a new Fed chair? He's talking about market discipline. Steve's talking about the market pushing back against anything more aggressive than what's already priced.
And Stephen Myron yesterday talked about moderate interest rates as a goal of the Fed, which led some people to say, is this a subtle way of pointing at some sort of not yield curve control, but some sort of attempt to mollify long end yields as part of the mandate? Look, how much of that's being priced into markets already? Markets are a forward-looking instrument, and a lot of people say that the number of rate cuts being baked into the market is as big as it is because of that change in composition.
The bond market this morning, super well behaved. 2-year yields going nowhere. 358, 10s at about 416. With an update on stories worldwide with your Bloomberg Brief, let's cross over to Yahara for more. Hey, Yahara.
Hi, John. Tesla shares are moving higher in the pre-market, up 2% after their board has approved a new compensation package for CEO Elon Musk, possibly valued at $1 trillion. The EV maker has proposed a special share pool as it seeks to replenish their employee incentive pool by 60 million shares. The Tesla board has also proposed authorization of investment in XAI. Meanwhile, President Trump said he would like to see 2 candidates drop out of New York City's mayoral race to improve the chances that Democratic Socialist Zohran Mamdani loses. The comments come amid reports that Trump advisors have been in talks with incumbent Mayor Eric Adams over a potential job if he quits the race. Adams has denied the reports. And in sports, an electric start to the NFL season as the defending champion Philadelphia Eagles beat their rivals, the Dallas Cowboys, after an hour-long delay due to lightning and Eagles star Jalen Carter's ejection for spitting on Dallas QB Dak Prescott. The Eagles took a 1-point lead into the half. Then they held Dallas scoreless in the second half to win 24-20. That's your Bloomberg Brief. John?
Yahara, thank you. Got to see that. How'd you spit through a helmet? How do you make that happen? It's a skill, right?
It's sort of like the JFK documentary. I think that we should do that, the sort of loogie. Wasn't a Seinfeld episode?
Is that what that was?
Yeah, sort of to track the way that you do it.
I've got no idea what you're talking about.
Okay, great.
I'm
nobody
with you. I'm sure lots of other people do.
I'm actually sure that nobody else knows what I'm talking about.
Okay, all right. So let's talk about jobs.
I can do that.
Friday. Let's do that. Up next on the programme, signals from the labour market.
Consumers are telling us pretty clearly that labor market conditions are deteriorating. The news is going to get worse before it gets better.
Sarah House of Wells Fargo joins us next from New York City. You're watching Bloomberg TV. Just for the record, I was the only one who didn't understand the reference, but I knew that at the time anyway. Forgive me.
You did. Well,
Everybody
Keith Hernandez, the whole thing. Watch the episode. It was great.
I get it. And he did it through the helmet. I checked the video.
Thank you. It was actually pretty good analogy, right?
If you don't know what we're talking about, it doesn't matter. Payrolls are just around the corner. Equity futures on the S&P 500 positive here by 0.2%. On the Nasdaq 100 up by 0.5%. Under surveillance this morning, signals from the labour market.
Consumers are telling us pretty clearly that labor market conditions are deteriorating. My sense is that there's an ongoing sort of labor market slowdown that's already in train. It's cooling, but not collapsing. The news is going to get worse before it gets better.
So here's the latest this morning. Investors counting down to August payrolls out in less than 2 hours' time. The median estimate in our survey coming in at 75k. Sarah House of Wells Fargo writing the following. We look for payroll growth to strengthen in August with a gain of 90k, but we suspect the rebound will prove temporary. Sarah joins us now for more. Sarah, welcome to the show, as always, on a Payrolls Friday. Good morning to you. Let's just start with the 90k, and then we can talk about why it's temporary. What underpins the bounce back to 90,000?
Right. So good morning, Jonathan. So we have seen at least some signs of tentative stabilization in demand. So if you're looking at things like postings, small business hiring plans, but when we look further into the year, so we're seeing ongoing supply constraints that we think will get even worse. And I think a backdrop of even weaker consumer spending. And so that's going to dampen demand as we move into the final months of the year. So the remaining months, we're probably looking for an average gain of only somewhere around 40,000.
Do you think the 90,000, if we do get it, Sarah, big if, of course, because this is very unpredictable, do you think it would change the conversation at all going into this Fed meeting?
I think it still keeps us on track for a 25 basis point cut. So I think you will also have to take it in concert with whatever happens with the unemployment rate, which we do think will edge up. But I think overall, that's still marking a deceleration from what we've seen over the past year or so. And I think there would also be some questions over, is that really 90,000, just given the pattern of both the monthly revisions, but also even some of the benchmark revisions?
Sarah, will the rebound prove temporary if the Fed cuts rates this year?
So I think that we'll see we are expecting the Fed to cut rates. And so I don't think that that's automatically going to spur an immediate rebound in hiring. We think that that's going to come more in 2026, as you do have easier monetary policy beginning to feed through. You also have the benefits of more stimulative fiscal policy. So we still think that we're in for a rough patch here over the next few months. But I think easier monetary policy will help spur a rebound as we are in 2026.
So a number of guests have come on surveillance talk about the likelihood of a reacceleration next year because of the One Big Beautiful Bill going into effect, because of certain investment plans that have been in the pike waiting for a time for corporate executives to pull the trigger. Why do you reject that as a source of a rebound and still see a deceleration?
Well, so to be clear, we're looking for a deceleration in hiring through the remainder of 2025, but I do think that you'll see activity and hiring pick up in 2026. So the reason for that reacceleration in activity is some of the fiscal support related to the One Big Beautiful Bill Act, which you mentioned, some of that easier monetary policy, but also just, I think, businesses digesting some of these changes to trade policy. They can only delay a lot of capital spending plans so long. And so I do think that will help drive a rebound in hiring once we get into 2026, but the remaining months of the year, I think, are going to be pretty rough.
Sarah, how much weight should we put on the new orders component of the ISMs this week for both manufacturing and services, and that snapback we've seen, that bounce? What do you think that speaks to?
Yeah, so I think it is the fact that we have reduced some of the policy uncertainty since the spring. So I think that was causing a lot of businesses to pause activity. But those businesses, I think, can only wait so long as they're getting a little bit more clarity on the course of where policy is going, as I think overall economic conditions haven't softened quite as much as a lot of business decision makers have feared. I think they're going forward and moving with that. So I think it's an encouraging sign. The ISM indicators, as timely and as they've been, they're not always, I think you have to take them in concert with what we're seeing elsewhere, but it's definitely a positive sign in terms of momentum, I think stabilizing and potentially even getting set for a reacceleration as we move later on.
Sarah, 10 years ago, if we'd seen this breakdown to an average of payrolls for 3 months around 30 to 50K, I think we'd be very, very worried about recession. Is there something different about this economy, which means 30 to 50,000 isn't what it used to be?
Yeah, absolutely. So it really comes down to the labor supply picture. So we have an increasingly aging population, and so that alone points to you need essentially a lower break-even rate for payroll growth. But then you layer on top of it this market shift in terms of immigration patterns, which I think is really driving that break-even lower to where you probably don't need something. You probably need a number below 50,000, maybe even lower than that, I think, to really spark alarm in this environment. And so I do think that the goalpost is kind of moved in terms of what constitutes a jobs number that you do need to worry about right now.
Sarah, is this low hire, low fire dynamic structural or cyclical? Is this something that's going to change when the economy does reaccelerate? Or is this something that is just sort of inherent to an aging population and the dynamics that you were just talking about?
No, I think it is more cyclical in terms of there's still a lot of uncertainty. So yes, it's come down since where we were back in the spring, but I think businesses are still being really cautious right now. They don't know exactly where end demand is going to be, just given some of the tariff constraints. Even if you're not directly exposed to tariffs, if you are, you're looking for ways to reduce costs, and so you're really reluctant to hire, even if you don't necessarily want to let go of your existing workforce. So I think that you will see, as we get some improvement in terms of activity, other opportunities open up. You'll see some of that job switching resume. That's going to generate more hiring as well. So I'd lean more towards the cyclical side.
Sarah, thank you. That is the great debate at the moment in the labour market, that's for sure. Sarah House of Wells Fargo, structural, cyclical, demand or supply.
And this is the reason why people are all over the map when it comes to this. It's also the reason why everyone has a conspiracy theory about artificial intelligence replacing all our jobs and the robots coming for your lunch. I wonder how much that's a smokescreen for people who just don't want to hire any new employees and lock themselves into that kind of pay structure. So they're going to play around with ChatGPT and hope for the best.
So Chair Powell thinks it's both. I'll gloss over that.
Thanks.
Forgive me. Chair Powell thinks it's both. I think what you're saying is important. The chairman of the Federal Reserve says ultimately it's demand and supply, but we should put more weight on demand, because this can get out of control quickly, which is why I think you've seen that pivot in the last month. And that's essentially the substance of his speech in Jackson Hole.
You said the Fed has been dovish for a long time, biased to the dovish. They are conditioned by the financial crisis of 2008 and 2009, where there's an entire generation that lost and really has been left behind. They want to prevent that from happening again, that kind of scarring in the labor market. Question is this time different? Or is that really a model that you can use for the moment that we're in?
Recklessly dovish at times.
That was your phrase. Yes, there you go.
OK. Up next on the programme, Priya Misra of JP Morgan will catch up with George Pollack of Signum. Michael Nathanson of Moffett-Nathanson will be joining us, and Steve Rasciuto of Mizuho, as we count you down to the payrolls report at 8:30 Eastern Time. Equities positive by 0.2% on the S&P 500. We've got record highs going into the weekend.
If you get a bad labor market report, that's negative for U.S. equity markets.
The market's already pricing in the cuts.
If the Fed doesn't cut, that probably sets up a little bit of a pullback here.
The market's really looking at what the Fed could do as opposed to what the Fed should do.
Investors are searching for alternative forms of diversification.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures positive by 0.2% on the S&P, up by 0.5 on the Nasdaq 100, coming into Friday at record highs. In the bond market, coming into Friday with some stability. 2s, 10s and 30-year bond yields down on the week, down on the session. 2s at 358, at or close to the lows of 2025. Going into this one, the payrolls report just around the corner, 90 minutes away. The estimate in our survey, 75K.
So what's a good number and what's a bad number? People have revisited some of their expectations in a low hire, low fire type of dynamic where companies aren't making big moves. 75,000 is the expectation. As Mike said, 75,000 is a whisper, which means that no one has a clue or confidence or conviction to really move away from that. Key question to me is watch the revisions. Everyone's talking about the accuracy of the data for whatever reason. You can bring politics into it or not. But there's a real question of how much these are going to get revised downward and what that means for any kind of weakness.
3-month average at the moment is 35,000. 35,000 is not good. Even if you believe there's a lot of supply issues going on here, a step down like that is going to concern monetary policy officials. It's concerning the Federal Reserve. What would change the call on September 17th to reduce interest rates today? I don't think it's 100,000. Is it 150? Is it push 200? What would change that call?
Or is it the unemployment rate falling, not necessarily rising? The expectation is for it to rise to 4.3% from 4.2%. That might be the most important metric. We heard that from Fed Chair Powell over in Jackson Hole. He's watching that because the headline numbers are so confusing at this point, and maybe we just have to count on maybe getting something next year that's not under construction, and then we can count on the headline number. But until then, they're looking at the unemployment rate.
It would take something massive to change that call on September 17th. What it could shape is the outlook and how they communicate that rate cut, because I think the debate of the Federal Reserve now is pretty much fixed. We'll cut rates 25 basis points. The real debate is going to be about the outlook, the kind of guidance that they're willing to provide at this moment about what they're going to do next, what the glide path is down to neutral, if this is a mid-cycle adjustment or the start of something bigger.
Do you think that if they communicate anything, the market's going to take it? Or are they watching the Stephen Myron hearings on Capitol Hill? I'm serious, because at a certain point, are people listening to Fed Chair Jay Powell, or are they saying, all right, you can pencil in 2 rate cuts for the remainder of this year and then look to a much less conventional policy next year when we get a new Fed chair? This is the reason why people were interested in Stephen Myron yesterday. This is the reason why people didn't respond to Beth Hammack, the Cleveland Fed president, who came out and said she doesn't think that the Fed should cut rates at all. Markets didn't move. Yields still down. So it gives you a sense of where the gravitational force is on the Fed.
I'm right there with you. This is the final meeting for Chairman Powell where he can provide real guidance without disruption from Washington. After this, you'll find out who the Fed chair is going to be before year end. So the next round of forecasts, Chairman Powell's going to come out and say, this is what we're thinking about 2026. I'm not interested in what Chairman Powell thinks about in 2026 at the end of the year. I'm interested in what the other guy thinks about 2026.
Yeah, and what kind of inflationary pressure there really is coming down the pike. It seems like a number of Fed officials have coalesced on the idea that any kind of tariff-related inflationary pressure will be short-lived. Did you like how I did that?
I love that.
Was really, I'm trying to be academic in that. I absolutely feel
Very
so natural.
powerless.
Moving forward, there's a sense that it will fade, and yet what you're hearing from a lot of companies is they can pass price increases along to their consumers. So that, to me, is really a question at a time when there still is a dual mandate, albeit one where the employment picture seems to be taking front and center.
Inflation data next week, next Thursday. Payrolls later this morning, 8:30 Eastern Time. Coming up this hour, Priya Misra of JP Morgan with bond yields holding steady ahead of payrolls. George Pollack of Signum, as President Trump's Fed pick, plans to keep his job at the White House. And Steve Rasciuto of Mizuho as Trump pours some cold water on today's data. We begin this hour with stocks at record highs. Ahead of this morning's jobs report, Priya Misra of JP Morgan writing a consensus number around 75K would be consistent with a low fire labour market. But a weaker number would suggest that the labour market momentum is deteriorating sharply. Priya joins us now for more. Priya, good morning.
Morning.
Good to see you. You know the big debate at the moment. Yes, the labour market data so far this week is confirming a slowdown, but there's been pockets of data, new orders, that suggest maybe a bounce, a pickup. And on the equity side of things, we're talking about a re-acceleration in this economy. How are you thinking about things on the bond side?
So I think people are looking at price action and trying to put a narrative to it. I mean, I think, yes, is there pockets of strength in the data? Absolutely. There's pockets of weakness. You can look at Joel's. This is what happens in a soft landing.
what I think equity people call soft landing and bond people call sub-trend growth. But essentially, if you're growing 1 to 2%, you're going to get mixed data. And so I really struggle with that reacceleration. The bond market's not pricing it in, but I really don't see it in the economic data. Now, if you get the Fed rate cuts, we get something like last year. Now, there's a lot of talk that last year the Fed cut 100 basis points, rates rose 100. We had a lot of other things going on in the bond market as well. We were pricing in growth stimulus. We were pricing in the election uncertainty behind us. And rates had fallen to 360. I think what the bond market's saying, look at spreads, look at how much the rates are essentially priced to go down. We're pricing in the soft landing, mid-cycle adjustment. We're pricing away the idea of sell America. We're not really pricing in Fed independence being an issue. We're pricing in this idea things are slowing. The Fed cuts exactly the right amount of, that they need to cut. They get rates down to neutral, and we can stay in the soft landing. And does the economy cooperate? I think that's the big question.
It doesn't sound like you buy it at all. Do you buy that story?
I struggle a little bit with it because when we look at the under the hood, so I will say our base case, I should say 65% chance we stay in that soft landing. That's how we're positioned. Are we hedging for that downside risk? Absolutely. I think owning duration, the 10-year is not at 360 where we were last year as the Fed started to cut rates. The 10-year is at 420. 430, that's where we were adding duration. Are we max long duration? No, we're not, because we're hoping the data comes in 50, 75,000. So we stay in the soft landing. What happens if it comes in weaker? The Fed might cut 25, 50, but I'm looking at that end point after all the rate cuts. It's priced at 3%. That's not accommodative. That's neutral. So I think own some duration, have curve steepeners. These are ways you can hedge. If you own credit, if you own risk assets, your nightmare scenario is either inflation picks up and the Fed can't cut. I think that's a little lower risk today. Or is that just there's non-linearities with recessions, monetary policy works with a lag. The Fed can cut, but they can only do that much if the economy is actually slowing.
I thought the way to hedge was to go to Costco and buy a gold bar. I mean, essentially, what you're saying is back to the normal drawing board, which is somewhat controversial right now, which is that duration is actually a hiding spot in times of a downturn. What gives you confidence that playbook still works, given all the concerns, not only about Fed independence, but about longer term, some sort of unmooring of the U.S. position as the haven currency and asset class?
So there's a lot in there. So let me address a couple of things. In terms of, exceptionalism, look at U.S. growth. We're still the best. You can say, it's the cleanest dirty shirt, whatever. Our growth, we've got the AI story. All the Max 7 are U.S. companies. So I think on the growth front, that's why that sell America I struggle with. I think, yes, was the dollar overvalued? People should hedge some of their dollar risk. Absolutely. So I think U.S. growth is still good. Now, let's see. Does Europe outperform because they put in a lot of fiscal stimulus? We'll see. That's like a next 5-year, debate. On independence, I mean, yes, is it concerning? Has this ever been done in the last 50 years? No, that the president's tried to fire a sitting Fed governor. But it's a committee. I don't believe just because a president appoints a particular Fed governor that they'll do exactly what he wants.
Okay, but hold on a second, because what we heard from Stephen Myron, who is likely to get confirmed to this board, is that one of the Fed's goals should be moderate interest rates, and this idea of targeting something that seems a little bit lower than, say, might be required by markets. Doesn't that make you start thinking about the Treasury and the Fed put it together, issuance versus the Fed, and where they try to push on the yield curve at different places? Doesn't that leave you with some questions around what that implies for markets?
Well, I think the Treasury should cut some of that long end supply. I mean, this is a global situation. There's a supply-demand mismatch in the long end. Others, so the UK is doing it, Japan's doing it. I think they need to cut long end supply. And that is the right thing. There is not that much demand. Dutch pension fund reform, LDI demand is not that high. Now, on your Fed point, does Myron want lower rates? Maybe. But the congressional mandate for the Fed is the dual mandate. Inflation and full employment. They're going to abide by that. They just did the framework review. They pushed back against this idea of letting the economy run hot. I thought it hasn't gotten as much airplay. That is the Fed saying we've changed our framework. For the next 5 years, we're going to operate on that framework. And I think I actually was kind of heartened by the debate yesterday. It wasn't so much on, his views on the economy. It was, do you care about independence? And everything Myron said, I care about independence and Congress cares about independence, both sides of the aisle. And the bond market cares about it, and the president cares about the bond market. So maybe I'm giving the bond market too much credit, but I think a yippee bond market, if the long end starts to say, no, this is independent, and I think the Fed chair pick is going to be very, very important. I think you're going to get a credible Fed chair pick to keep the bond vigilantes at bay, send them overseas because they have a bigger problem. I think the US, and we've got tariff revenues coming in, which I think is going to keep improving the deficit. I'm not saying we don't have a deficit problem, but we can address that another day.
It's kept the US debt market resilient in the last week.
Absolutely.
And I don't think you can describe the US debt market in the same way as you describe UK and France. Just two completely different situations. Right. I do think we have to call balls and strikes. And you know me, I will when I see them. When things aren't going right, I don't think it looks good going from the White House to the Fed and keeping your job at the White House at the same time. And I don't think Stephen Myron of last year thinks it looks good either. So I'm just going to leave that there. I will say, to be consistent about the matter, I didn't like Brainerd flipping between the Federal Reserve and the White House. I didn't like it when sitting Fed governors were making political donations either. So let's be consistent about the fact. But when it comes to the Federal Reserve, I'm so pleased you've brought this up. There's some language that hasn't sat well with me over the last few weeks. When people talk about the president having a majority on the Fed, I'm sorry. The idea that Governor Bowman and Governor Waller are going to be puppets of the president every time the Federal Reserve gets together, I would push back strongly against that notion.
It's not the Supreme Court. It's not necessarily a congressional committee. This is a Federal Reserve that is trying to control its dual mandate. My question, though, is how much they are going to bias their economic projections to something that is more favorable to the president. And that, I think, is something that we've seen consistently throughout the years. This isn't new under the Trump administration. That is why these are, presidential appointed figures that are confirmed by Congress. There is a political bent to this because your view of the economy is your view, frankly, of the fate of a nation.
Sure, but is that intellectually independent of whatever the Federal Reserve thinks about the economy and whatever the president thinks about what should happen with rates? If Governor Waller comes out and says, look, I think the labour market's cracking, we should drop interest rates, I think that's someone who's making an independent call on the economy. Now, the president might like the outcome and he might choose people to go into the Federal Reserve that think the same way. Ultimately, the president has that privilege. It's up to the Senate to confirm.
To me, the key question for
इस क्रूड ऑयल में निकल जाना जिन लोगों ने ट्रेल किया था, ट्रेलिंग ऐसा लगा के भी देखो, ये नीचे सपोर्ट मैंने जैसा मॉर्निंग पे बताया था, ये काफ़ी बार टेस्ट हो गया, काफ़ी बार मतलब सिनेरियो यहाँ पर इस सपोर्ट एरिया का कुछ ऐसा है कि यहाँ पर जब फर्स्ट टाइम बाइंग आई थी मार्केट ने एक हाई क्रिएट किया था और काफ़ी अच्छा हाई था। सेकेंड टाइम जब यहाँ से बाइंग आई थी मार्केट ने एक लोअर हाई क्रिएट किया था। उसके बाद कल मतलब लास्ट ट्रेडिंग सेशन में यहाँ से फिर से बाइंग आई थी। ये फोर्थ टाइम है, तो यहाँ पर एक आइडेंटिकल सपोर्ट बन गया है। ये दिस इज़ आइडेंटिकल सपोर्ट। अगर ये ब्रेक डाउन हुआ तो काफ़ी बड़ा मोमेंटम डाउन साइड की ओर दिखने के लिए मिल सकता है। तो वेरी क्रूशियल लेवल, एक लास्ट टाइम बाइंग ट्राई करते हैं, ज़्यादा मत क्वांटिटी ट्राई करना, बिकॉज जैसा मैंने बताया एक आइडेंटिकल सपोर्ट है, नॉर्मली तो ये ब्रेक डाउन के लिए काम आ जाता है, बट ब्रेक डाउन हुआ तो काफ़ी बड़ा ब्रेक डाउन होगा, तो बायर ट्राई ज़रूर करेंगे कि प्राइस को ब्रेक डाउन ना होने दिया जाए। तो वन लास्ट टाइम इस पर्टिकुलर जोन से एक बाइंग हम प्लान करेंगे। यहाँ पर मत कर देना, अभी काफ़ी ऊपर है, वो लेवल पे नहीं आया अभी भी, 5425 के आसपास है। वैसे इसको ब्रेक डाउन काफ़ी पहले ही हो जाना चाहिए था, सेकंड टाइम जब क्योंकि गैप डाउन हुआ था उसमें ब्रेक डाउन ही हुआ था, बट रिकवर कर गया था। लेट्स सी क्या एक फाइनल टाइम ये फिर से होल्ड करता है लेवल या नहीं। बाकी बीच में और कोई नया रेजिस्टेंस क्रिएट नहीं हुआ है, तो लेवल अभी भी वो सेम ही है, कोई चेंज हुआ नहीं है। ठीक है, देयर इज़ नो न्यू रेजिस्टेंस इस फॉर्म, कोई नया रेजिस्टेंस नहीं फॉर्म हुआ है, विच इज़ अ गुड साइन, क्योंकि बाइंग आएगी वो तो बढ़िया आएगी अनटिल अनलेस कोई नया रेजिस्टेंस नहीं बन जाता। तो एक यहाँ से छोटा सा बाइंग का ट्रेड फॉर द फाइनल टाइम। बाकी याद रखना जो मैंने पैटर्न बताया है वो क्रिएट हो चुका है, इसका मतलब ये नहीं कि वो ब्रेक डाउन करेगा ही करेगा, कई बार पैटर्न भी फेल हो जाते हैं, बट हायर चांसेस हैं। कि जो भी बाइंग आएगी लास्ट टाइम ही आएगी, चाहे वो ब्रेकडाउन हो जाए उसके बाद या फिर यहाँ से एक और नया हायर हाई बना के डब्ल्यू बना दे मार्केट, जिसकी पॉसिबिलिटी अभी कम ही है। एंड नेचुरल गैस वही रेजिस्टेंस पर ही साइडवेज है, ये भी थोड़ा नीचे आ जाता अगर इस एरिया पे यहाँ बाय करते, ये भी सपोर्ट है बट एक परसों ही टेस्ट हो चुका है तो इस पर इंटरेस्टेड नहीं है। बेटर है कि थोड़ा सा नीचे वाले सपोर्ट पे अब आए, वो टेस्ट होना पेंडिंग है अभी भी प्राइस के लिए, तो इट इज़ स्टिल ऑन रेजिस्टेंस, होल्ड कर गया अभी भी, ब्रेकआउट नहीं कर पाया। डेटा तो नहीं है, यूएस मार्केट भी ओपन हो चुका है तो थोड़ा सा यूएस मार्केट का भी ध्यान रखना। क्रूड ऑयल के स्ट्रेट में टारगेट बड़ा रख लेना, क्वांटिटी कम रख लेना, वो ज़्यादा बेनिफिशियल रहेगा। नेचुरल गैस ऐसा ना हो आज रेजिस्टेंस पर ही क्लोज हो जाए और फिर पता चला कल सीधा गैप अप है या फिर गैप डाउन। US animal right activists fight extradition from UK over 2003 bombing. Hmm. Any buying opportunity in crude oil है यहाँ पर, मैंने बता दिया दिस इज द बाइंग जोन, बट ध्यान रखना यहाँ पर सिनेरियो क्या बना हुआ है थोड़ा सा। इट इज़ नॉट लाइक अ फर्स्ट टाइम सपोर्ट, नॉट अ सेकेंड टाइम। 3 बार बाइंग आ गई है, पहली बार हाई बना था, दूसरी बार एक और हाई बना था, तीसरी बार एक लोअर हाई बना था, दिस अ फोर्थ टाइम ये यहाँ पर आ रहा है। जो जिस तरह का पैटर्न है नॉर्मली इसमें ब्रेकडाउन होता है और ये मोमेंटम मिलता है, बट जरूरी नहीं है हमेशा ब्रेकडाउन ही हो, कभी कभी पैटर्न फेल भी हो जाता है। हो सकता है यहाँ से मार्केट आके डब्ल्यू बना दे और ये वापस रिटर्न कर जाए टिल दिस हाई, इस चार्ट को इस लेवल पे देखोगे तो।
opinions in the past number of years. I just wonder if there's a feeling that they're saving their ammunition for something else. And I just wonder, if so, what's going to be that threshold? Or do you see this as a president able to push, like you said before, in a more significant way, unfettered?
But I think even with Tillis being outspoken, and I agree with you that he's probably saving his opportunity to really push back. The issue is, as you guys noted earlier, or as Ms. Kendall noted earlier, they need to lose 4 votes. And while you have the likes of Tillis, you have the likes of Collins, and you have the likes of Murkowski, who might be running for governor, getting that 4th vote is so difficult. And the issue is as we saw yesterday with Secretary Kennedy's hearing about his control of the CDC, they're able to be believable enough in the confirmation process to get into power. And at that juncture, it's too late. And for many of these senators, while these institutional concerns are significant, they also have parochial concerns that are more important to the day-to-day lives of their constituents.
George, appreciate your time and your take. As always, George Pollack there of Signum Global Advisors. The interviews start, don't they, going into the weekend for the next Federal Reserve chair. The quality of the candidates really matters, with everything George said in mind.
A lot of people thought that President Trump was putting a person who would be very controversial and would be a lightning rod in the Fed for 4 months, and then would pick someone who'd be highly credible to the markets. The fact that Scott Bessent is running this process, we know how he feels about the bond market, and sure, he can play his part in issuance. But there is a feeling that this has to be a credible candidate in order to get through, and in order not to cause those bond vigilantes to come back from Europe and settle back down in the United States.
I think, as Priya Misra said, they'd like him to stay over in Europe and not come over.
They're going to ship him out. That's, I think, what they're trying. Let's see how it works.
Coming up on the programme, Michael Nathanson of Moffett-Nathanson, as a grateful Google CEO, visits the White House. Plus, we'll catch up with Danny with your morning movers, following Tesla and a pay package which could be worth $1 trillion. Tesla up 2% from New York. You're watching Bloomberg. Payrolls report about 60 minutes away. The estimate in our survey, 75k. The high 144. The low is at 0. The range is pretty wide going into the jobs report. Going into that figure, into that data, equity futures positive by 0.2% on the S&P. On the Nasdaq 100 up by 0.5. Record highs coming into Friday morning. Let's see if we can build on the gains. In the bond market, 2-year, 10-year, 30-year bond yields down on the week. On twos at the front end, down for 4 consecutive weeks. We're sub 360 now at the lows of the year.
So is this a good bond yield curve dropping lower, or is this a bad yield curve that has been compressing or at least remaining within control? And that's really the key question. What is going to be the response from a negative jobs print or a zero jobs print or something that's weaker? Is that going to be a positive for risk assets, or is that going to be considered a negative for the economy? And that, I think, is sort of the tension under the hood in the bond space.
Well, let's just sit on that. Just an observation, no prediction about the future at all. Let's just go over the past month or so, the last 5 weeks. The whole curve this week has dropped down, but we've seen a real steepening over the last 5 weeks. But that's been led by what's happened at the front end of the curve. That's not been a consequence of softer inflation prints. We've had a little bit of that relative to what we expected off the back of the tariffs. Most of it's been off the back of the payrolls report at the start of the month, and the labour market data has continued to weaken based on the reasons we've seen this week alone in things like JOLTS, things like jobless claims, things like the ISMs where the employment component has been great at all. If you want to call that bad, I would often agree with you on that matter. That doesn't look like the right kind of rate cuts to me. That looks like a Fed that's been concerned about what's happening with the labour market.
Which is the reason why your question is such a good one about whether the Fed would be cutting into a downturn that would then reaccelerate growth, or whether it was cutting into a reacceleration, because ultimately that is the key question. Is this the beginning of a string of weakness, or is this just sort of a head fake before all of the investment plans that we heard yesterday in the Rose Garden really come to fruition?
That's what makes a market. That's what's great about sitting in the seat. We don't have to make a call. Other people do.
Great.
Because there are little signs of reaccelerations in the markets here, there and everywhere. In equities and the cyclical tilt that we've seen, in the data in the ISMs with the new orders starting to pick up. That's what makes this moment going into this meeting in 2 weeks' time so interesting.
Yeah, so I'll stop talking, read the beige book, let me know what you think.
Beige book doesn't look good.
No, it doesn't. I'm telling you.
Not at all. I know.
I actually recommend it. Read it. It's
That's
good.
why this Fed is a little bit uncomfortable right now.
Might be a little yippy.
Yeah. Bond market's not, though. That's the good news. 2 hours away from the cash open and 1 hour away from the payrolls report. Let's get you some single names, some morning movers with Danny Berger. Hey, Danny.
Hey, John. Speaking of major investments from tech players, a big partnership for Broadcom. It will be teaming up with OpenAI to develop AI chips specifically for the company. A potential real run for NVIDIA, a real run at them. Shares are up 11.2%. The CEO of Broadcom saying they've already had $10 billion worth of orders, and they're going to start the development and shipping out of those chips starting next year. A different fortune for Lululemon, which reported earnings yet another quarter where they've had to cut their outlook, the third consecutive quarter. A lot of things weighing on them. For one, it's some things that all retailers are dealing with, like changing consumer behaviors, tariffs. A $240 million hit is what they see. But again, the problem for them is it seems like these younger rivals, that of Alo, that of Yori, are really challenging them, and the tastes have moved away from Lulu. So those shares down more than 19%. Also, at the top of the last hour, we learned about a new pay package, a proposed one for Elon Musk. Say hello to the world's first $1 trillion man. Once fully vested, this pay package would give him $1 trillion. It's a 10-year time horizon. There are a lot of targets he needs to hit. That includes expanding the robo-taxi fleet, getting valuations of Tesla to $8.5 trillion. Of course, all of it also trying to keep Musk at Tesla, giving him 25% stake of the company. So those shares up 2%, John.
Danny Berger with the latest. Danny, thank you. More from Danny in the next hour. On our radar this morning, Federal Reserve Governor Lisa Cook saying a court ruling in favor of Harvard University backs her argument that President Trump's attempt to fire her is a pretext. She claims his real agenda is taking control of the Fed. Elsewhere, President Trump looking to dampen today's labour market data, saying the real jobs numbers will come next year. This morning's report will be the first since the president fired the BLS commissioner in July. And finally, President Trump pushing for 2 candidates to drop out of the New York City mayor race to help end Zohran Mamdani's bid. The president saying he prefers not to have what he calls a communist running the city.
And the other part of this story is that reportedly the administration offered Eric Adams a job in the administration or other potential jobs if he were to drop out of the race. He has denied those reports. Nonetheless, it's sort of interesting to see him say, look, I'm a New Yorker. I'm from New York, care about the city. I don't want a communist. There's been some support from other people in the work community in the United States, in New York City, particularly in Wall Street. And you just wonder, are a lot of people coalescing around this?
I talked to Anne-Marie about this earlier in the week, who's not with us today. She's got a day off. And she said to me, I think this is proof that he does care about the city, because if you really think about things, this individual getting elected to run New York City could well be a good thing for the Republican Party going into the midterms next year. Isn't this what they want? To run against the extreme and how things are going in New York and to have the poster child of failure. They always talk about Gavin Newsom in California. Wouldn't this be a good thing to run on next year?
Yeah, I mean, that's one argument. And so you could argue that he actually just really cares about New York City. I don't know. This has been a really unconventional 24 months. I imagine it will continue to be. And watch this space. I think the New York City election is very close to me. So I want to not say too much since I am a New York City resident.
Now everyone wants to know what you think, Gramo.
Yeah, I don't think anyone needs to know what I think, because ultimately it goes down to a real tension in the city that's been prevalent for a long time. The president wants to weigh in. He's blurred the lines between federal, state, and local governments. That's been an issue. The flip side, a lot of people on Wall Street are probably welcoming this, and that's all I'll say.
We've got 2 months to tease this out.
Oh, thank God.
2 more months,
oh, God,
all right?
That sounds awful.
Let's turn to tech. Top executives praising the Trump administration, with the Google CEO thanking the president after Google's antitrust win.
Well, you had a very good day yesterday. Google had a very good day yesterday. And do you want to talk about that big day you had yesterday?
It's a long process. I appreciate that your administration had a constructive dialogue and we were able to get it to some of resolution.
Michael Nathanson of MoffettNathanson has a buy rating and 230 price target on Alphabet shares and writes the following. This outcome is a home run for the status quo, and the status quo has been very favourable to Google. Michael joins us now for more. Michael, welcome to the programme, sir. Just your reflections on what happened earlier this week, and then we can get to whether there are some competitors that can really break up this status quo.
Yeah, good morning, Jonathan. That was the best outcome, obviously, possible. The market had been really fearful of what the courts could have done here, and it could have hurt Apple deeply and Alphabet deeply. And you look at this and say, to your point, the court was smart to say change is coming anyway. Why are we going to accelerate whatever's happening? Let's let the markets decide the future of search. So I was really pleased as a Google bull, Alphabet bull, but I thought it was a really smart decision by the judge to kind of step back and say, this is going to change anyway. Let's see where technology moves us, right?
So, Michael, how do you think it's going to change, and why stay constructive on this name?
Okay, good question. So what's going to happen is search as we know it has changed already, right? Search is moving from links to answers. If you use OpenAI, ChatGPT, or even the new AI mode on Google, you're seeing a different type of search. That is mostly happening in informational queries, not commercial queries, right? So our view is it's going to take a long time for commercial queries. Find me the best hotel in Boston. Find me, a new dog food for my dog. Those searches are still happening more traditionally. And I think what's going to happen is as less queries, basically more queries will stop at the head end of an AI mode. The queries that remain, questions that remain, will be more valuable for the people who are selling answers, right? Does that make sense to you, Jonathan? So our view is that the price of the traffic to people's websites will only go up because there'll be less traffic going to people's websites as more answers are headed off at people like an OpenAI or AI mode at Google.
So it's consolidating all of the attention on a smaller group of names, so it's a more valuable proposition. Do you think that Google needs to really now ramp up any type of open AI competitor, any kind of chatbot, artificial intelligence-induced search result in the next 2-3 months? They have a time on them, a clock on them, to sort of show their mettle in their competition with OpenAI.
So it's interesting. I would say to you, if you had me on 2 years ago, a year ago, I'd be very nervous about their speed to market and their ability to change. They've been changing the past couple of months pretty aggressively. They had an event called I/O back in May. They launched a bunch of new products. If you look at what's happening in real time at AI mode on Google search, you're seeing tremendous change. So I think the ramping is happening in the current time frame. I am less worried than I was a year ago about their ability to change. I think they've realized our job is to deliver consumer satisfaction. Our job is not to hold on to business models that have been great to us. We need to basically look at what consumers want and give it to them. And if you dig into what Google is now providing, it's really massively changed. So I think you will see in the next 6 months to a year, even more change. And it's going to be multimodal. You'll see change when it comes to video search and an image search. They're really moving quickly to create a 360 view of search that's just more than text. So I'm pretty bullish on their product roadmap and what we've seen so far. I think that's the big change that the market has woken up and said they're not dead, they're not sleeping at the wheel. They see the challenge from ChatGPT and they're taking it on pretty aggressively.
You mentioned Apple and that they also benefited from that. And I wonder, a lot of people waking up to the fact that Apple's not dead as well in the past couple of days, at least by virtue of their share price. Were you comforted by the fact that Tim Cook was at that meeting yesterday and it seemed like the president seemed a lot more amenable to him calling out some of the investments and even giving him a nod with their India presence?
Yeah, so Craig, my partner, covers Apple. We had a sell on Apple heading into the court. The court findings, we're really worried that they would lose $20 billion plus of payments from Alphabet, which was pretty much all profit. Jonathan's point about the status quo remaining is incredibly positive for Apple, that they can work with Google. Maybe they build a new Siri product that's been rumored. They don't have to lose $20 billion plus of payments. And then to your point on this administration, the administration has been very, very positive, and they could have been a lot more aggressive in pushing Apple to move production to more expensive markets. So I think it's a massive win-win for Apple. Tim Cook has played his cards perfectly here. And then he got the benefit of Judge Mehta, allowing him to kind of maintain that relationship with Alphabet. So you had, in a matter of a week, two stocks, Google, Alphabet, and Apple, that were really underweighted by a lot of investors, come back to the forefront. And that's why the market's been so strong. It's been a great outcome for these guys.
Michael, just before you go, do you pay much attention to seating plans and who gets the seat next to the president? Do you read anything between the lines?
I probably do, right, John? I did not see the seating plans last night. I apologize. I was too busy watching.
Mark
tennis, so I
Zuckerberg was the
apologize.
first person next to him. I'll give you that cheat sheet.
Thank you so much. Well, look how much Mark Zuckerberg's spending right now out of nowhere in CapEx, right? They've just massively ramped up their investment in the U.S. on data centers, right, in Ohio and Louisiana. Right? So he's spending. He has Dana White on his board now. He's done more than anyone I could think of to get back into the good graces of this administration.
Michael, appreciate your time. It's good to hear from you.
Yeah.
As always, you're a good sport. Michael Nathanson there of Moffett Nathanson, talking about his colleague, his right-hand man, Craig. New price target, 225. New call, rather, neutral, no longer a sell. Not exactly a ringing endorsement, though, of the stock. To be sure, Apple remains a very expensive stock, and its AI challenges remain. The worst-case scenarios are off the table. That's the good news. But north of 30 times next year's earnings is still, in our view, too rich for any company with good but not great earnings growth.
They're exposed to all of the potential risk cases across the world, right? Competition coming not only from Chinese manufacturers, but also from the likes of Samsung. It's come out with a foldable phone that evidently is a new hot thing. I never understood it. Evidently, if you fold it, it can potentially be a problem on the hinges if you don't get it perfect. The crease and the difficulty with that. I mean, I could just imagine someone getting crumbs in it and then you have to get a new one, whatever. Moving on, there's a real question about how much of a product cycle upgrade they need to really get into the more favorable graces of Wall Street.
And how much of it's actually coming next week? People don't think not much.
Yeah, I mean, that's the whole thing. I mean, they got to really deliver. And a lot of people are saying, we're just not seeing it.
Apple at the moment down by about 0.2% at the pre-market. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara. Hey, Yahara.
Hi, John. Sticking with Apple, its annual sales in India hit a record of nearly $9 billion in the last fiscal year. Sources telling us here at Bloomberg, Apple's revenue rose about 13% in the 12 months through March, boosted by iPhones and MacBooks. This comes as Apple invests more into the country as it expects India to become a key market in the coming years. Meanwhile, Boeing is hiring new workers to replace striking defense unit employees. The company's vice president says they must take this step to ensure proper staffing and customer support. About 3,200 union members have been on strike since August 4th. The workers assemble and maintain F-15 fighter jets and missile systems. And President Trump will sign an executive order today changing the name of the Department of Defense to the Department of War. That's according to a White House official. The president has long mused about changing the name of the department. However, an official name change would likely require an act of Congress. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next on the program, waiting for the real numbers.
We have a jobs report coming out, the first since the BLS commissioner who you fired won't be there. Can you commit to saying the data will be credible?
The number, I don't know, but the real numbers that I'm talking about are going to be whatever it is, but will be in a year from now.
A conversation up next with Steve Rasciuto of Mizuho from New York City. You're watching Bloomberg TV. Equities positive here, up 0.1% on the S&P, on the Nasdaq higher by about 0.49. The opening bell, of course, a few hours away. Before that, setting the tone for financial markets worldwide, 8:30 Eastern Time, 41 minutes from now. You'll get the payrolls report. Under surveillance this morning, waiting for the real numbers.
We have a jobs report coming out, the first since the BLS commissioner who you fired won't be there. Can you commit to saying the data will be credible?
The number, I don't know, but the real numbers that I'm talking about are going to be whatever it is, but will be in a year from now. I think you'll see job numbers that are going to be absolutely incredible. You're going to see job numbers like our country has never seen before.
So here's the latest this morning. President Donald Trump forecasting absolutely incredible jobs for next year. While traders anticipate a tepid August payrolls report, the estimate in our survey expecting 75,000 to be added. Steve Rasciuto of Mizuho has a more bullish call. He's looking for 90,000. Steve joins us now for more. Steve, good morning.
Good morning.
Would 90 be enough to derail that rate cut after this month?
No. I mean, Jerome Powell opened the door pretty wide at Jackson Hole. The market has walked through it. So now you kind of need a knockout punch. You didn't get it in the JOLTS data. The claims numbers certainly didn't change much at all either. They're still showing a healthy labor market. So now you need a knockout punch. And I think you'd probably need to see a combination of factors. You'd probably need to see payrolls in the 125 to 150,000 with no major downward revision. You'd probably need to see 0.4 versus 0.3 in hourly earnings. And more importantly of all those, you'd probably need to see the employment rate drop to 4.1% instead of going up to 4.3 from 4.2, because it's the jobless rate that is the most political aspect of this report.
On the flip side, how low is the bar, or how high is the bar for them to cut 50 basis points?
That's a very, very good question. 4.4% unemployment rate would get you there quickly. 0.1% in hourly earnings probably wouldn't. Definitely a payroll employment number in the 0 to 25 range would certainly increase the ante of a 50.
So I want to have a battle of the Steves. We had Stephen Englander on earlier, and now we have Steve Risciuto. Stephen Englander saying that he actually does see justification for a 50 basis point rate cut because ultimately the revisions have been so weak. And when you take a look at the overall data and the modeling, you can actually see an even less exciting labor market than some people are saying. You don't think that it's needed at all and that the Fed could just remain pat. So can you square that difference, bridge that gap?
Well, it really comes down to how restrictive you think the Fed is. The market seems to be of a mindset that our start, which I hate that concept, is at 1%, which means 3% is neutral. And at 4.5%, effectively at the
सुरजीत ब्रह्मा जी गुड इवनिंग अंशु पाठक जी क्रूड ऑयल का व्यू बताएं फिलहाल के लिए थोड़ा बेरिश है नीचे एक सपोर्ट है वहां से थोड़ी बहुत बाइंग का प्लान कर सकते हैं बाकी नेचुरल गैस में देखो अभी फाइनल टारगेट रखते हैं यहाँ का अगर आ जाता है तो क्लोजिंग होते होते नहीं तो अगर साइडवेज चला गया इस रेंज पे तो कुछ कर नहीं पाएंगे ठीक है पैटर्न देख लेना क्रूड ऑयल में काफ़ी स्ट्रॉन्ग पैटर्न बना हुआ है आइडेंटिकल सपोर्ट का कुछ ये पैटर्न में है मार्केट अभी ये क्रूड ऑयल में इस वक्त का ब्रेक डाउन हुआ तो काफ़ी बड़ा मोमेंटम आ जाएगा डाउन साइड पे भी अरे यार इसको और दोबारा मत सेल करना आप नेचुरल गैस को इतना इनफ है नहीं नहीं रहने दो थोड़ा सा अगर नीचे आ जाता है यहाँ से तो यहाँ से बाइंग अच्छी बन जाएगी मुझे लग रहा है फिर ये कुछ इस तरह से जाना चाहिए अनटिल अनलेस कोई नया रेजिस्टेंस नहीं बन जाता तो लेट्स सी आएगा नीचे या फिर नहीं फाइनल रेजिस्टेंस जोन फॉर दिस डे एंड फॉर नेक्स्ट वीक
back to a John Taylor type approach. And I think when you look at some of the former real doves like Austin Goolsbee and Williams of the New York Fed, who out in the last day or so were basically, pulling back from this thing that maybe we're very restrictive. And even the chairman said it himself at Jackson Hole that we're not very restrictive.
If they're following a model that you think is too dovish, that you think is ultimately pegged to an incorrect assessment of where neutral is, then why haven't we seen an increase in inflation expectations?
That is one of the hardest questions to answer, and I think is because for so long we have had a Federal Reserve that has been able to accomplish a 2% inflation rate, and you had such a little impact from the tariffs. You still have a global deflationary force out there, China, not Japan anymore, China, which is a very, very significant global deflationary force. You have energy prices, which have been moving lower, which are very, very akin to people's inflation expectations. So I think when you put all those factors together, I can see why the bond market has been more sanguine about it. And there's also this underlying bet that if push comes to shove, Bessent will do what's necessary at the long end of the curve to make sure long-term yields don't go up.
And long-term yields have been going down, at least so far this week.
Correct.
But to me, I just wonder, okay, well, then what's the trigger point? Do we start to see inflation under the Risciuto model in a way that does push yields materially higher? Or can you bet on some sort of arrangement of issuance and purchases?
Might see this play out. They might actually test that theory. If they do cut interest rates down towards 3% over the next 12 months, we'll see.
I feel like we're all just staring into a black box and examining the black box from different angles and saying,
what it feels
this
like
corner,
every day?
Every single day. I mean, honestly, you're talking about mush. It's like every industry has its own macroeconomic backdrop, and we're trying to put them together, and it just feels a little bit like mush.
Just quickly, where do you think they do land next year? What do you think they're cutting rates down to?
Well, again, I mean, if you're in my camp and you think 4% would be neutral, 2% real, 2% inflation, if they're credible on 2% inflation,
they're not.
Then you're probably in the 3 3/4 to 4 area.
Steve, appreciate it as
Pleasure.
always. Credible arguments from Steve Rasciuto of Mizuho, as always, on the Federal Reserve.
I love Rasciuto versus Englander, the big battle of the
That was you
Steves.
trying to start that fight.
Well, no, I love it. You know, honestly, this is really the ultimate battle, though, on Wall Street. Are we heading into a reacceleration that is inflationary? And is the Fed going to juice that? Or are we going to stave off some sort of downturn? That is the crux of the discussion, and no one has an answer. So don't look at me for one, because I can't provide one.
I can tell you what I hope.
Yes.
Never mind the inflation story. I hope we are going into reacceleration.
Sure.
The subtle signs of new orders picking up in the ISMs this week, I really do hope for the good of the economy. That's the real deal going into year end.
The reason why this is such a confusing story, every CEO I've spoken to has said that they've been able to raise prices and raise them selectively because of low oil prices. So you put that together. What does that do if oil prices go up? What does that mean about persistent inflation?
The payrolls report just around the corner. More struggling, no doubt, at 8:30 Eastern time. In just a moment, we'll catch up with the US Commerce Secretary Howard Lutnick, plus Nadia Lovell of UBS, Stephanie Roth of Wolfe Research, and Jeff Rosenberg of BlackRock. The third hour of Bloomberg Surveillance, just around the corner.
Consumers are telling us pretty clearly that labor market conditions are deteriorating.
Looks like interest rate cuts are coming.
If they're cutting because labor markets are weak, I think that's negative.
The job market, it's in a state of stasis.
Things will break one way or the other.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. Coming into Friday at all-time highs on the S&P 500. Futures positive this morning by 0.1%. On the NASDAQ, we're positive by 0.4%. In the bond market, 2-year, 10-year, and 30-year. Really well behaved on the week. Yields lower across the curve on the week, down on the session. On a 2-year, new lows for the year, 358. 34 at the very front end of the yield curve going into this at 8:30 Eastern time. Now, I say 8:30, but I don't know if it's going to be 8:30 anymore, because moments ago, this headline just crossed the Bloomberg terminal. The BLS experiencing technical difficulties going into the payrolls report.
Evidently, we should have taken President Trump literally when he said that it was under construction last night. BLS saying that their data retrieval tools are not available on the website. We do know that sometimes when that 8:30 time rolls around, because so many people are clicking on the website, it takes a minute to load. This does seem to be a real question, though, about what's going on over there, as well as when exactly we will be getting this payrolls number.
Mike McKee is standing by. We'll cross over to Mike McKee in just a moment in Washington, D.C. But this is a tough one for this market. A lot hinges on this going into this Federal Reserve meeting later this month.
A lot of people say that the bar is pretty low for the Fed to cut rates. They will cut rates. The bar is pretty high for them to hold off. But a real question here about not only what the numbers are, but how accurate they are, how much the market is going to be looking to this as sort of the gold standard. The revisions, also very important at a time where Stephen Englander sat here just a bit ago this morning and said he sees 70,000 revisions downward as the normal trend.
So stand by. This is meant to happen in about 28 minutes' time. We'll see if it does. We can head down to the nation's capital where Mike McKee is standing by. Michael, what's your read on the headlines that just crossed moments ago?
Well, it's a computerized world, and computers have issues. We've seen this before with BLS. Sometimes when they have loaded stuff into the computer and it's gone out early, and other times in which it has been delayed. They went through a process when they first went to all electronic releases of slow release times because so many people were overwhelming their servers. Don't know what the problem is here this time, but I'm sure they are working as hard as they can, and we'll get the numbers as quickly as we can and get them to you.
Well, Mike, let's talk about the numbers we've had already. We've had a real step down, the 3-month average at 35K. The range today is pretty wide. The high is 144, the low is 0, the median 75. What's your approach to these numbers this morning?
I think I'm going to go with the folks at the Whisper number who are just going along with what the consensus is. We don't really know. And we need to separate out this month from what the revisions are that we're going to get, because we're going to be looking for the latest data. And while it may come in a little bit less reliable, it's still going to be as accurate as possible given the response rate that what they get, whatever they get. 75,000 is definitely a slowdown. It's in the ballpark of what several Fed officials have said lately is the replacement rate, the number of jobs you need each month to keep the unemployment rate from going up. The estimates were anywhere from about 30,000 to 80,000, so 75,000 would keep us in that range. We are looking at the possibility of the unemployment rate going up, but only by a little bit. So if we get that kind of number, it would imply to the Fed that we're sort of status quo, and the story about people not hiring but not firing is still there. But since Jay Powell opened the door to a rate cut, given what we saw with the revisions last time, it would take a lot for them to change their mind.
Mike, you said something earlier this morning that made me smile, and I repeated it subsequently, where you said the expected number is 75,000 for the job creation, and the whisper number is 75,000, which means that nobody knows nothing and nobody has an edge on where we are in terms of the median estimate. And I just wonder, from your perspective, whether the headline number matters more or the unemployment rate, the revisions. What are you looking for to give you a sense of the compass of markets?
Oh, well, if you're going to ask about the compass of markets, I'd say the headline rate and the revisions are what people are going to be looking at today. The Fed prefers to look at the unemployment rate because they see that as a more reliable statistic. Remember, it is not revised. So that's something they can hang their hat on. And if the unemployment rate is going up, as you remember a couple of years ago how we talked about this constantly, the SOM rule, when unemployment starts to rise, it tends to rise at a faster pace each month. If that were the case, then the Fed would really be worried about the economy slowing down. So that's why they're looking at unemployment rather than the headline number. But given the president raised all these issues, now people are looking at the headline and the revisions.
At the same time, Mike, it's not just the president. A lot of economists and even Fed officials themselves have raised issues about Bureau of Labor statistics, some of the old models of calling people on phones, landlines, at a time when a lot of people are responding to things more online, the response times. I'm just wondering, what do the Fed officials and other economists who you speak to want to see from the BLS in terms of changes to make that data more reliable and less, late, delayed, or even questioned?
Well, it's not so much what they expect from the BLS. It's what the BLS can accomplish given its manpower and its funding. They have switched over the past couple of years. Yesterday, Stephen Myron said they haven't been doing anything, and that's completely wrong. They've switched over the last couple of years to much more electronic filing, making it easier for companies to send in their data. They've simplified the forms, but companies are still not sending in the data as quickly, and the response rate for the first release has dropped. We're in the 40s for the last couple of months, 40% range. But over the next 2 months, the response rates have stayed about the same, about 95%. So eventually they're getting all the data in. Just a question of how the companies can be persuaded to move more quickly. And with the response rate that they get, maybe they get 42, 45%, they're still going to be accurate numbers based on the data that they have. They're not going to be manipulated. They're not going to be wrong within that data set. It's just that the additional data that comes in over the next 2 months is going to change what the overall picture is. On the household survey side for unemployment, they're still doing phone calls. They are still trying to figure out how to do perhaps some computerized stuff as well.
Mike McKee with the latest down in Washington, D.C. We'll see if we get the numbers at 8:30 Eastern Time. So this is the latest from the Bureau of Labor Statistics. It's saying it's experiencing technical difficulties. And Lisa, data retrieval tools are currently not available on the website.
Let's see how quickly they can get this back up. And we are now just about 12 minutes ahead of that report, or I believe 22 minutes.
22, Bramo.
Sorry, I always leave that to you to correct me in my arithmetic.
You know, this hour we struggle to count, apparently. All right.
I'm getting out my abacus.
8:30 Eastern Time for the Payrolls report. We'll see if it drops on time. Let's turn to trade. We're going to catch up with the Treasury Secretary, the Commerce Secretary, rather. We begin this hour, of course, with President Donald Trump signing an executive order putting his trade deal with Japan into place. The agreement will apply a baseline 15% tariff on nearly all Japanese imports entering the US, including automobiles. The government of Japan has also agreed to invest $550 billion in the United States. Joining us now, I'm very pleased to say, is the United States Secretary of Commerce, Howard Lutnick. Mr. Secretary, welcome to the programme, sir. I know you wanted to talk about Japan, so let's do that. I want you to share with us the terms of this $550 billion investment fund, a core pillar, of course, of the negotiations that you've been helping to lead with the Japanese. Can you share with us the details this morning, sir?
Sure. So this is a completely different kind of trade deal that anyone's ever seen before. So the idea is the Japanese government will give $550 billion to Donald Trump to invest as the United States and Donald Trump sees fit in America. So the Japanese will get back their money, and 90% of the profits will go to the American citizens, the American taxpayer. So Donald Trump, I'll give you an example. We buy all of our antibiotics, generic antibiotics in China. So Donald Trump can say, let's go build generic pharmaceuticals in America. Let's build those antibiotics in America. The Japanese will fund it, and then we will have generic antibiotics in America. Will no longer be reliant on China. So it's in his hands to invest. This is not ordinary foreign companies investing. This is not Mitsubishi building a plant in America. This is $550 billion by the Japanese government put in the hands of Donald Trump that he can then invest in America. It's amazing. I mean, it's the thing I am most proud of. It maybe it's the most proud I've ever been on a business deal I've ever done.
So it sounds amazing. Do the Japanese think it's amazing? And have they codified this agreement?
They have. So yesterday it was all signed. So the president signed the EO. I signed the MOU with Minister Akazawa in the Commerce Department. This is signed. It is written. So what happens is Donald Trump can select the project that he wants. We put a capital call into the Japanese. They send in the money, and we build the project in America. So if you think about this, $550 billion invested during Donald Trump's term is a half a point of GDP given to the United States of America's president by the Japanese government. I mean, this is amazing. In order to have a 15% tariff, and so they can keep making their cars in Japan.
Let's just down the details, Mr. Secretary. So the timeline, you talked about the rest of the president's term. Is there a clear timeline here? And what's the enforcement mechanism to make sure it happens?
Well, two things. Number one, they've committed that they will meet the capital call. So when we're building a project, they will fund the project's building during the term. This investment lasts through, meaning they will put out the money through the rest of Donald Trump's term, so January 2029. And let's say halfway through and they've invested $250 billion, they stop saying, I don't want to send you any more money. The tariffs pop right back up, and they no longer receive the cash flow from these projects. It would all just stay with the United States of America. So there is just no way they're going to not fund these projects. And Donald Trump is going to deliver to the American people. And this deal is really, it's just, if you think about it, $550 billion of Japanese government's money in order to buy down their tariff in Donald Trump's hands for his availability to invest and build in America. Alaska pipeline, scale, $50 billion, $100 billion. Donald Trump wants to unleash the Alaska pipelines. The Japanese will finance it. And it's great for America. It's fantastic.
Mr. Secretary, you'll appreciate we've got a number of topics to get through with you in a short amount of time, so I wanted to turn to other issues and India. This came from the president this morning on social media. It looks like we've lost India, and Russia for that matter, to deepest, darkest China. May they have a long and prosperous future together. This relationship between the US and India has clearly soured. You yourself said earlier this year that India rubbed the US the wrong way. There's an understandable tension that continues to build. But they're not the only ones buying Russian energy. The Chinese are buying Russian energy, and for that matter, the Europeans too. And I think there's a sense from the Indian side, Mr. Secretary, that they feel singled out, perhaps unfairly. What's your comment, your message for them this morning?
Well, remember, before the Russian conflict, the Indians bought less than 2% of their oil from Russia. Less than 2%. And now they're buying 40% of their oil from Russia. What they're doing is, because the oil is sanctioned, it's really, really cheap because the Russians are trying to find people to buy it. And so the Indians have just decided, the heck with it. Let's buy it cheap and make a ton of money. But you know what? That is just plain wrong. It's ridiculous. And they either need to decide which side they want to be on. You know, what's funny is, remember, the Chinese sell. The Chinese, well, we're always willing to talk. The Chinese sell to us. The Indians sell to us. They're not going to be able to sell to each other. We are the consumer of the world. People have to remember, it's our $30 trillion economy that is the consumer of the world. So eventually they all have to come back to the customer, because we all know eventually the customer is always right.
When you are talking with India, Mr. Secretary, I know a lot of companies in the U.S. have shifted manufacturing to India from China, so there's a real interest in this in terms of their costs. How much do you feel like you've lost leverage as a result of the court case that came out fairly recently?
We haven't lost anything with respect to the court case. If you look at the dissent, right, it was 7-4. Read the dissent. The current Chief Justice sided with President Trump. The former Chief Justice sided with President Trump. And the incoming Chief Justice sided with President Trump. And the smartest guy on the bench, which is well known who the smartest guy on the bench is, he sided with Donald Trump. So I think you are going to see the Supreme Court side with Donald Trump. And I don't think we've lost leverage. What we've lost is that India doesn't yet want to open their market, stop buying Russian oil, right? And stop being a part of BRICS, right? They're the vowel between Russia and China. If that's who you want to be, go be it. But either support the dollar, support the United States of America, support your biggest client, who is the American consumer, or I guess you're going to pay a 50% tariff, and let's see how long this lasts.
It seems like there's been a hardening of the line, both with President Trump as well as Modi, and a sense that there isn't really a coming together. In fact, that meeting with Xi Jinping and Vladimir Putin and Prime Minister Modi seemed to indicate a coalescing of the BRICS. Do you see anywhere in the next month, 2 months, any type of deal or backing down to a lower rate with India?
I would expect, like you saw it in Canada, right? Carney got elected with this term elbows up, meaning let's fight with America. They put on retaliatory tariffs. They were all bravado. And what happened? Their GDP negative 1.6%, unemployment rocketing towards 8%. And what did Carney just do? He just finally dropped his retaliatory tariffs. So I think what happens is it's all bravado because you think it feels good to fight with the biggest client in the world. But eventually, your businesses are going to say, you've got to stop this and go make your deal with America. So I think, yes, in a month or 2 months, I think India is going to be at the table and they're going to say they're sorry and they're going to try to make a deal with Donald Trump. And it will be on Donald Trump's desk how he wants to deal with Modi. And we leave that to him. That's why he's the president.
Speaking of making a deal, I understand the Swiss are in town. Just hearing that the Swiss vice president has turned up in the United States again. Is there a meeting on the agenda for today going into the weekend?
Yes. So I'm going to meet with the Swiss delegation. They're coming in to make a new proposal. And the Trump administration is always willing to listen. But you have to remember, the Swiss like to say they're a small country of only 9 million people, a small, rich country. And how did they become so rich? They sell us pharmaceuticals like it's going out of style, all right? They make so much money off of America. That's why they're rich. So let's hear what they have to say. We'll discuss it with the president. I'm not optimistic, but I'm always willing to listen, and Donald Trump is always willing to listen.
Why are you not optimistic? Traditionally, there's been a decent relationship there in the president's first term, relied on the Swiss a lot when it came to foreign policy and developments in places like Iran. What's happened this time?
Well, if you just consider trade, right? The European Union, right? They open their market, 450 million people, $20 trillion economy, and they say, we'll take our tariffs down to zero. You, the American exporters, can sell us everything. I mean, how fantastic is that? And they say, we'll pay you 15% and you pay us nothing. I mean, that is really, really attractive. Now you go to Switzerland, 9 million people. I mean, what are they going to offer the American exporter as compared to the size and scale by which they export and earn money off of us? So the idea is we need balanced and fair trade, and that's a difficult thing. Now, you saw the Japanese. They decided to take a completely different path. And what they said is we will give Donald Trump the power to invest $550 billion at his direction for the benefit of America. Now, that's a different way of thinking. Now, if the Swiss come out of the box with a whole new way of thinking, I'm open-minded. But if they just say our rich companies are going to buy more of America, I mean, that's what Donald Trump is complaining about.
Yeah.
You realize in 1985, America, owned more of the rest of the world. We owned just about 150 billion of the rest of the world. And you know, in 2025, when Donald Trump takes office, the rest of the world owns 26 trillion more of us because they just use all the money they make off of us to buy us. And sooner or later, they're just going to own us. And Donald Trump has said, enough of this. We are going to own ourselves going forward.
Mr. Secretary, I know you're your own boss on your own time, but your team is telling us we've got to go shortly, so I'm going to squeeze out a few more minutes if I can. At 8:30 Eastern Time, we're meant to get a jobs number. This is what we heard from the BLS just moments ago, that the Bureau of Labour Statistics says it's experiencing a technical problem and data retrieval tools are currently not available on the websites. Are we going to see a number in 10 minutes' time?
I don't know if we're going to see a number, but I tell you, it makes it crystal clear. You should have fired the person who was running that group, right? Because if you didn't fire him 2 weeks ago, you sure as heck would be firing him today. So they need new leadership in BLS. That's for sure. They need new tech in BLS. That's for sure. And Donald Trump needs to rely upon the numbers. America needs to rely upon the numbers. You can't have these bent former administration people who have a view and who want to harm the president. We need accurate numbers coming from BLS. And finally, we'll have new leadership to deliver it.
Mr. Secretary, you're also going to promise new resources for them to increase their collection and increase some of their staff to go out and make this data accurate.
Yeah, can you imagine they had people calling around? I mean, come on. Computers. Wow, it's 2025 and they have computers. New resources, new technology, wildly better information. That's what America demands. That's what Donald Trump's going to give them. And you just need to change leadership every once in a while and make sure we get it right. I'm excited about what's coming. Of course, you fire the person. What do you learn? You learn that their technology is just, oh boy. But we'll fix it. We'll fix it.
Well, I hope you do, and I hope you can fix it in the next 9 minutes, sir, because you're in charge now. United States Secretary of Commerce, Howard Lutnick. Thank you, Mr. Secretary. Appreciate it. The number's about 9 minutes away, and we'll see if we actually get the figures at 8:30 Eastern Time.
So I'm looking right now on the Bloomberg screen, and it says in big red letters that are flashing, BLS is experiencing technical difficulties. Data may be delayed. So just, duly warned that maybe the market is going to have to kind of, tread water for a little bit longer.
With us around the table, Nadia Lovell of UBS. Nadia, good morning.
Good morning.
I'm sorry we're not going to have much time, but we might have a long time, depending on whether we get this number or not. What are you expecting in a few minutes' time?
Look, we want a labor market that's cooling, that's not freezing, and I think the market will accept something between 50 to 100K. If you see something under that, of course, there will be concerns about, is the Fed behind the curve, and are we entering a growth scare scenario? If you see something a lot more than that, I think you go back to question the integrity of the data, just given the amount of revisions that we've had over the last couple of months. Historically, we know that August tends to see downward revisions anyway. So ultimately, we don't think that what we get at 8:30 is going to change the expectation, our expectations for a 25 basis points cut in the next Fed meeting. You could get a bit more if the data is really weak.
I can already hear the groans, but is good news and bad news bad news? The idea of is a good print something that makes you more bullish on equities and a bad print something that makes you more bearish, or really is it all? It depends on what the Fed does in response to this data.
Look, I think it's baked at this point that Powell is going to have at least 25 basis points in September. We can all agree that the tone from the Fed has tilted more dovish since the last meeting. Ultimately, what matters for the markets, we know it's the earnings growth trajectory, and we look at coming out of the second quarter earnings season like, wow, 11% earnings growth. Estimates has been moving forward for forward estimates further up. We are expecting at least high single-digit growth for next year. So I think that when you look beyond whatever we get at 8:30, that's going to be what's key for the market. Do we continue to get earnings growth? And we think that's going to be the case. Maybe the cyclical parts can benefit a bit more from increased rate cut, but we think that the growth story has to still be there.
We have some time to be philosophical considering that the BLS data is delayed. So I am curious if you see this profitability of companies coming without hiring. And we've been talking about that companies have been increasing their profitability, but they haven't been increasing their hiring plans. At what point does that change, or is this just a sort of sea change in the relationship between profits and employment?
Well, when you think about it, companies has hired a lot over the last few years coming out of the pandemic. And right now, I think what's happening in companies is trying to be more efficient. And that doesn't necessarily mean you need to increase headcount to do that. You can also use technology to do that. And some of that is coming through, particularly from the AI front. And that probably is going to continue. So I think the job creation's not looking for it to sort of fall off the cliff. But again, we're coming off from a very high level over the last few years. I think what you're seeing in the labor market is some normalization as well. We think that corporate profitability will remain intact. I mean, companies have talked about many ways to even circumvent and navigate some of the tariff headwinds, and we saw that through the second quarter earnings season, and we expect that to continue in the next couple of quarters as well.
Stick with the market cap S&P 500, or do you want to go elsewhere? The cyclical tilts work in the small caps over the last month or so.
I think, look, you stick with secular growth, add some cyclical exposure. We've been doing that through financials. If we get rate cuts, but the right rate cuts in terms of the Fed is cutting with the economy still being resilient, then I think you can broaden it out to get even more cyclical exposure, and small cap could be an interesting way to do that as well.
Nadia, good to see you. As always on this Payrolls Friday, Nadia Lovell there of UBS on an equity market, looking for maybe a bit of a cyclical tilt for the months ahead.
Yeah, and maybe we'll get some confirmation of that when we get the BLS numbers. But right now the question is, when will we get the BLS numbers? We would be 4 minutes and 30 seconds away from it, but evidently, we are currently experiencing technical problems.
We'll see if we do. Scheduled for 8:30 Eastern Time. The estimate in our survey, 75k. The range is pretty wide. 0 at the low end, 144 at the high end. There's a rate cut on the table for September 17th. Will this data reinforce the move we've seen from the Federal Reserve, the concern, the shift, the bias from the chairman of the Federal Reserve to tee up a rate cut? The jobs number up next. Live from New York City, welcome to the program. Now, we're expected to have a jobs report seconds from now. We'll see if we actually get one. The scores going into it look like this. Equity futures just about positive on the S&P 500, just about unchanged at the moment as we come into Friday at all-time highs. On the Nasdaq 100, higher by 0.5. In the bond market, 2-year, 10-year and 30-year yields look like this. Yields a little bit lower, down 3 on 10s to 412.79. With a jobs number, let's cross over to Mike McKee. Good morning, Mike.
Good morning. We do have the data, and it is not good. 22,000 jobs created during the month of August. That is significantly lower than the 75,000 anticipated. Last month, 73,000 revised up to 79,000. Change in private payrolls, 38,000. Last month, it was 83,000. The 2-month net payroll revision is another negative 21,000. We'll have to look and see what the breakdown on that is. But the unemployment rate, which is the thing the Fed is watching, moves to 4.3% from 4.2%. Labor force participation rate ticks up to 62.3%. Manufacturing payrolls down 12,000. We did expect that given what we saw with the ISM numbers. So at this point, there's nothing surprising except the weakness in these numbers. Average hourly earnings up 0.3 as forecast, but only up 3.7% on a year-over-year basis. So The non-farm payrolls, okay, that's, I'm just looking to see some revisions popped up late here, but there's nothing more beyond what I told you. 22,000 jobs created, another 21,000 taken away from the prior 2 months of June and July. I'll get you more details. And it doesn't look like the markets are happy about this.
Yeah, Mike, appreciate it. Thanks for the update. We'll cross back to Michael McKee in just a moment. So it's a downside surprise, 22K, the estimate's 75. The range was pretty wide, 0 to 144 from the low to the high end. The 3-month average now, just 29,000 jobs. Month over month over month. Not good, and you see it reflected in the bond market. The front end of the curve yields lower by another 6 basis points. 2's dropped to 350. That's a new low for 2025. 10's down 4 to 411. 30's down 2 to 483. With a picture like that in the bond market, push it through foreign exchange. Dollar weaker, euro stronger. Euro dollar 117.35. That currency pair with a 0.7% move so far this morning. And in equity futures, initially a little bit lower off the back of this, and then Bramo pops higher, positive by 0.2%.
Yeah, and I'm looking at the Russell 2000 futures, and those also are up 0.25% in the wake of this. Honestly, this seems to be bad enough to make the Fed cut rates and maybe look at further rate cutting later this year, while not so bad that it would undermine the sort of cyclical tilt that we're seeing to the market. So putting that together, not a very positive number, a really stagnant labor market, but not something that's raising alarm bells that we're heading into a recession that the Fed can't stave off.
And Mike McKee, I want to come back to you, sir. Headline number, of course, downside surprise, 22,000, the estimate's 75. There's a great debate on Wall Street, as you know, about whether this downshift in payrolls growth is a reflection of what's happening with demand, supply, whether this is a cyclical turn or a structural shift. Mike, which one is it, and what does this data tell you this morning?
We don't have a good idea, John, and most analysts at the Federal Reserve are saying it's a little bit of both. It's going to take a while to figure out exactly what's causing this, but certainly there's a lack of demand. That would be paramount. There's also maybe a lack of supply, but we saw in the JOLTS data now that we have more people who are unemployed than there are jobs openings. So it's now becoming a question of why aren't companies hiring? And for that, the logical explanation is the fiscal policies of the administration. I'm looking at the revisions, and June was revised down by 27,000 additional to a negative 13,000. So June is now a negative employment print. July revised up by 6,000 from 73,000 to 79,000. But this does suggest there's a lot more weakness in the employment area, in the employment side of the Fed's mandate than anticipated. And I would think that that negative June print would certainly put the Fed on the path to, at this point, be cutting by 25 basis points. I don't know if it's bad enough for 50.
You wonder if someone on their hand puts up their hand on the FOMC and asks for that 50. Mike McKee with the latest. Mike, I'll come back to you later. 22K then, if you're just joining us, the payrolls report did drop on time 4 minutes ago. 22,000, downside surprise. 75 was the estimate. You're looking at a 3-month average now for payrolls of just 29,000. Captured in the bond market with lower yields, in the FX market with a weaker dollar, in equities. Equities still positive on the session by 0.25% on the S&P 500. The Nasdaq still up nicely by 0.7. The Russell, after a 7% surge in August, up again this morning.
This idea that this could lead to a reignition of the cycle, and it goes back to the question that you asked yesterday. Is this a Fed that will be cutting into something of a reacceleration, or that will cut and spur that reacceleration? And right now, the market, based on the market activity, seems to think that rate cut could be very helpful in allowing the reignition of the cycle.
We've got a fantastic lineup through the next 25 minutes or so. We can kick it off with Stephanie Roth of Wolfe Research. Stephanie, good morning.
Good morning.
You've had 5 minutes to go over this. What's your first take?
First take is another weak summer employment report. Immigration seems to be having another impact on the data. When you look at the household survey, the foreign-born population was, again, sort of the weaker part of it. Looking ahead, we expect that you'll have one more piece of negative news. So September 9th, once we get the annual preliminary benchmark revisions, that's going to be revised down to the tune of something like 600,000. So that's going to be another really bad negative headline. Then beyond that, we think that the signs will look a little bit better. So we have another couple weeks of this. It should be a dovish September FOMC, and then beyond that, we think that the tides could turn a little bit, and then you'll start to see the economy start to pick up cyclically. You'll have a bit of a trough, and then the dynamics could look a bit different.
The first thing you went to, though, was population growth. Do you think there's still a big supply side story that's underappreciated in these numbers?
Yes, I do. I think that's a large part of what's going on. Of course, it's hard to sort of decipher month to month, but if you look at the household survey, foreign-born employment was down 342,000, while native-born was up 451,000. The labor force participation rate for foreign-born ticked down again. So it does look like you're seeing some, continued weakness out of the immigration. That helps explain why payroll growth was negative in June. We had 500,000 people from the CHND program whose visas got expired overnight from May to June.
If that's the case, why aren't we seeing faster wage growth? Why are we seeing the underemployment rate going up? Why are we seeing the average number of hours worked in a week kind of stay stagnant or even go down, right? These are the signs of weakness that people look at on the corners and say, wait a second, there is something here that speaks to the demand side as much as there is this also supply side story.
Yeah, wages were fine. Up 0.3%, which is an okay number, not a number that you would expect if the labor market was really falling apart. So what we're seeing is a combination of supply and demand. It's certainly not just a supply side story. Demand has also softened. But when you look for the months ahead, that demand should start to pick up as the tariff uncertainty starts to fade. So we had a lot of things, largely policy driven, that hit the economy over the summer. That should go the other way later this year. But right now, it's a combination of a supply-side shock and also some significant hits to the demand side as well.
Mike McKee standing by. Mike, you've got some more.
Yeah, John, to the issue you're just talking about now, I'm not sure it holds a lot of water because the civilian labor force grew by 436,000 during the month, which is the biggest since April. And April was when the month that we saw the market, the labor data start to weaken. The participation rate actually ticked up. And at this point, it doesn't look like immigration played a big role. I have to mention here that the BLS cautions on its website and in its literature not to use the foreign-born, native-born population statistics to just tell you what happened this month, because there are statistical reasons that they don't. It's complicated. I won't go into it on the air, but I'm not sure that gives us a whole lot of information. It's been a talking point used by administrations from both parties, but I'm not sure that makes a lot of difference. The biggest thing that we saw in the numbers here quickly is that leisure and hospitality and also education and health are the only two categories that really show any growth at all. Education and health, about 46,000, leisure, hospitality, 28,000. There are an awful lot of categories that lost jobs during the month. I will point out that construction jobs were down by 7,000. ADP had them up by 16,000. And in that strange comment the president made last night about the payroll report, which suggested he already knew what the numbers were, he said it's all construction now. But it doesn't seem to be construction either.
Mike McKee with the latest. Mike, thank you. Stephanie, you were following that explanation. Please, I want to give you some time to respond.
Yeah, so I think it's fair. The data are certainly volatile month to month. But if you look at the foreign-born statistics out of the household survey, it's been fairly weak for the past couple of months. So to the extent that, of course, it's not a perfect picture, but we do know that there's significant crackdown from an immigration perspective that is likely having some impact, although it's very difficult to get a clean read out of the data. You saw the foreign-born employment fall 342,000 in August, 416 in July. It's hard to say that there's no impact from an immigration perspective. Of course, it's difficult to get the exact precise numbers out of the household survey because it is notoriously volatile, as Mike just mentioned.
Yeah.
But it's hard to say that there's no impact from immigration.
Getting a range of responses already this morning. This from Neil Dutta of Renmac. The Hawks have lost on their own terms. Employment growth is still cooling, and the unemployment rate is rising.
You have right now a 100% chance of a rate cut baked in for later this month. So it seems like they are agreeing with his assessment and that on their own terms, this would warrant a rate cut. Key question to me is, what is the depth of the weakness? And I keep going to, yes, the bond market response, but that's actually less interesting to me than the stock market response.
Sure.
The fact that there is this belief that this is not great, but it's not so bad that it curtails the cyclical tilt that we've seen. And that, to me, is really the big question.
Let's turn to Jeff Rosenberg on that. He joins us from BlackRock. Jeff, welcome to the program, sir. What do we always say? Yep. The first move isn't always the right move, and let's see if this sticks. But the first move is stocks higher. What's your take?
Yeah, the first move is stocks higher, and this is bad news is good news for the stock market because the Fed's going to ride to the rescue and cut rates, and the economy's not going to fall off a cliff. Financial conditions will help that. It's a little bit circular, but if the Fed is going to underwrite the risk rally, then financial conditions will hold up confidence, even if you're having a little bit of a slowdown here on the demand side. So, look, that's the initial read. You know, Russell 2000, NASDAQ outperformance is really quite notable. People piling into what has already been working because the Fed is going to be behind that. And I think that, you know, on top of what Stephanie and you all were just talking about, yeah, it's a weaker report, but it's a weaker report that solidifies 25, but it's really about, and I think this is where Lisa was about to go, you know, what's the path from here? Does this put October on the table? Does this put 50 on the table? But what it really puts on the table is a Fed that gets back in motion for cutting rates. And if the economy's not falling off a cliff, that's a pretty good combination for risk assets. And that's why you're seeing, at least in this initial reaction, bad news is good news.
You said something really important there, Jeff, that this is an indication that the Fed is going to underwrite risk assets at a time when there is enough weakness in labor markets to justify that. What gives you confidence that the weakness that we're seeing is fixable or addressable by a couple of rate cuts this year by the Federal Reserve?
Well, I wouldn't overstate that and say that it is, but the confidence piece of that is really the primacy of financial conditions. And so, you know, while we're worried about a lot of things, one of the things we're not worried about is financial conditions. And they are exceptionally easy. And this is what I've said on the program many times. You know, we focus on the economy, and it's this kind of debate. Does the stock market worry about the economy, or does the economy worry about the stock market? And I think it's more the latter, that it's about financial conditions. And the stock market is less about the economy and much more about AI and technology. And that boost to wealth is supporting consumption, and that's what drives the economy much more than anything else. And so I think that's what kind of eases the concern here around the slowing in the jobs market that we're seeing out of today's data.
If we've seen the hawks throw in their hawkish tilt and become more dovish on the Federal Reserve and start cutting rates, does data like this, Jeff, make you think that maybe you have to price in steeper cuts over the remainder of next year, especially with the changing of the guard, that maybe this market is underappreciating the risk of more significant easing?
Yeah, it's a really good question. And I think it's one that will turn our attention increasingly towards, which is, okay, to what end? Waller, you know, gave a little hint in that in his interview earlier this week, 100 to 150 basis points. That seems to be what most consensus views around Taylor rule implies. You know, so that amount is kind of priced in. I think the uncertainty that you're alluding to is, you know, will that be enough? And, you know, do you end up pricing in, you know, more than that? You know, right now, the kind of standard economic analysis, the Taylor rules, are arguing for a path of cuts, but it's a shallow path, because policy is only moderately restrictive. And yes, the delta and the change here is to the downside, the deceleration on the demand side. But as Powell's highlighted, you know, this is also still a labor market that is, you know, not tremendously out of balance. These are small increases. Yes, there are increases in the unemployment rate, but the supply side and the demand side are both easing at the same time. And you see it in the strength in the wages. The persistent, you know, the one thing that didn't happen here is a big slowdown in the work week, something we'll keep an eye on. And so that'll hold up. How deep does this path have to get?
It's quite a move at the front end of the curve. Jeff, just to keep you up to speed on things, if you haven't got the Bloomberg in front of you, but down 9 basis points at the front end of the curve, now trading at 340, 349, so into the 340s now, which is something we haven't seen all year. 10s are at about 4.09%, so we've broken down through 4.1. 30s are way off, away from 5% at the moment at about 481. We're down 4 basis points on the session. So, Jeff, let's talk about the shape of the curve. There is a fear held by some, not all, but some, that we'd see a repeat of last year, that we'd see some weak jobs data, the Fed would come out of the gates aggressively, and what you'd see is the front end come down, but the long end would actually sell off. yields would rise, and maybe we'd get the same kind of move that we saw last year. Jeff, do you see things lining up for a repeat of 24, or is this different this time?
Well, it's certainly different this time. And, the day's focus is on the labor markets, and it's a premier data point for the growth side of the equation. But next week, other data will come out, and we'll focus again on the other side, which is the inflationary side. And so this is really the tension that you see within the curve, that if the Fed is cutting and they're telling us, and Powell was pretty clear coming out of Jackson Hole, there's a primacy of, within the dual mandate, the growth side, the maximum employment side of that mandate. But it's happening at a time, and this is where the hawks have, kind of been, squawking a little bit, that, hey, the inflation piece hasn't really been solved, and the uncertainty of the pass-through of tariff inflation is still in front of us. Plus, all the other things that go into the back end of the curve, the demand supply, the fiscal, the deficits, it raises the potential here, and you're seeing it in the curve this morning, that you just lag the declines from what the Fed is doing in policy rates to the back end of the curve. And that view is, pretty consensus in terms of the expectations of steepening. And we've had a lot of that put into the curve already. So, that may get a little bit tired, and you've got some technical positioning. Everybody's on the same side of the boat, so that can have an unwind. But the fundamentals behind a steepening curve outlook, cutting interest rates in the face of still sticky inflation on top of all the fiscal concerns, do argue that the pass-through from policy in the short end to the back end won't be as strong as we would historically expect, absent, the big shock of an economy that really decelerates and brings back a specter of not inflation, but deflation. That's how you get the back end to really outperform.
Jeff, appreciate it. Good framing as always. Jeff Rosenberg there of BlackRock. If you're just tuning in, you missed it. It dropped about 20 minutes ago, and it dropped. We're down to 22K. Big downside surprise on payrolls. The estimate was 75. I keep going back to the 3-month average. The 3-month average is pretty dreadful. It's 29,000 now. That's a real step down in payrolls growth. And Bramo, that's why you're seeing this market start to price in more rate cuts. We're down 9 basis points at the front end.
We're seeing the slowest pace of job growth going back to the immediate aftermath of the pandemic and what happened there. Question here is why this is considered a positive for risk assets, given that it is a deceleration in this belief, as we were just hearing from Jeff, that the Fed is willing to underwrite risk assets.
Mike Collins of PGIM, Fixed Income, joins us now for more. Mike, welcome to the program, sir. It's another downside surprise. You were looking for a weaker economy. It looks like we've got one. How does this change the conversation on September 17th for the Federal Reserve?
Yeah, Jonathan, I'm just glad the number came out, right? Right before 8:30, we were looking at the bond market rallying in the front end, and the bond market was turning from vigilante mode to conspiracy theorist mode, right? So let's be thankful we got the number. But this is a continued deceleration, right? And I think what's happening right now is the markets are quickly moving from pricing in 2 cuts for the rest of this year, meaning 1 in 12 days and 1 in December, to possibly a cut at all 3 meetings, right? That's what's the transition that's happening right now in the markets. And I love the conversation around the wealth effect, financial conditions. Is good news bad news, or is good news, or is bad news good news, or is it bad news? And the markets are kind of maybe the stock market's whistling past the graveyard a little bit here, thinking, oh, it's all good. The Fed will backstop this. Financial conditions are easy. The wealth effect is real and powerful and persistent. But the way companies manage through a cycle, Jonathan and Lisa, right? They first reduce wage gains, and we've seen that. Check that box. Then they start cutting the hours. Check that box. Then they reduce new hiring. Check that box. And the last thing they do is start firing people, right? And we're just kind of maybe on the precipice of that last box being checked. And companies do that to preserve margin, right? And I think you're seeing increasing evidence that companies don't have the ability to pass through these higher prices from tariffs, and they're starting to eat it in margin. So they have to use the labor line as the delta to maintain their bottom line earnings, and that's not great for the economy. So I do worry, whenever you have a recession, you always look back because we always miss it, right? Everybody's always surprised when you have a recession, and you always look back and say, wow, how come I didn't pay more heed to these, yellow flags? And I think these are more yellow flags that are popping up. And so I'm just, urging some caution that maybe the stock market, valuations, which are really, heady already, maybe are topping out here.
Mike, the idea of whistling past a graveyard, it isn't just applicable to stocks, it's also applicable to your world and credit. And what we've seen, particularly in high yield bonds and how spreads have really compressed, and we have seen this rush into riskier assets. This idea that Jeff Rosenberg was talking about, is this a Fed willing to underwrite risk assets? Or do you say this is a warning shot to lighten up on high yield, lighten up on credit risk, and go into duration?
Yeah, I mean, we've been doing that trade, right? Arguably, we've been early because, over the last 2 years, you should have owned as much risk assets, as much high yield as you could have. Defaults continue to be generally really low, but you are seeing continued concerns and pressure and credit deterioration among the weakest tranches of the high yield and the leveraged loan and the private credit markets, where these high rates, these high borrowing costs, especially for companies that have floating interest rates, are really starting to hurt them, have a big negative impact. So I think there's kind of this sneaking, credit deterioration happening out there that's not hitting the headlines yet. So yeah, I think it's still a world where you're supposed to be a little long duration, have a curve steepener on, two positions, fortunately, we've been in, and stay very defensive on the credit side. I mean, talking about high yield spreads, Lisa, you see the headlines of, high yield spreads are just inside 300, but even there, it is somewhat bifurcated. Everything has done well, but we're selling, double B rated high yield bonds with double-digit spreads, Lisa, like inside 100, right? And so that is clearly a recipe for moving up in quality, where you can buy high-quality, investment-grade bonds and structured product, and even mortgage-backed securities in some cases at similar, spreads, or not giving up a lot of spread. So those are easy trades that you still have to be disciplined and do.
Mike, it sounds like you trust this data. It sounds like you're not worried about politicization of the Federal Reserve. Just quickly, is that true, that that's all noise to you, and you look at the data and this just indicates negativity?
Well, you look at the big picture trend, and that's what you have to do when you look at these data, Lisa. And, we went from 400,000 job growth a few years ago to 200 to 100 to 50. Our rate of job growth has been cut in half now for 4 straight years, and that's been the trend we've been expecting and looking to. Now you have this big change in immigration deportation policy, which kind of is a step function lower in terms of the labor supply. So now maybe 0 to 100 is not even the right level of natural rate of growth of the labor force. Maybe it's 0, right? It's the low end of that range, and we're kind of punching toward that. So this is a big supply problem. But I'm worried that the markets are kind of discounting the demand side too, that the demand side of labor is weakening. And yet, granted, if the Fed cuts 3 times this year, 3 times next year, gets the funds rate into the high 2s, which is increasingly what's being priced in right now, the economy can certainly survive through that. Companies will survive through that. We won't have a recession, and that's a really good outcome for all of us.
Mike, appreciate it. Have a good weekend. It's good to see you, as always. Mike Collins there of PGIM Fixed Income. Stephanie Roth of Wolfe Research still with us. Stephanie, you've talked about that reacceleration in the economy. Is the Fed about to pour some gasoline all over that fire on September 17th?
Yeah, I think they might. But that's okay because the economy has slowed down. So the extent to which we have a little bit of easing in financial conditions isn't the worst thing. We have this shock from both the supply and demand perspective, but the demand side is important. And the extent to which it could help sectors of the economy like housing, which has been hurt by higher interest rates, it's okay for them to cut a couple more times. Then we're going to see that reacceleration, and it might be harder for the Fed to cut beyond that.
I hope you're right. This is what we got from Steve Cheverone of Federated just moments ago, Bramo. This isn't about a September cut. It's now about the Fed's path towards neutral.
Right now, we're looking at 3 rate cuts being priced into the market by the end of the year, including more than a full 25 basis point cut at the September 17th meeting. This is about neutral. This is about where we are in the economic cycle. And this will be about what the Fed will do even before we get a change in leadership. So maybe President Trump will get what he wants, even without any kind of changing of the guard.
Mike Collins just happy we got a number. That's how low the bar is right now.
Well, I don't blame him. Honestly, we were getting warning signs, big red flashing letters. We have a data problem. And then,
We've got some data. It's good news. Stephanie, it's good to see you. Thanks for being here. Thank you very much. If you're just joining us, you missed it. 22K on payrolls. Big downside surprise. 75,000 the estimate. 3-month average now 29,000. In the bond market, this is what it means to fixed income. Yields down at the front end by 10 basis points. Twos at 348. In the equity market, equities like it. Equities up by 1/3 of 1% on the S&P. All-time highs heading into the weekend.